opportunity to network, meet local but also global people.
Come to Consensus!
I'm loving it here.
It's a great opportunity to network, meet local but also global people.
Come to Consensus!
I'm loving it here. It's a great opportunity to network, meet local but also global people.
Come to Consensus!
I'm loving it here.
Hello and welcome back to CoinDesk Live from a sold-out Consensus Hong Kong. Over 8,000 attendees and 3,000 companies with a combined $4 trillion in assets under management. This is the #1 destination for deal flows. I'm Christine Lee here with my co-host, CoinDesk Head of Media and Innovation. We've got Sam Nguyen next to me on the chair. Hello, Sam. Day
Christine,
2.
yes, day 2. Very excited for today. Still getting over, the lack of sleep after last night's activities. We'll talk about that in a minute. But yeah, really excited. Looks like the show floor is already starting to buzz. Some great sessions coming up. Yeah.
What are some of the highlights of the day?
For today?
Yeah.
Well, my highlight is I'll be on main stage in about an hour and a half with Ray Chan. Ray started 9gag and Meme Land. There is no one better to talk about memes than Ray, and what a time to be talking about memes with everything going on.
It's all the rage that everyone is talking about in the news cycle. And I had a chance to talk about memes with Lily Liu, the president of the Solana Foundation, yesterday, and she was none too happy about what's going on, the speculation, the extractive value, what's going on. We're hoping to, well, she's hoping that we focus on the builders. But what are some of the, actually, we've got the best person to talk about the highlights that we can expect from today. We've got the chair of Consensus, Michael Lau, and he sits with me right now. Michael, give us the lowdown on the highlights on what to expect today on day 2 of Consensus.
Yeah, well, thanks so much for having me. I mean, today we've wanted to make sure that we covered as much of the industry as possible. And so yesterday we had a lot of kind of the finance angle, a lot of that more traditional finance meets digital. And so today we really wanted to bring forth themes around things like, the culture side, around meme coins, around AI, and also how DeFi is also kind of evolving in this space. So we've got a lot of themes happening right now. I'd say we've got a couple of big speakers who are, in that kind of space, and I'm hoping that there will be opposing views.
Who are the top? Who are
so for
the
example, we have Nam speaking just in a couple of minutes, and he'll be taking the main stage together with
Bonk.
From Bonk. That's right, from Bonk. Together with a trader, Jordi Alexander from Selene, who's also very, very clued into the market. And I think there's an element of wanting to stimulate conversation and discussion, maybe even debate around what's the purpose and what's the role of this, right? And I think Sam's session with Ray is going to be quite interesting as well. Ray's been a leader in the meme space and how that translates into the Web3 side of, memes. It's kind of an interesting moment right now, right? So, yeah.
Both those speakers, Nam as well as Selene Capital, will be on the desk with us later on in the show. So
awesome.
Be sure to not miss that. This is a return of Consensus to the Asia region. What is some of the story behind why we decided to come to Hong Kong and the importance of joining the East meets West narrative?
Yeah. So Hong Kong is a pretty significant location as a global financial hub already. And one of the things that we noticed was that a big portion of the narrative when it comes to Web3 and crypto is finance related. And so the combination of the two made Hong Kong quite an interesting place to talk about, particularly like where investors and where financial flows are meeting with regards to crypto. But in addition to that, we didn't want to make this just simply a fintech conference. We wanted to make this a broader Web3 conference. And that's where it's important that we also chose a city that you can host a great conference in. And so Hong Kong's got a fantastic airport. It's got, really, really easy transportation on the ground, great F&B, outlets, and also a great venue like the one that we have at the convention center. The idea was quite simple. Throw a great conference, get all the right people together where they want to be here together and have that kind of like meaningful discussion around these core themes. So that was kind of a big part of what we chose Hong Kong.
And Michael, I think a lot of people think of this being the financial hub of the region. But I was doing research yesterday. I think it's the #2 art market in terms of buyers. We met a lot of developers yesterday walking the show floor who said there's no place they'd rather build in here just because of the support they get and the access. So is that part of the general narrative of Hong Kong also being the center of this sort of reimagination of technology in Asia?
Yeah, no, absolutely. And I'm glad you brought that up, Sam, because there's a part of Hong Kong that I think people oftentimes overlook as well. March is typically known as Art Month here in Hong Kong, and Art Basel actually takes a very prominent role of that. And I think that was part of the reason why we wanted to have a whole stage on Web3 art and culture, right? To be able to really bring together people who are passionate about that part of the industry to come here and also be a part of the conversation and also to build. I think Hong Kong has also really had like a really great history of attracting talent, and I think it's also because the work ethic and hustle in Hong Kong has always been there. It's like a generational thing, and I think people appreciate that, and as entrepreneurs, this is a great place where you get to talk to other people who equally hustle like you do to really try to build great things and great products. So I think there is a cultural kind of resonance there in terms of people that want to build, and entrepreneurs as well as people who love art coming together to talk about Web3.
Definitely, the people here have been so friendly. The food is amazing, and the infrastructure has been great to get around the city. I wonder, there have been over 350 side events that have also come up around the Consensus Conference. What can you tell us a bit about that, and how this community has gotten together to create an even more influential event?
Well, I mean, it's important to note this is not the first crypto conference that's happened here in Hong Kong, right? There's been conferences happening for the last years, but I would take that as a signal and maybe even a validation of product market fit. Like, the industry has been wanting a conference like this in Hong Kong for several years now. And I think the fact that when we brought it over, people started getting excited. That's 330 or more events that are thrown off by other people, right? Their own resources, their own agendas, their own and so to me, that's just a signal to us that they really wanted this conference. And I think it's really exciting that people have just really flown in and gathered here. We were talking yesterday about how we've got over 8,000 people sold out here at the conference, but 75% of the people here actually are from outside of Hong Kong, right? And so it's just this idea of, hey, we don't want to just stop at the experience within the four walls. We want to take advantage of gathering. The people that are here that are not in the hall itself is even thousands more, right? So it's just like, this has been a really great kind of just validation to us that the market actually really wanted us to be here.
So what kind of events are you looking forward to? I know, Sam, you went to the Happy Valley race course last night.
I did.
Lost some
I lost
moolah.
120 Hong Kong dollars. My horses did not come in. Michael, did you win last night?
I won a little bit, thankfully.
What were some of the takeaways from day one in your view?
So I'd say that with day one, like, we had actually some really, really great, I guess, kind of public announcements, if you will. So for example, we started off the day with the financial secretary. Having him to be involved with this conference, to us, was a really, really great, addition to the programming. But we also had, for example, the SFC here yesterday. We had Julia Long as well as Eric Yip. They actually took advantage of the conference to announce a new roadmap for how they're actually going to be regulating the space. And so that was just amazing to see that, they saw this as a platform to amplify that message. We've also had a number of key market movers, just talk about what's happening. I was on stage yesterday with Richard Tang, and we were able to kind of explore what's going on. How do you see the market? And to have, for example, 260 million users on their platform, it's quite interesting to hear what he has to say, right? You had also Tom talking together with Mike Belshi, who's an OG in this space from 2011 when BitGo founded, talking about his views of what's happening in terms of the West, while you've also heard, for example, what Paul Chen, our financial secretary, as well as Julia, talking from a more East perspective. So day one was a really great conversation, I'd say, kind of bring two kind of perspectives around the world on what's happening in the space.
Michael, I'm interested in, Consensus has always been a place where deals go down. And we have on the show floor the deal flow zone, which is almost speed dating for people who are looking to invest and looking to build. And it was packed yesterday. Is there any insights of how much, sort of commitment to commerce is happening? How many people are really here to try to make their technological dreams come alive? And how do we help support that?
Yeah. So, I mean, I'm really hoping that we get some stats very soon to kind of support this. But anecdotally, I have only heard people say amazing things about the quality of people that have, come over here, right? And I think that's part of the reason why we thought, hey, Consensus was the conference that people wanted, because they want to do business here. They want to be able to meet with their counterparties. I have to say, the other day I was having a very exclusive dinner with a number of the main Layer 1 founders, as well as other kind of, major infrastructure players in the space. And one of them, who's a fairly well-known guy, was like, I couldn't believe who's in the room. I didn't realize that all of these people were here in town as well. So, there's certainly a level of seniority that has showed up, and that's also where deals get made. And so we're just really grateful that people have taken the opportunity, invested their time, traveled for many halfway around the world, so that they can meet with hopefully new business opportunities as well as strike deals. And I think that's actually what's happening a lot throughout this whole week.
As you were sitting in the room where it happened, what was the theme? What are they interested in seeing, come about this year? What will be the catalyst to make this bull run continue?
Yeah, I think regulation is still a big topic. That's one of the things I have to say is that if you look at the history of this industry, I'd say there's kind of chapters to the adoption. The first chapter was very bottoms-up, grassroots level type of adoption, really led from a peer-to-peer, founder hand-to-hand combat style of thing. But the most recent chapter is one where you have these top-down forces like public government support or regulatory clarity helping to drive it. And I think, for example, with the US taking a much more friendlier stance with crypto, it's one of those things where, hey, there's governments now that are pushing this top-down kind of tailwind to really accelerate forward. So people are watching closely. What does that look like? How does it actually come about? I think there's also a lot of conversation about AI. What is that convergence going to look like? How is it going to take place? Is it just AI agents? Are there other things as well? How does it, for example, start merging with the whole DePIN, kind of thematic as well, right? So there's a lot of that conversation going too.
There's a lot of DePIN happening today and decentralized AI conversations happening today. And I do think that seems to be one of the themes we've been noticing on the sort of conversation in social is the amount of people who are finally getting how big the opportunity is with decentralized AI. And I think there's a pushback to some of these sort of larger, almost built like Web 2 companies that are in the AI space that are trying to own too much of our data. And I guess, do you think that this marks an opportunity for crypto to play a role that's really beyond the financial side of blockchain?
I do. I really do. I mean, look, I think that this whole idea of having a blockchain and having the ability to bring in tokenomics to be able to gather more, I guess, kind of this, what was in Web 2, the offline-online type of component, that's now translating into the whole Web 3 space. And I think that's unlocking a lot of people's imagination as well as people's willingness to spend time to build. So I'm quite keen, actually, to kind of listen in on what's happening on these decentralized AI panels. I think one of the other things that I've noticed is that I was talking with Yatsu the other day, and he was telling me that, when you think about AI, sometimes you just think about, in the perspective of a lot of the mainstream narrative, you forget that in gaming, actually, people are dealing with AI for hours on weeks. And actually, there's a lot happening and developing in that space. And I think that's been a blind spot for myself, and that actually that's been also another angle of adoption for AI that's happening. So to me, it's still a fairly new subject for myself, which is why I was like, hey, let's just bring the top people working on this space over here so I can learn and listen to them. And hopefully everyone also feels the same way too.
We're seeing America emerge as a country that, under US President Donald Trump, that wants to be the crypto capital of the world. Asia has been bustling, hustling as a leader, many people say, of the Asia Pacific region. So when you're talking to people, companies building, how are they looking at that situation? Are they wanting to come back to the US, to Asia? Are they wanting to merge, just expand further?
Yeah, well, I say that, for example, people still choose where they want to live. And I think as much as our digital profiles are, in certain, borderless, people still want to figure out where they're going to spend their time in real life. And I think that what happens is you still have ecosystems that grow somewhat independently of each other and at different paces. And I think it's exciting what's happening in the US for our industry. I think there is a lot of, people moving in that direction right now. But I think it's important to not lose sight of the fact that that doesn't mean that things are decelerating here in Asia. And I think what's happening is that as the attention swings in that direction for the first half of this year, when the second half it starts expanding a little bit further back in this direction, people will be surprised at how much has continued to move forward, maybe even accelerated over here. So I do think that Asia actually will continue to grow, it will continue to expand. And I think, for example, here in Hong Kong, the fact that, again, yesterday, the regulators decided to make this the moment when they said, hey, we're going to continue progressing forward, we're going to open up a lot more of the way that we're thinking about regulating the space, I think shows that it's important not to lose sight of what's happening here.
Yeah, so if you want to get into the Asia market, you want to talk to the leaders in the industry, you got to come to Consensus.
That's right. Yeah.
All right, we'll end it there. Thank you so much, Michael.
Thank you so much.
All right. That was Consensus Hong Kong Chair Michael Lau. If you couldn't get tickets to this event, join us at the next Consensus from May 14th to the 16th in Toronto, Canada, my hometown. Register now at consensus.coindesk.com. All right, let's take a quick look at the headlines. An XRP ETF will make its world debut, and a new theory on Satoshi Nakamoto's identity gains traction. It's Thursday, February 20th, 2025. This is a Consensus CoinDesk Daily Special from Hong Kong. The world's first spot XRP exchange-traded fund is set to soon debut in Brazil after being approved by the country's securities regulator. The website for the Comissão de Valores Imobiliários shows that the fund, the Hashdex Nasdaq XRP Fundo de Indique, is currently in a pre-operational phase after being set up on December 10th, 2024. The fund's administrator is local investment brokerage firm Genial Investimentos, and the fund manager is Hashed. An official release date will be released soon. Countries targeted by U.S. government sanctions have surged in illicit crypto activity, receiving nearly $16 billion in digital assets last year, about 39% of illicit token transactions. According to a Chainalysis report released Wednesday, as Western restrictions tighten, sanctioned nations are turning to cryptocurrencies and alternative financial systems to sustain trade and access capital. Crypto mixing platform Tornado Cash was also still able to handle hundreds of millions of dollars in crypto transactions a month in 2024, despite being targeted by U.S. authorities. Is Satoshi Nakamoto hiding in plain sight? A new theory is gaining traction this week that Twitter founder and Block CEO Jack Dorsey is the pseudonymous creator of Bitcoin. DeepBank CEO Sean Murray makes the case that Dorsey's early involvement in the cypherpunk movement, cryptography interest, and computer science background align with Bitcoin's technical origins. He notably wore an Adam Back t-shirt in 1996, a key person cited in the Bitcoin white paper. The first Bitcoin transaction occurred on his mother's birthday, and Satoshi's last mined block coincided with his father's birthday. Geographical and timing overlaps, like Satoshi's accidental IRC login, revealed a California IP address where Dorsey is based, and his forum disappearance in 2010 synced with Dorsey's busy period launching Square, lending credence to the theory. That's it for CoinDesk Daily. Get more updates on CoinDesk.com. All right, for now, let's take a look at the chart of the day. Bitcoin has been trading in a narrow range around $96,000, but several metrics signal risk of a deeper pullback to $86,000. This crypto quant chart shows inflows to spot Bitcoin ETFs have disappeared, replaced by regular net outflows over the past 2 weeks. BTC demand, network activity, and liquidity conditions remain sluggish, further suggesting downside pressure on prices. The sentiment reset is nearly complete as BTC entered the final stretch of its weekly cycle, according to well-followed trader Bob Lucas. That's it for today's chart of the day. I'm Christine Lee. Head on over to CoinDesk.com to unpack more of the data behind top news stories. All right, for now, let's listen to some of the conversations happening here at Consensus Hong Kong. We'll skip over to one of our stages.
That's never happened before. That comes, however, with a massive amount of risk. Yeah. Because thankfully, for hopefully most people in this room, a single trade cannot wipe us out of all of our life savings. But for a lot of the world's population, a single trade will. Okay? So now we have to hold these bots that have opened up these opportunities accountable. That's both the opportunity and the risk, and what I'm most excited about it, because if we can fix the accountability and the trust issues of that, then AI agents can truly scale and open up these economic opportunities to billions of people around the globe.
Yeah, there's always two sides, right? And in the same way that AI helps to secure and prevent fraud, AI can also be used to create deep fakes, for instance, and just conjure things out of nowhere and be used for evil purposes. So that's always the duality of it. Evan, if I could go to you next.
Certainly, to pick up the note that you had described there, I think at present, AI is used more often for fraud, to execute fraud, than it is to prevent it.
Yep.
But I think the most compelling opportunity that we are looking at right now is perhaps the greatest savings of time, effort, and complexity that the human species will ever experience. To our earlier discussion, the importance of accountability in enabling that means that we will be able to discern not only bot traffic, prevent deepfake scams and things that we've mentioned before, but this also unlocks a new level of coordination for those of us here on chain.
Yep.
Right now, the only two activities that you can do with another address on chain, if you do not have this context, is you can spend money, you can spend a treasury, and you can do over-collateralized lending. And that's it. Any other coordination game that involves, as I call it, machine money or cryptocurrency and agentic workflows requires more data about your counterparty and a system of accountability. So if we want to eliminate the absence of accountability that is currently causing these tens of billions of dollars of losses each year, then we need to tackle fragmentation. To your question, I think one of the more frustrating challenges that we are all tackling here today is the evolving complexity of sort of new niche inventions that actually add to fragmentation, as opposed to building on existing open standards, using resources, tools, and networks that we already have today. And so I think it's fortunate that discussions like this help to bring out these challenges that we can address together.
Thank you, Evan. And Terence, if I could bring you in, I mean, is it palm scanning that Humanity Protocol uses, and other sort of protocols use different things? Iris scanning, for example, for the WorldCoin. Talk a little bit about what you find exciting and what you're doing. What's difficult?
Yeah, so the way we think about Humanity Protocol, we get compared a little bit to WorldCoin because we also use biometrics. The sort of biometrics that WorldCoin uses is obviously the iris. Everybody's iris is unique.
Yep.
What we actually do is we actually also use biometrics, but instead of focusing on the iris, we started with the palm. So your palm print, your palm veins are also unique to every single person. It's a pretty mature technology in the sense that Amazon's using that for payments in the U.S., Tencent's using that for payments in China. Japan has been using this for banks and ATMs for decades. I think that's sort of the very first thing that we're starting with. Recently, we announced a partnership with a DNA testing company also, in terms of having them be a credential issuer on Humanity Protocol for sort of DNA credentials. I think, as I mentioned before, anything that is sort of purely online and digital for proof of humanity, I think is going to be really challenging.
Yeah.
Historically, you have sort of one statistic that's actually interesting when I was giving a speech in Davos is that bots are actually better at solving these CAPTCHAs than humans. They're able to solve them at like.
Welcome back. Let's have a live look at Bitcoin right now. The CoinDesk.com Bitcoin price at about $96,929. Bitcoin is up just about over 1%. Taking a look at Ethereum on CoinDesk.com, $2,732, also slightly up about 1.5%. Joining us now to discuss the crypto markets, we've got Sumit Gupta. He's a co-founder of India-based crypto exchange CoinDesk, which serves over 10 million users and facilitates quarterly trading volumes exceeding $9 million. Sumit, Great to have you at Consensus Hong Kong. Tell us a bit about your thoughts on where the crypto markets are headed. We seem to be, lagging under the $100,000 psychological level. There's some concerns about this meme coin unraveling, if you will, these rug pulls that have been happening. So where are we, and if we will see a rise above 100 again, what will be those catalysts?
Oh, sure, absolutely. First of all, thank you, Christine. Thanks, Sam, for having me here. Yeah, just one correction. We have almost 20 million users.
Wow, double.
Yeah, almost double of that. But yeah, I'm a big Bitcoin maximalist. I do believe that the setup that we have right now for overall crypto and Bitcoin in particular cannot be better. Especially what has happened and transpired in the last 3 months. I'm particularly very excited about what all can happen in 2025. 2024 was a milestone year for crypto, and 2025 is going to be a transformative one. I do see there is a lot of institutional adoption happening, and in terms of prices, Christine, if you ask me honestly, I don't want to give financial advice, but basis my reading and basis my discussion with a lot of people, practically, I do see it somewhere around $150,000 to $200,000 by end of this year, driven by a lot of institutional adoption. A lot of companies are looking at Bitcoin as part of their treasury. I talk to a lot of founders and a lot of big family offices in India. We are seeing large interest in Indian family offices as well to diversify and to also have Bitcoin, little bit of Bitcoin, little bit of Ethereum, Solana as part of their corporate treasury. So I do see a lot of that will start from Bitcoin and then will sort of go to altcoins. Not a huge fan of meme coins. I do believe that most of the tokens that we have today may not even be there like 5-10 years down the line. But the blue chip crypto assets like Bitcoin, Ethereum, Solana, all of them have tremendous potential.
That's interesting because the central bank in India, in the past, they banned crypto transactions for banks. That was overturned by the Supreme Court eventually in recent years. So what is the state of crypto in India right now?
Oh yeah, that was an interesting one. In 2018, RBI, which is the Central Bank of India, came up with a circular that banks cannot work with crypto businesses. And then there was a court battle going on for a couple of years. And in 2020, it got overturned. CoinDesk was part of that, legal discussion with Supreme Court. After that, Indian crypto market has sort of seen an exponential growth. We were at around 200,000 users before that, and now we are sitting at around 18 to 20 million users. India, I do believe, is one of the largest and the most interesting market for crypto globally in terms of grassroots adoption. If you see, India is ranked #1 for last 2 consecutive years in terms of crypto adoption index from Chainalysis reports, if you see that. And that activity is happening not just from large cities, but also from tier 2, tier 3 cities in the country. We have seen crypto sort of getting discussed in smaller towns in the country. So there's huge demand for crypto assets. People understand technology, people have mobile phones, people have internet, and they can just access crypto. That's pretty interesting. Excited to be part and building in that market. Not just in users, but also in terms of developer activity. India is one of the most interesting market in terms of number of developers. #2 globally when it comes to Web3 talent pool. #1 when it comes to new developers coming into crypto. 19% of global crypto code commits are all happening from India. So if you see India from the outside, you'll see a lot of talent pool that's actually building for the industry. So I'm very proud of that.
Sumit, I was looking at a stat this morning that said about 110 million users in crypto in India predicted by the end of the year, which I thought was a fascinating number and quite large. You said you have almost 20 million on the platform. I'm thinking, what are they using crypto for right now? What are they doing on the blockchain that is exciting them so much beyond the developers? Are people investing? Are they using it for transactions? What's happening there?
Sam, you mentioned 110 million. So just one correction there. There has been media reports which says 100 million plus. That's not the correct number. The technically correct number is anywhere between 35 to 40 million users in India who have ever interacted or transacted in crypto or invested in crypto. There was one survey, they just extrapolated certain sample set, which is not the right way to look at it. So the real number, just for correction, is 35 to 40 million, somewhere in that range. And we have almost 20 million of that. In terms of where the traction is coming for crypto, see, a lot of that is, India is, by the way, a country which loves gold. And I'm sure you would know that. My parents, my mom, dad, grandparents, they have been like super big fan of gold. And it has been like culturally ingrained to hold gold. And Bitcoin is the digital gold. So young people, the millennials, the Gen Zs, like all of them, like they sort of love Bitcoin and they want to hold Bitcoin. And we've seen like lot of educated people who understand technology, they just want to hold Bitcoin as part of their portfolio, just like how they hold stocks. So we have seen a lot of activity coming from there. The another sector of activity that's coming in crypto is also from meme coins, which is Doge, Shiba Inu, Ripple, long back when it was like very, very small and people want to hold bunch of these coins and tokens. With Trump token, I think a lot of users came from that. So I think it's mix of long-term holders plus people who want to just want to invest in altcoins, want to multiply their returns, which is kind of unfortunate, but it's the reality. Plus, there's large adoption of stable coins, like USDT is very, very popular in India. If you see the last mile, like a lot of merchants sort of, if they want to do a cross-border trade, they just use USDT to do their activities. Developers get paid in Ethereum or USDT. So, we have seen it happening from all sorts of verticals.
Okay, you mentioned the $30 to $40 million figure. I'm just wondering where you're getting those figures from. And in terms of the meme coin phenomenon, what's the decision making? What are your thoughts on the meme coin phenomenon? And what's your decision making in listing those coins?
No, absolutely. That's a good one. And it's a tough one as well for us. We discuss a lot about this internally, right? So we do have some frameworks, some principles that we use to list it. And one of them is user demand. Of course, we are a business, so if millions of customers want us to list something, then we have to. But I mean, we're very, very particular about which ones to list. We do have a team which essentially filters out all the scam coins, rug pull, so we have not listed.
Aren't they all scam coins?
Sorry?
Aren't they all scam coins?
No, like if there is any, then we don't want our customers to sort of invest in them and lose. So I mean, it's more of a principle-based approach, and pretty much all Indian players sort of follow some standard set of guidelines that they follow to list those coins. But I mean, it's a tough one, and the thought process is still evolving.
And you said 30 to 40 million. Just wondering.
30 to 40 million users, I said.
Okay.
Yeah.
Based on what figure? Like, where are you getting that number from?
30 to 40 million. Yeah. That's multiple. Like, we have done multiple analysis, and there is an industry.
That's the CoinDesk analysis.
I mean, like all the industry players have come together. We collate data, and then we have done our broad calculations on that. I know for sure that the 100 million is not the correct number.
All right. Well, Sumit, thank you so much for joining us this morning.
Thank you for having me here again.
That was CoinDesk co-founder Sumit Gupta. All right, up next, we'll dive into the state of the Ethereum community with staking protocol EtherFi after this short break. Over the past couple of years, some 80 Bitcoin Layer 2 projects have sprung up focused on scaling and enabling smart contracts on top of the Bitcoin blockchain. But before all of them was Stacks, an OG Bitcoin layer enabling developers to build decentralized applications secured by the Bitcoin network. Joining the show now is Stacks co-founder Muneeb Ali. Muneeb, thanks for joining us.
Absolutely. Thanks for having me.
So you're going to be at Consensus today speaking on a panel called Bitcoin's New Layer. For folks that don't know what that means, tell us what is Bitcoin's new layer and how your involvement is within that.
Yeah, so I feel like people might be more familiar with layer 2s in Ethereum. There are a lot of layer 2s in Ethereum like Arbitrum, Optimism, and a lot of scalability in Ethereum is also happening in layer 2s. Interestingly, I think less people realize that Bitcoin actually has layer 2s, and Bitcoin actually needs layer 2s more than Ethereum because it's not just for scalability. Like if you can't have enough transactions on the L1, you can do them on the L2, but it's also for programming Bitcoin. Like Ethereum is at least programmable at the base layer, at L1. But Bitcoin is very limited in terms of what you can program with Bitcoin, how you can automatically deploy it into smart contracts. You can't really do that on the L1. But on L2s like Stacks and some of the newer upcoming ones, you can do that. So I think that's sort of like where the layer 2 landscape is for Bitcoin.
And we're seeing this explosion of Bitcoin layer 2s. So tell me, why are we seeing this right now? And how does Stacks fit into that environment? How does it differentiate itself from all the other competition out there?
Yes, I think there have been two factors, sort of. One is technical. So there have been some technical breakthroughs, like BitVM as a technology. I won't go too much into it, but think of that as with things like BitVM and some of other breakthroughs.
The Bitcoin virtual machine.
Yeah, Bitcoin virtual machine. You can have more trustless L2s, which is one of the biggest sort of like criticisms for Bitcoin L2s before. But now that goes away, that, okay, you can have more trustless L2s like you have on Ethereum or other networks. That's one. The second is, I think, cultural. Like there in Bitcoin, I think the developer community was much smaller than some of the other ecosystems out there. And that is something that we at Stacks have done actively a lot of work on. Stacks is actually the 7th fastest developer growing ecosystem according to the Electric Capital report, and the only Bitcoin project there. In terms of like what differentiates it, I think it's usually considered like a blue chip Bitcoin L2 project. So it's been around, it's the leading, largest ecosystem. And we are sort of like at the forefront of innovation, right? Like we're growing our developer ecosystem, but we are doing heavy R&D in some of the upcoming areas as well. So any innovations that you see coming out of some of the other L2s, you'll likely see that getting integrated into the leading project.
I was talking to Christina from Lightspark yesterday. They just announced their layer 2. There is, as Christine mentioned, so much activity happening. I think of the last couple of years of ordinals, but really before all of that was you guys. And is there some sense of validation that you were there early, you were seeing things that people weren't seeing for Bitcoin? Bitcoin maximalists can sometimes be critical of a lot of these. So how does it feel to know that you're kind of on the right path?
Yeah, I think I get that a lot. I go to these events and people come up and like, hey, you must feel really vindicated. I'm like, in some sense, yes. I think we're matured enough now that I think there's going to be some L2 that actually gains a lot of traction and a lot of people are using it and so on. But I don't personally feel like the job is done at all, because if you think about taking Bitcoin to 1 billion users, it's not possible today. Like even on Stacks, right? Stacks needs to scale. Other projects like Lightning and others, they haven't been able to take scalability to that sort of a level. And I think our personal, in the Stacks ecosystem, we have a goal that how do we take Bitcoin to 1 billion people where they can use it in a really easy, cheap, fast way. And I think we're getting there, but we're not fully there yet. There's still a lot more work to be done.
Yeah, I'd say the Bitcoin community is very critical of anyone that takes Bitcoin in a different direction than the original small blockchain, if you will. So, and I guess they had that criticism for Stacks for a while, but you've actually done upgrades to, I guess, connect more to the Bitcoin network with the recent Nakamoto upgrade. Maybe you could tell Tell us a bit about that.
Yeah, so I think Stacks is all about Bitcoin, right? It's about using your Bitcoin capital. It's about deploying BTC capital. So our SBTC asset went live. Right now it's capped at 1,000 BTC. This is just a couple of weeks ago, and we got 1,000 BTC like within 48 hours or so. This is like $100 million. Now we're going to raise the cap, get more Bitcoin deployed, and I think as some of the more conservative Bitcoin people see that, look, there's a lot of Bitcoin capital that's actually being deployed through this L2. I think they start to soften up more that, okay, maybe these guys are doing something that is actually getting a lot of traction with developers and users. So I think that's definitely something that's helping.
So you say traction. What are some of the most popular apps that are gaining traction on Stacks?
I would say it's mostly Bitcoin DeFi, right? So people want to do swaps, people want to do lending, they want to lock up their Bitcoin and take a stablecoin loan. Very, I would say, basic DeFi primitives that have been around in Ethereum and other places. Just on Stacks, you are using it with BTC capital, and that's, as I think the Bitcoin dominance is going up, we are seeing in this cycle that Bitcoin dominance is like through the roofs, right? Like the more and more people are holding Bitcoin, and Bitcoin is sort of like separating itself even more from other assets. Like that's in some ways helping us, because now people are like, okay, I could do these things with other assets, but I think I want to just keep Bitcoin and use BTC as much as possible.
All right. Well, we're looking forward to your panel later in the day. Moody, thanks so much for joining us.
Absolutely. Thanks so much for having me.
Thanks, Munib.
That was Stacks co-founder Munib Ali. Now let's head on over to one of our stages here at Consensus Hong Kong.
Wow. Well, this is a testament that Asia is the place to be. So yesterday, Elizabeth, we had Paul Chan announcing a lot of interesting goodies. We had, this is our financial secretary, we had your boss announcing with your other boss, Eric Yip, a number of new initiatives. And Hong Kong is also enhancing its digital assets framework. And you finally get more resources, which is something that I'm so happy about. So you've also got a new blueprint and map. Do you want to talk a little bit about it? And what are other things that you and your team are actually doing for Asia Pacific?
Right, so we issued a roadmap yesterday. I could give a little bit background as to why we issued a roadmap. So back in 2018, we formulated an investor protection regime governing virtual asset activities. It started off as a voluntary opt-in regime. It's suffice to say that it wasn't very, there wasn't a lot of participation. People were, adopting a wait-and-see approach to whether they wanted to be regulated. So we thought that that wasn't really, good, because we have a nice regulatory framework. We set out to protect investors. Nobody's using it. So then we did a law with the government to introduce a licensing regime. So then now we mandate that virtual asset trading platforms must be licensed if they're operating in Hong Kong or they're targeting Hong Kong investors. That has gained traction. And in the interim, what we did was we also allowed our intermediaries, who are already regulated by us, to provide all sorts of virtual asset activities. For example, virtual asset dealing services, advisory services, fund management. It seemed like we built an ecosystem. But what we're seeing is that ultimately, virtual assets are, borderless. Investors in Hong Kong, they will go to overseas platforms, unregulated platforms. They won't remain in Hong Kong even if we have a really nice regime that is set out to protect them. So what we are looking at is how are we going to attract the activities back to Hong Kong? Because you have a regime, but you can't protect who you want to protect, then that regime isn't working. So that's why we issued a roadmap. It's based on 5 pillars. So it's got a nice catchy name, Aspire. Yes. So it's basically access, safeguards, products, infrastructure, and relationships.
Yes.
So those are the 5 pillars. And under those 5 pillars, we have 12 initiatives. Initiatives that we think should help in, attracting liquidity to Hong Kong, attracting activities back to Hong Kong. So what we're looking at right now is, compliance burdens, for example. We've heard that we've got one of the most robust regimes, and robust means stringent. So we're looking at to whether there's certain relaxations we can do, but we still maintain that level of investor protection that is necessary. So what we're looking at is, for example, we've got stringent custody requirements, insurance requirements, hot-cold wallet ratios, even, the type of custody solutions that you use. We're looking at whether any enhancements, any refinements can be done. Then we're looking at whether our trading platforms can provide more services and products. So right now they're only providing spot services and custody services, and we know these aren't really, profit-making businesses. So we're looking at, whether they can do staking, whether they're allowed to do virtual asset derivatives, maybe provide to professional investors first. And then we're looking at, lending and borrowing. So for staking, it's actually, there's a knock-on effect because if we allow our platforms to do staking, it means that we will also allow our ETFs to do staking. So that's how we're trying to build up the ecosystem. In relation to access, I think what we're trying to do is that we want to expand the licensing framework so that more activities are regulated in Hong Kong, and which means that more activities fall under our regulatory remit and we have more visibility. We can attract them to be regulated and to conduct proper business in Hong Kong. So we're working with the government on the OTC trading regime. We're working with them on the custodian regime because ultimately the most important thing is that client assets are properly safeguarded and segregated. So these are the initiatives we're working on. We've issued the roadmap. We do hope to get some feedback so that we can prioritize, which initiatives we should be doing first, which ones are more difficult and needs more deliberation, and we can properly time, check how we should be doing it. And we just hope that time to market is fast and also that it's what the industry wants. But then, of course, as a regulator, we will still keep our benchmarks of investor protection.
And what was so exciting yesterday and so important is liquidity, liquidity, liquidity. And that's something that I think all regulators are thinking about now, which is a real sea change that's going to just vault this whole industry forward. So just quickly, we have a number of developments in all of your countries. And how important...
Welcome back to CoinDesk Live. I'm Christine Lee, here now, joined with CoinDesk Managing Editor Ben Schiller. Ben, welcome to the show.
Thanks for having me.
What are your highlights so far at the conference?
Well, I mean, it's tremendous buzz here. We're really enjoying it, and everyone's super excited. A lot of side events, a lot of stuff going on. So it's been great. Everything's been a highlight.
What kind of news has been breaking at the conference so far that's caught your eye?
Well, we had the big Malay thing. I mean, it didn't happen here, I guess, at the conference, but we had World Liberty Financial on stage. We have Julia Leong, the main regulator here in Hong Kong. So we've Richard Tang from Binance. We've had a lot of big names, a lot of good things.
The Ethereum community has also been making waves. They've been having a bitter social media debate over the direction of their leadership, lackluster price action, as well as rising competition from rival blockchains. And actually, our next guest is going to help us dive into some of those stories. We've got Michael Silagazzi. He's the CEO of staking protocol EtherFi. Mike, welcome to the show.
Yeah, thanks for having me.
So let's dive into this a little bit. I mean, there has been a lot of thoughts in the Ethereum community of the direction, of the leadership. They've been upset that maybe it's been a little too not competitive enough, not aggressive enough. What are your thoughts on the situation right now?
Yeah, I think that's probably the right way to frame it, that there's a lot of concern in the Ethereum community about whether the Ethereum Foundation is doing enough with respect to advocacy and education and really talking and explaining what Ethereum is to the broader community. I think if you ask the average investor outside of the crypto bubble, just the normal person kind of who follows the markets, you ask them what the difference between Bitcoin and Ether is, I think 9 out of 10 times they wouldn't know what the difference is. They would probably tell you that they're both tokens. One is the biggest one is the second biggest. That's pretty much it. There is a complete absence of understanding and knowledge that Ethereum is a productive asset, that there is a whole universe of applications being built in DeFi and in other areas on Ethereum. And I think it is the Ethereum Foundation's job to go out there and educate people about this. And I frankly think they haven't been doing enough.
That's interesting because Vitalik Buterin, the creator of Ethereum, he came out and said, I control the board of the Ethereum Foundation and I like the leadership, so I'm not going to change it. What are your thoughts on that?
I don't know that he, I don't pretend to speak for him, but I don't know that he quite said that. I think what he was frustrated with was that there were some people in the broader DeFi community that were just throwing a lot of vitriol out there and asking for leadership changes. And I think his exact words were like, look, you're making my job hard. I'm trying to figure out what the right thing to do is for the long-term success of Ethereum, and just throwing shit at the EF Foundation, calling for the leader of the EF to resign. It just was not a productive. And
he said that he controls the Ethereum board until
he
they
did
have a
yeah, that's right. He did say that. But,
until they have a real board.
Right. Yeah, that's true. He does have.
But do you think it's really his job to be sort of managing Ethereum? I mean, it's a decentralized protocol. I mean, it's not it's not Coca-Cola. So is it really Vitalik Buterin's job to be like CEO of Ethereum like that?
Well, it's hard to say, what his job is. I think every founder, in a sense, finds their own kind of universe, their own niche within the, their company, and then supplements themselves with, pieces that that they're maybe not as effective at. And to some extent, I mean, I think he's done that. He's brought in, a lot of folks on the Ethereum Foundation that have helped him out and continue to do so. But yeah, I mean, as I said, I do think that EF could and should be doing more with respect to advocacy and education.
Do you think this really all just comes back to the price action of ETH, the sluggish performance compared to other assets like Solana or Bitcoin?
Well, look, if you look at, let's say, ETH and BTC, the correlation between those assets is, 0.9 on any given day. I mean, they're still both speculative assets that move kind of together. ETH has underperformed BTC, but like we've seen that in the past, it kind of goes up and down. Really, it's a function of the macro environment. I think it's easy to place blame and complain, about this or that, but the reality is these are still pretty speculative assets.
But I would say with Bitcoin and Solana, they've hit all-time highs in this cycle. Ethereum kind of stalled at 2,500, far from its all-time high.
It hit 4,000.
Not this cycle. The 2,500.
No, it did. It hit 4,000. It has. I mean, look, it's underperformed.
It's underperformed.
I'll put Solana in a different category because that is just.
But I'll say this, okay? But don't we want price stability? So maybe if it's not having this, gargantuan surge in price, and it's found, I suppose, a stabilizing support level, is that a good thing? But people are concerned that the L2s are extracting all the value from the transaction fees and whatnot. And so maybe you could weigh on your thoughts.
Yeah, I don't buy that at all. I think the L2s are good for Ethereum in the sense that you now have dozens of different teams with their own funding, with their own BD teams that are out there advocating directly or indirectly for Ethereum. I think that's a huge positive. I think if Solana were to have the choice of Coinbase building on them versus on building an L2 on Ethereum, I think it would be pretty obvious what choice they would like to make, along with Kraken, along with lots of other folks that are building. So I really think that the whole meme around L2s being extractive to the Ethereum one is just complete bullshit. If I can say that.
You can say that.
So I don't buy that at all. I think the price action has been due to a lot of FUD and legitimate concerns around Ethereum. I think that's why the price is down. And there was, I think, fear that Solana was going to, race ahead and become more competitive.
So you're participating in a panel here at Consensus called Ethereum, Where Do We Go From Here? So maybe you can answer that question. Give us a little preview of your thoughts.
Yeah, so I actually already did that one.
Okay.
That was yesterday. Yeah, we talked about a lot of different things, a lot of stuff that we're talking about here. I think, look, the most important thing is to focus on the long term. It's easy to get caught up in, what the price is doing today or tomorrow. In the end, I think it was Benjamin Graham that said that in the short term, the market is a voting machine. In the long term, it's a weighing machine.
Wow.
And so I think if you focus on 3 years from now, 5 years from now, building a really great product and having hundreds of large projects that have hundreds of millions of dollars in revenue is what's going to lead to the
Heads
success
down,
of
keep
Ethereum.
building. Mike,
Yeah.
thanks so much for joining us.
Thanks for having
Thanks
me.
very much.
All right, that was EtherFi CEO Mike Silagazzi. We're going to take a quick break, but afterward, we're going to talk to one of the largest crypto exchanges in the world, Gate.io. Consensus partner Gate.io is a leading global cryptocurrency exchange founded in China in 2013. It has grown to service over 21 million registered users and process 12 billion in daily trading volume. Joining us now with more is Gate.io Chief Business Officer Kevin Lee. Kevin, pleasure having you here. I had the pleasure of attending Gate.io's Token of Love event last night. That was so much fun. You know, I would say in America, not many people know about Gate.io, but tell us a bit about this global exchange and how you've just expanded in the region.
Sure. So we've been around for like almost 12 years. So in crypto's term, that's almost like eternity.
Yes.
We have a global presence all over the world, maybe less on your side of the world. But I think the slogans that we have is like a gateway to crypto. So we focus a lot, I think, this year with like how to let more people to access our world, including sponsorship last year with Inter Milan, the football club in Italy. So we're expanding in that like region in Europe as well. And 2 weeks ago, we announced a sponsorship with Formula One Red Bull racing team. That would be exciting. That would be not only for this part of the world. Again, that would be in the US and everywhere as well. So like, I guess we just like want to bring like crypto to more people. It's just like not only for trading or investment purpose, but like a general understanding of the whole ecosystem.
Where are most of your users based? And I understand you're expanding into Europe. So tell me a bit about, I guess, those long-term growth plans.
Sure. Yeah. Well, again, like because like we're all virtual and everyone's work remotely, but like given our history, I think what we do more here in Asia, historically speaking, but like given the environment, and we probably talk about it a little bit later about the meme cycles, like a lot of like it attract a lot of people from the West, from Americas and Europe as well.
So I'm just interested in the kind of impact of the US on the kind of global environment for crypto. I mean, how has the more permissive environment with the Trump administration impacted, you know, the view and the kind of outlook for your business globally?
Yeah, I would stay away from commenting like a very specific about like his policy, but I would say in general, like it's a good indicator of like where one of the biggest, if not the biggest country, where they stand and direction towards crypto. I think that's really interesting case where it's become a FOMO for other governments to follow. Right. So and there's also a thing is how fungible the exchange is. Right. So whenever you trade Bitcoin, you can actually trade in any country. So I guess that gives incentives for different governments to work on a more coherent frameworks that work for all the market participants.
So do you think regulators are sort of competing with one another to
Do
attract
compete,
capital?
exactly. They do compete, so they have to go a little bit faster. We probably saw it yesterday. Hong Kong, we now have a more like a framework towards like what we can do better in Hong Kong as well.
Right.
So I think that's a good sign for everyone here.
Right.
So Gate.io was founded in China initially, but now China has banned cryptocurrency transactions. They banned mining. But in Hong Kong, you're seeing crypto flourish, at least, open the gateway, if you will. Do you see things opening north of the border?
Well, yeah, definitely, right? So Gates exit China due to the regulations a few years back, but like Hong Kong, I'm very biased on that regard. I was born here, raised here, so I want Hong Kong to be successful. And Hong Kong, traditionally, I was coming from a traditional finance background. We have a good foundation in traditional finance ecosystem, and that won't be a better place than Hong Kong to have this integration between the crypto industry and the financial industry. We talk a lot about, like I'm sure other like panels will talk about that as well in Hong Kong. So yeah, we have a lot of potential here.
So I mean, it's kind of this competition between Singapore and Hong Kong to be the kind of Asian hotspot for crypto. I mean, how do you see that kind of?
Always. It's always a friendly competition.
Yeah.
That's also why we want to bring Consensus here, because they have token 2049.
Yeah.
But I would say even in traditional finance, there are different positions for like Singapore, maybe more like a commodity and bond markets, where Hong Kong would be more like equities and other capital markets. I think it would be the case for Singapore and Hong Kong in crypto industry as well. So we have different position where we can, as a broad spectrum of things we can do in crypto, right? So that's it's a friendly competition, but we can both be successful.
So you participate in a panel called Doge to Trump, when meme culture meets crypto future. So memes have this passionate, visceral, a picture says 1,000 words. And yet, when you combine that with a US president and the president of Argentina now also promoting these meme coins, I mean, where is this headed? Is this going to start funding political campaigns? Is that a good or bad thing?
Well, yeah, it's kind of feel like that's really a lot of people not understanding like the market or like our industry, and they just like ape into meme coins. But I would say in general, my position, I'm more like a man of science. I know memes before the meme coins cycle. I know memes about before the internet funny cat pictures. It's actually about like all the ideas and everything in movies, in books, in music that go beyond like what we're seeing today, right? So there may be a come and go, maybe a cycle for meme coins, but I think meme as a thing, I mean, I wouldn't say that to like, I'm not gonna name names, but like memes, like to a lot of people around us, is actually a big intangible values.
Yeah.
And whether or not meme coins will be a proxy to that values, we don't know yet, but I do think memes will be around for a very long time.
Do you see them as sustainable though? Because we're seeing, the average lifespan of a meme, 30 minutes or what have you, and value extraction from retail users. But is there a sustainable market?
Meme coins will be very interesting. As you said, it's like a really short cycle, and actually users and investors actually buy into that. They want high risk, high turnover to just make quick money. I don't want to judge that, right? But like for memes, we know a lot of memes that's been like for ages. If you stomp the fist twice and clap your hands once, we are going to sing, "We will rock you," right? So that's a meme, right? Everyone's understand that.
What about Dogecoin? I mean, that's been around since what, 2013?
For more than 10 years.
Yes.
Yes, indeed. So that's a place, whether or not it's going to be like 6 million meme coins or 5 meme coins, that would be the questions for like later this cycle.
We want to have an ETF for Dogecoin now. So it's becoming part of the financial system.
Kevin, thanks so much for joining us.
Thank you, Christine. Thank you very much.
That was Consensus partner Gate.io Chief Business Officer Kevin Lee. All right, we're going to take a quick break, but stay with us. We've got more programming here on Consensus Live. when it comes to agriculture, our next guest is on a mission to empower farmers worldwide with data-driven solutions enhancing productivity, sustainability, and traceability in the supply chain. Please welcome Carlotta Costa. She's the Director of ESG at Dimitra. Carlotta, thanks so much for joining us. So, when I think of supply chains and blockchain, I think of IBM, which, a couple of years back, they were in the gauntlet. We're all in. And then they kind of fizzled out. And we didn't hear anything. But you succeeded in something that they did not succeed in. So tell me, what went right?
Thank you very much for the invitation. I think, first of all, IBM has been going up and down with the blockchain adoption as many other companies. But what really sets us apart is the direct connection to the field. So we like to work with farmers. We like to empower smallholder farmers in the world via having blockchain and AI adopted in a very simple manner. So I guess that is what really sets us apart and what makes us successful.
Okay, so how does this work and how are you benefiting these farmers and why do you need a blockchain to do this?
Well, a good example would be the EUDR, so the European Union Deforestation Free Regulation that is upcoming. Actually, makes sure that all the companies importing, for instance, coffee or cocoa into the European Union have to comply with a deforestation check. Now, if you think of smallholder farmers in developing countries, how are they ever going to be able to afford satellite imagery to make sure that these checks can go and fulfill the requirements for the legislation? So what we made is a very easy solution via our mobile apps and AI-powered solutions for farmers to actually polygon map their farms and make sure that they can communicate this to the blockchain so that we have a transparent, immutable, and accountable record for all their activities, and also the traceability. So it doesn't stop at the farmers, it goes to the cooperatives, to the aggregators, and then to the exporters, so that we can ensure via Dimitra that we have the whole ledger and all the activities that happen on the supply chain.
So the blockchain is a means to compliance?
Yeah, definitely, yes.
Yeah, interesting. So, I mean, we've had certification of activities before in agriculture. Why do we need a blockchain to certify something rather than just having a certificate?
Yeah, I like to think, I used to want to work for the certifications back then. There is a plethora of solutions out there, but the auditing and the mass balance, I think, is a little, I wouldn't say corrupted, but not that accurate as it could be on the blockchain. So I think once we have a transparent, accountable, and immutable ledger where you can store all of this information that can be publicly accessible, there you actually have a win over other sorts of data collection systems.
Right.
Yeah.
So you were on the emerging tech stage yesterday with the CEO and COO of Dimitra. Tell us a bit about the takeaways from that conversation, and what major concerns with the food chain are there that the blockchain can solve?
I think for the most, when it comes to transparent, sustainable, and very good future for the agri-food industry globally, we need to think of these technologies as a very good solution in terms of adaptability and adoption. So in a way, we talked in the panel a lot about our projects around the globe. We have around 35 projects worldwide, and we specifically discussed with the audience how these were successful in terms of implementation for real-world impact and applications for blockchain and AI. So we really pivoted towards our case of ESG compliance in Brazil. We have the biggest association of fruit exporters coming from Brazil that is going to import into the EU. So we're ensuring that anybody can see traceably on the blockchain all the sustainability claims they make about their produce, and also we help them with AI streamlining ESG reporting because they have to comply with the European Union legislation. So this kind of scenario, but also other cases like in Ethiopia, we're actually onboarding 1.2 million farms onto our app, so transmitting the data to the blockchain as well. And I think for the most, we discussed just general world applications. I like so much the talks at Consensus, but sometimes I see a lack of actual usability for mass adoption of people who do not live in this bubble, in which I live, so I shouldn't say, but...
So you're not doing meme coins then?
Well,
no.
They actually have a token, though.
Oh,
they
you
have
do have
the
a token.
Demeter token.
Yeah.
Maybe you could tell us a bit about the token, the Demeter
Yeah.
token, how that works, and what kind of utility holders get out of it.
Yeah, thank you very much for that question. Actually, I like the whole meme coin. I think speculation is interesting, and also seeing how identity formation in the digital world is taking shape. So I wouldn't dismiss all completely like this world. However, our token, the Dimitra token, really is accessible, first of all, to anybody who wants to fuel a brighter and more sustainable agri-food globally. So the way that the utility is shaped into our ecosystem is that all the protocols, all the apps that we use are actually fueled by it. And now we're actually launching different protocols powered by AI where the whole community can take part in. And if you want a very concrete example in the tangible world and more than the digital one, we had a project in Kenya where we helped over 10,000 farmers to onboard onto the blockchain via land suitability reports. We were able, with AI-powered satellite imagery, to tell them where to plant the avocado trees. And now the community can actually purchase an NFT for the avocado tree and see how it's going to grow altogether in the coming years. So in this way, the community of Dimitra holders can support smallholder farmers that would otherwise never be connected to them.
So it's a form of philanthropy in that sense.
Philanthropy to some extent.
Yeah.
We also strongly believe in carbon credits, for instance, as a way to kickstart the project, but then having a longevity of the project that actually brings revenue both to Dimitra and to the smallholder farmers.
So are the credits tokenized then?
Yeah. Actually, we help farmers the first 2 years to improve their productivity and yield. So by telling them where to plant what sort of crops, they actually are more empowered to capture carbon, therefore creating credits. And those credits are certified by Verra, Gold Standards, the generally acknowledged one in the world.
Right.
And when we sell them, we give half back to the farmer and then half goes back to the Dimitra ecosystem.
Oh, nice.
And I guess they get that value from the tokens that they collect.
Yeah, as well. Yes.
Fascinating. Okay.
So we do have utility. I'm very happy to see that.
Can you give a sense of how much money they can make from the tokens?
Well, generally, actually, the credits, when it comes to the carbon credits, are sold on the market now between $20 and $120.
Right.
So you can imagine that half would go back to the farmers and then the other half would go back to the ecosystem.
Right.
And we're talking about 1 ton of CO2 emitted, but we have trillions, if not millions, being released every day. And we have very big companies such as Microsoft, Salesforce, McKinsey & Co., with whom we're collaborating to actually make sure that the offsetting is being bought by the companies that are emitting the most.
I guess, do you have an idea of the size of, how many people are using
The
your
size
blockchain? Yeah. Of how many people are using the blockchain?
You mean the users that we have onboarding? Yeah, for now it's around 50 million farmers.
Wow, okay. Incredible.
50 million farmers.
Yeah,
wow.
And we're still growing.
That's amazing.
Yeah, we just started the project in Ethiopia with 1.2 million farms that we are onboarding for coffee.
So I guess there are a lot of small farmers that
Yeah.
All right, we got to wrap it there.
Okay.
But Carlotta, super interesting stuff. Thank you so much
Thank you so much for inviting
your
me.
insights. All right. That was Dimitra, Director of ESG. We've got Carlotta Costa. Next, we're going to talk DeFi with derivatives and DEXs with top players in the space. We've got Paradigm and DYDX after the break. Paradigm, Paradex, and DYDX have been significant players in the DeFi derivatives and decentralized exchange spaces. Paradigm has facilitated over $560 billion in lifetime volume, capturing 30% of the global crypto options market. Paradex has achieved $36 billion in lifetime volume, trading with an average daily volume of 100 million across 55 live perpetual futures markets. And DYDX has a lifetime volume of 1.5 trillion as a leading decentralized finance protocol for perpetual futures. Please welcome Paradex CEO Anand Gomez and DYDX Foundation CEO Charles Dosey. Great to have you both with us, Anand and Charles. All right, so let's start off with Charles. I saw that you mentioned that there's a sense of crypto blues in the current market stagnation despite institutional interest. What catalysts do you see needed to get the market out of these crypto blues and, back on to the bull market we've been seeing over
Absolutely,
the past
absolutely.
weeks?
I think the market is still digesting a lot of the macro events around us. Since the new administration in the US came in, there was a lot of news, there was a lot of decision made, so we need things to settle down a little bit. I expect the summer to be a little bit choppy, but after that we can maybe come back in September with a market which will be also much more energetic. One thing also which can help the bull run to come into fruition faster will be the likes of Robinhood or maybe some other large player to bring a big block of new users into DeFi. So I think the macro as well as new kind of users are around the corner, so I remain very optimistic. The one thing we need more is patience and conviction, as always.
Wait, why are we experiencing these crypto blues now in your view?
Say it again?
Why are we experiencing these crypto blues now in your view?
Because it's just very emotional. This is a roller coaster of crypto market. We've been very optimistic with the new administration and Trump. Eventually, we find out that the new administration priority was not crypto. Crypto is within the list of things to work on, but it's not a top priority. So we've seen in the first weeks of Trump administration focusing on tariff and some other domestic issues. Crypto remain on the agenda of the new administration, but I think some crypto traders have been a little bit naive and a bit impatient.
All right, Anand, you're facilitating over $560 billion in lifetime volume on Paradigm, according to your website. So what trends are you observing on the institutional front? What are they interested in? And we've been hearing about sovereign wealth funds as well. Give us your insights.
Yeah, so we are, Paradigm's major business is options, and most of the options business is institutional. What we're seeing is, a lot more conversations with people. Crypto is not a taboo word anymore, so it's actually much easier to have these conversations with people. But it's still, very slow to kind of ramp up. It's like, I would characterize it as cautiously optimistic, where they're interested, but I think they're still waiting on more regulatory clarity, specifically from the US, in terms of what explicit rules come out in terms of this last bank rule, for example, that changed the rules for banks to hold crypto custody, crypto, as on their balance sheets. I think it was a great one because that paves the way for more institutions like them. But, like with anything institutional, the ramp up is always slow. The nice thing is, at least the total available market right now, at least from a conversation perspective, has expanded pretty significantly, but it's still, quite slow. And I think that will remain like that at least until we have, very explicit guidance on, how this thing can live, whether you can have it in your balance sheet, what things are securities, what things are not, etc. And so, but by and large, I would say sentiment is, very, very good, and we're seeing that across, all the conversations that we're having.
All right. So when we compare, I guess, the Americas to Europe to Asia, what are the differences in the activity you're seeing, and I guess which one is leading?
So we don't serve U.S. customers at all, and so
a lot of people have taken that route.
Exactly, that's that was the route to take over the last 3 years. I think it served us well because we were always trying to be on the right side of regulation, the right side of compliance. But now, like I said, I think more conversations back with the U.S. Folks, but nothing concrete so far, at least in the U.S. because we don't practically serve. But the rest of the world, I think, like I said before, I think they're just waiting to see what the U.S. does, and I think those guys will start ramping up as well.
All right. What initiatives at DYDX are you taking to bridge the traditional and digital world?
Absolutely. So DYDX has been an institutional player for many, many years now, since 2018. So what we're really focusing on is keep upgrading the infrastructure to essentially accommodate the professional and traditional traders from the institutional world. So thinking of how you can essentially enable full nodes, high frequency ready APIs, but also bringing new markets. I think DeFi really needs to keep carving itself an unfair advantage against CeFi, and this is what DYDX is focusing on, bringing systematic liquidity on the protocol itself with the Megavolt, but also bringing a pace of new market listing, which is really outstanding and way faster than centralized exchanges, in order to bring a very strong propositions to institutionals and making sure that there is more activity on the DYDX chain, thanks to additional institutional adoption. One additional thing some of the community members are working is an ETP on DYDX tokens. An ETP is a step before an ETF, and there are some people in the ecosystem working on this, so we are excited about that.
What kind of ETPs and with what currencies?
So that would possibly be, it's something in the works by the community, that would possibly be an ETP listed in the European market, so think of the Nordics, France, Germany, Switzerland.
What kind of assets would...
And the underlying asset will be the DYDX token.
Okay, I see. And we were just talking before, you've spent 16 years in Hong Kong here. You have a sense of the regulation and the state of crypto policies here. How do you see global regulatory approaches shifting in 2025? And what's DYDX doing to stay compliant while maintaining decentralization?
So Hong Kong is progressing very well, as many other jurisdictions in terms of regulations. There is a global competition for talent, for capital, and for entrepreneurship, and Hong Kong is definitely at the front line of this one. What we do as DYDX is we remain very opinionated about our identity. I think in this market, you need to decide if you are a CeFi player or a DeFi player. You cannot really sit in the middle. So in terms of regulations and regulators engagement, we remain engaged with many regulators. I think it's part of our responsibilities to explain DeFi, explain how the capabilities of DeFi in terms of transparency, of consumer protections, in terms of healthy market, how they do overlap with the mission of the regulators. And I really strongly believe that the regulators get this more and more. They are working internally on their own CBDCs, and they can see the benefits of total permissionless networks, public networks where there is transparency, and when they can monitor by the minute the state of the chain and the state of the markets.
How about you, Anand? How does Paradigm and Paradex view global regulatory regimes? How are you navigating this and strategies going forward?
Look, I think everything Charles said in terms of consumer. Like, ultimately, DeFi is good for the people in the sense that the things that this technology enables, things like self-custody, etc. This is all good for consumers, right? The problem is, all of this innovation has occurred in this kind of like at a time when there was no regulation. So, I think the way we approach it is from a first principles perspective, and we try to stay, like I said, on the right side of regulators, right? So if there's a clear law, then we say, okay, we're definitely not doing this. But where we think that, okay, hey, we can proactively engage with the regulators, we will regularly have conversations with them, to engage with them, tell them who we are, what we're trying to do, and to try to show that, like, hey, we're on the right side of this, right? So I think the engagement with them and trying to explain to them, because a lot of this is also education. I think this technology is brand new, and folks don't really know like how these things affect. So I think it has to be continuous dialogue, and we're engaged in doing so.
Charles, there's been a lot of talk about AI agents coming into crypto platforms. I wonder, but I don't know about their ability to KYC on centralized exchanges. So, going forward, how do you see this evolving as more people get acquainted with decentralized finance?
I think you're spot on. Indeed, AI agents should not be able to KYC in centralized exchanges. So I think that's where DeFi comes into play. I'm still kind of into observation mode regarding AI agent and AI by blockchain, but what I know for a fact is that AI agents are machines, and machines will be only able to consume DeFi because DeFi does not KYC, but only AML when it's properly built. We also seen some AI agents coming and connecting and trading on DYDX. So that's something a new category of users we need to serve. They are asking for support on Twitter, and they read the documentation, they connect, and some of them are effectively trading. So that's a new thing. But I think what is very important for DeFi and AI in general is that DeFi enable systematic trading, should they be AI agents or high-frequency algos, to essentially operate in a much more efficient way, given that DeFi, when it's properly built again, is totally open. So you can train your algos on the market information in a very open manner. If you train your algos against Coinbase or Binance or any CeFi exchange, essentially you're trading against and training against a black box. But the openness of the order book, for example, on DYDX, the openness on the chain brings some very high quality data for any AI agents to understand the market and take decisions against it.
Yeah, Anand, I wonder how Paradigm and Paradex are leveraging emerging technologies like AI as we evolve into the future.
I mean, we 80% of our code is actually written by AI now. So we are one of the first people to adopt this. We're a very small team across both businesses. We're only 37, 36 people, something like that. So, and we've been very, very first and fast at adopting this stuff. Regarding Charles's question, comment about AI, I think we're seeing this as well. But to your question earlier about how do we kind of tackle this? I think an AI agent is still an agent in the sense that it is operating on behalf. It has agency. It's operating on behalf of someone, right? I think as this space evolves, you will start to see more people ask questions like, okay, if somebody is deploying AI, on whose behalf is it operating? And like the money, like the resource, where is it getting its resources from? Because AI still needs resources, it needs goals, and it needs an action space, right? The action space is the trading environment, but the money still comes from a human at some point, right? At least now, maybe in the future that changes. But I think that's where you will start to see people start to regulate it, or at least new laws. And I think the exchanges will start asking questions like, okay, if you are deploying AI, it can't just be like willy-nilly, some random person without an identity. It has to be operating on behalf of someone, and they will try to KYC and tag the wallets or AMLs and so. And I think that's the right approach.
Huh, interesting. Okay, really fascinating innovation and questions to consider on that front. We're out of time, but Anand and Charles, thank you so much for joining us.
Thank you for having us. Thank you.
All right, that was Paradex CEO and Anand Gomez and DYDX Foundation CEO Charles Dosi. All right, we're going to head on over to one of our stages at Consensus Hong Kong. Let's have a listen.
$1 trillion industry, and intents are actually going to allow chains to actually compete with them in the payments industry, and that could really enlarge like the DeFi MCAP from that point of view. Yeah, the market share, sorry.
Yeah, I think for the last 5-6 years in DeFi, I think we have seen 3 major phases. ICO, then we called it STO, and then we started calling it RWA, right? For ICO, it was mostly just seeing the potential of capital formation across the globe, like anywhere, from anybody. But I think the players at that time were mostly degens or crypto natives. So it was a really short market. It was impressive. And then we had the thought, like, maybe we could start tokenizing a lot of assets, right? And it was mostly degens tokenizing maybe unattractive assets and forcing it down like throats of normies. So I think STO had its potential. It showed the potential of tokenizing a lot of it.
Welcome back to CoinDesk Live from Consensus Hong Kong. I'm Christine Lee. The Hong Kong Polytechnic University has been making strides in research related to blockchain, and its role in advancing the crypto space has been crucial in pushing forward innovation. Joining us now to discuss our Hong Kong Polytechnic University professors, Man Ho, Alan Oh, as well as Professor Daniel Luo. Professors, welcome to the show. So, the university has been doing making incredible strides in the blockchain industry for students. What are some of the most exciting projects that you are monitoring over at the university? Oh, there's a microphone for you.
So actually, our university provides a lot of support.
So we have the research center on blockchain technology. In this center, we have many interesting projects. For example, I'm working on the security of blockchain platforms and smart contracts. So actually, we invested security issues from two aspects. So one is to identify the vulnerabilities in the blockchain systems, for example, the platform infrastructure, finance, smart contracts, and so on. Actually, we discovered lots of severe vulnerabilities, and we also help the project team to fix those issues. Another aspect of my research is to defend against the attacks, different types of attacks on the blockchain ecosystem. I believe you know that there are lots of attacks happening in the blockchain ecosystem every day. We develop tools to identify and analyze those attacks. We have more than 10 professors working in this area. I will let Professor Alan now to introduce his research.
Okay, thank you. Well, it's really an honor to be here on the stage to share some of our recent project at the Hong Kong Polytechnic University. I guess echoing Daniel's work, we have a number of colleagues working in different areas in the blockchain space. So for me, recently, one of the most exciting stuff that our team is working on is collaborating with the Hong Kong Monetary Authority to work on their central bank digital currency project. And here we introduce to them zero-knowledge proofs, which has been pretty successful in the blockchain space. So we try to apply zero-knowledge proofs to protect the user privacy in their prototype CBDC project, and also advise to them what we can do. And we are building a prototype with them. So hopefully the insights from this project can help people say, okay, zero-knowledge proof is really practical, not just something exists in the academia.
This is a CBDC for...
Sorry?
CBDC
for retail.
For retail in Hong Kong.
Yes, but this is only a prototype because the Hong Kong Monetary Authority is just researching on this feasibility, so we are helping them in this regard.
Oh, interesting. How would that different from the CBDC in China?
Okay, that's a interesting question. Well, I don't think I am in the best position to comment on this one, but as far as I know, the CBDC project in China, they don't really use blockchain technology, but in Hong Kong, at least at the wholesale level, they are considering using blockchain, and some of the prototypes are building on top of blockchain.
Okay, interesting. And I mean, you're putting privacy at the forefront, which is very fascinating. And you mentioned security. I mean, tell me a bit more about that. Where do we need more security in blockchain? Because I mean, when I think of Bitcoin, it's the most secure blockchain in the world. So give me a few more insights on that.
Yeah, that's a very good question. So you mentioned Bitcoin, right? So actually, in Bitcoin, there may be also security issues. For example, if you want to transfer Bitcoin, you need to write a simple program in a script, right? Actually, a few years ago, we conduct a research on the security of the script. We identify some vulnerability in the scripts. That means sometimes you can collect some free Bitcoins in the Bitcoin network. So this is one example. Actually, we have been focusing on the security issues in the blockchain platforms, finance, network, and smart contracts. Recently, we identified some very severe vulnerability in the popular layer 2 platforms. Those are the double spending vulnerability. That means you can spend the money again without any cost. So actually, we report this vulnerability to Arbitrum, and they acknowledge this vulnerability and gave our students lots of bug bounties. Moreover, we have a research paper on this issue, and this research paper appears in the Top Security Conference, CCS, and won the Distinguished Paper Award. This is the first time for researcher in Hong Kong to receive this award.
Okay, so, well, congratulations.
Thank you so much.
You touched a bit upon this, but when you look at some vulnerabilities in this space, what are the top vulnerabilities, and what are you doing to solve them?
Yeah, that's also a very great question. So actually, usually once we identify the vulnerability, we will inform the development team and help them to solve these vulnerabilities. Usually, the vulnerability results from the complexity of the system. That is, nowadays the blockchain system usually consists of many modules. Maybe the project team has to do careful code audit on one module, but they may miss the interaction among the modules. Then usually we identify those severe but overlooked vulnerabilities in the interaction among the modules. We will provide our advice to the project team and help them to fix those issues.
Hey, interesting. And actually, I want to go back to the CBDCs. What are some of the considerations in trying to create a CBDC for retail, which, yeah, I would love to hear.
Okay, that's a good question. Originally, when we first interact with the Hong Kong Monetary Authority, we might think, okay, they are interested to know more about the habits of the citizens, how they spend money. But turns out that they actually value privacy. Then they agree that privacy by design is important. And the bottom line is that they would like to have a retail CBDC system that respects privacy in the same way as they respect privacy for our ordinary cash. So they don't want to learn more information over what is happening in the existing world. So one of the core part that is that, okay, can we design a system that is secure and also privacy preserving and at the same time efficient enough to support the retail payment, because the amount would be huge. The number of transactions would be huge.
So what would be involved in that? Like zero knowledge proofs? Is that what you're looking at?
Yes, we are trying to apply zero knowledge proof, our zero knowledge proof, to their first generation. And the main challenge is that, okay, zero knowledge proof is fascinating, can solve the privacy problem, but there are two design considerations. The first one is whether or not it is efficient enough for the ordinary citizen in their mobile wallet to use the zero knowledge proofs. So we need to design systems so that part of the computation is outsourced to the server, and then the users still retain their own private key, but they cooperate to generate the zero knowledge proofs so that the transaction is privacy preserving and at the same time is practical enough. And the second requirement is we still need to respect the so-called regulation, or in the existing world, when you make a transaction, the bank actually knows your details so that in case anything happens, the bank can say, okay, this is the transaction, this is the owner under court order. So we need to still maintain this ability for the system to ask the bank, okay, so who is this transaction for, and who is the sender? So we need to respect those regulatory requirements and at the same time protect privacy.
So they would be able to reverse transactions if
Sorry?
They would be able to reverse transactions if they want.
They will be able to inspect those transactions, and in some case may be able to kind of like ban the transaction, because at the end of the day, the system is not run on a public blockchain, it's more on the permission blockchain. So they will have the right to kind of like look at ban, not really ban, but see the transactions and try to find out the legal entity that is responsible for the transaction, so that legal actions can be taken.
Did I see that you want to add to that, or no? Okay. But I guess the other question I had about that was, is there a timeline for this?
Okay. We are having a project with them, and it's near in completion. So there will be a white paper published by the HMA with us and also with the ASTRI on the findings in this project to state the feasibility of whether or not zero knowledge proof can really satisfy all the requirements that we just discussed.
Okay. You know, another popular theme is artificial intelligence. I've been talking a lot about that with different companies. I went in the university level. Where do you see that in the intersection of Web3?
Yeah, I think it's a very interesting topic. Nowadays, it seems that there are lots of talks in consensus about the AI and the Web3. So in my opinion, that these two topics can complement with each other. For example, nowadays, people may enhance smart contracts with the AI so that the smart contracts can do more intelligent things. Especially those like, say, MEV bots, by using the AI or LLM, maybe they can make more profit. Another thing is to develop, say, AI enhance the DAO so that they can make more smart or strategic decisions by collecting and analyzing the data.
One thing to add, in the afternoon we will have the Hong Kong Research Symposium. at the spotlight stage. And one of the speakers is the dean of our graduate school, who will be talking about the intersection of AI and Web3.
Okay.
So if you are here, please join us in the
Yeah.
afternoon in the spotlight stage.
What advice would you have to students who may be interested in and you know, what should they be doing to get your attention?
You mean students or young people? Or?
You know, people who are interested in blockchains, young students, yeah.
Okay, to me, blockchain is a really, really interdisciplinary research related to different areas. So people working in finance, in technology, even within the technology space, there are people working in cryptography, working in distributed computing, working in cybersecurity, smart contract security. There should be one thing that interests you. For me, I would say, as long as you are interested in something, you have a genuine interest, you have the passion, and you try to look into the problems, and you will be able to discover something really, really interesting. And we love to see people having a passion on this topic, on this area.
All right.
I would like to add one thing. So with the great support of our university, PolyU is offering the first MSc program in blockchain technology in Asia. So actually, we exchange lots of talent students, and we try to equip them with the full stack knowledge and develop the talents, nurturing the next generation of talents for blockchain and Web3.
Well, fantastic. Thank you so much for joining us. Appreciate your insights.
Thank you. Thank you. Thank you.
All right. That was Professor O and Professor Luo from the Hong Kong Polytechnic University. All right. Coming up, we're going to take a quick break. Next, about how institutions are integrating with Web3, coming up. Welcome back to CoinDesk Live from Consensus Hong Kong. I'm Christine Lee. We're going to turn now to a conversation with one of our Consensus partners. Hex Trust is a crypto financial services provider offering secure custody, staking, and tokenization solutions for institutional clients. It has achieved key milestones, including launching the first native stablecoin, USDX, on the Flare blockchain, securing a major payment institution license from Singapore's regulator, and raising over $100 million in funding from global investors. Joining us now to discuss is Hex Trust CEO and co-founder Alessio Paglini. Alessio, great to have you. So congratulations on this new license in Singapore. Tell me a bit about how that'll open up opportunities for you in terms of servicing institutional clients, and in terms of expanding globally, where do you see more regulatory progress?
So it's been a long journey, and we started since the beginning thinking about our service offering to the market as a regulated and compliant one. So when we started in 2018, we were one of the few institutions that try to actually get licenses in all the markets where we're operating. The strategy, I would say, was a little bit cumbersome at the beginning, because when you're licensed and you have to compete with unlicensed entities, you're a little bit at a disadvantage in terms of agility, speed to market, etc. But eventually, it's paying off. We can talk about it, but now in a market that is becoming more institutional, it's obviously an advantage, if not the sole solution, to be licensed. As of today, we have a license in Hong Kong. In Singapore, maybe it's an in-principle approval.
Okay.
We really hope to get very good news very soon, hopefully at the next interview. And in Dubai, we're fully licensed for custody, for staking services, for broker-dealer and asset management. And we have an approval from in Italy and in France. So we basically have the whole license platform all around the world, excluding the US, which we are reconsidering now, considering the newest developments in the space.
Wow. Yeah. I mean, that must have been a very excruciating process, going from country to country, all the documentation, all the committees you must have talked through. Yeah.
Actually, I used to work for the regulator myself.
Okay.
That was the beginning.
Which one?
In Italy, the Securities and Exchange Commission. I was in the market abuse department. So actually, I have to say that I'm used to the paperwork of regulators. The real painful part was actually not the paperwork, but actually not knowing whether you could do the paperwork or not, because the licensing frameworks were not in place. There was no clarity of whether you could do certain things or not. So you always have to be very careful in what you were doing and waiting very long times to actually get answers from regulators. That was really the excruciating part.
So you mentioned the U.S. You stayed away, but now it appears there's a new administration with a new sheriff in town that wants to be the crypto capital of the world, according to U.S. President Donald Trump. Do you see inroads in that new market there?
For us, we're still observing. We're very satisfied with our platform and footprint right now, but obviously what happened in the U.S. In the past few months is changing the rules of the game. If we look at the crypto market, 99.9% of the trades happen in US dollars, right? US dollar stablecoins are the only ones that actually have tractions. All the trading pairs are always in US dollars. All the yield that is generated is always US dollars denominated. So I think running a global financial institution in the crypto space without having direct access to US dollar facilities is unthinkable. So it has to be something in our roadmap. We're still observing. We haven't made a decision yet. Maybe upon raising our next round of financing, we could make that deliberation.
So you have a really fascinating perspective being in all these jurisdictions, and I wonder, what are your thoughts on what jurisdiction, what region is leading in the crypto space, and what kind of players are you seeing most interested? And we're hearing a lot about sovereign wealth funds, so I'd love to confirm it with you.
Well, in terms of jurisdictions, obviously I think we had Hong Kong and Singapore try to move, but they're big markets, so they were a little bit slower than other jurisdictions. Certainly, the leading one has been Dubai in the last few years, where instead of trying to adapt the current regulatory frameworks to this kind of new asset class, they created a new regulation. Actually, they created a new regulatory authority from scratch, which is unheard of. And
well, that's probably what's needed in a new digital asset class.
Exactly. It's a new asset class. You create a new framework and a new authority. So it was extremely beneficial for all the players that wanted to go there and wanted to get a license. And now, so to answer the second part of your question about who is actually coming to the space, if we look at the three phases of adoption, we had the initial phase, which was retail, right? Retail that were attracted by this new asset class, speculation, etc., the crypto casino. Then we started having last year with the Bitcoin ETF, we started having the institutional adoption phase where we saw large corporations or banks, etc., starting to build Bitcoin reserves. but we're about, or we just entered the most important phase, which is the sovereign adoption phase, where we see actually central banks, sovereign wealth funds fighting to accumulate Bitcoins in their reserves. And it's going to be
interesting.
what I call
Can
a
you
big...
name names?
It's going to be, well, I mean, we heard about one of the major sovereign wealth funds in the UAE, for
Yes,
example, right,
yes.
having a substantial exposure.
Are you
But
involved in that?
we're not involved in that, unfortunately, but that's not the only one. There are
Right.
several. They're looking. We saw all the U.S. states passing legislation, so actually being able to purchase Bitcoins for their reserves. And this is going to be a major revolution because the supply is very limited and the amount of checks that these guys have is substantially different from what we've seen before.
Interesting. All right. So a lot of catalysts for greater growth in the future, I'm hearing. If you were to give some advice to a jurisdiction such as the U.S. that are, looking to regulate digital assets like this, I mean, what would you tell them? What would make your life easier and what would be good for the clients you serve?
Yeah, I think there has been, I mean, coming from a regulatory perspective, I understand the jurisdictional issue whereby regulators, they cannot regulate something that they don't have jurisdiction on. But at the end of the day, I see all cryptos, to be honest, as investment assets, right? The utility part is quite limited for the time being. So I would really try to apply exactly the same rules that we're applying to securities in the traditional market to cryptocurrencies. Yeah, it doesn't have to be to all of them, but to the majority of them, because at the end of the day, what matters is why people buy these currencies. People don't buy. I don't want to name any cryptocurrency in particular to pay the gas fees or to participate in the governance of that protocol. Still at this stage, the speculation, the appreciation of value of the cryptocurrency is what 99.99% of the people buying cryptocurrencies are looking at. So especially the retail users, they have to be protected as they are protected.
You think meme coins are securities?
Meme coins, they come a little bit from a different perspective because it's basically said direct. So the population is told directly that there is actually no value at all. Right?
Yeah.
I don't even see them as really.
Well, I'm surprised that you think that they should be regulated as securities, but
I'm talking about, I mean, all those assets where the issuers claim that there is actually a value and there will be an appreciation in value, right? Meme coins probably there would need to be, or if not meme coins, but the platforms allowing the trading and the issuance of meme coin should probably be regulated more like the casinos, right? Gambling.
I don't disagree with you there. Alessio, we've run out of time, but thank you so much for your insights.
Thank you.
All right, that was Alessio Quaglini, the CEO and co-founder of Hex Trust. All right, let's listen in to one of our show stages here at Consensus Hong Kong. Let's have a quick look.
AI, and because of this I was reading papers in network science, and one of the papers that I read by mistake was the Satoshi white paper, and it got me hooked. I have been in Bitcoin ever since, and I'm kind of like a bit of a weird Bitcoin maxi because while I'm a big believer in Bitcoin, I'm extremely interested and curious about the developments that we see across the crypto space. And I think we've seen a huge amount of really important technological and product innovations that have occurred outside of Bitcoin. For me, I've, for the last now almost 13 or 14 years, been working on trying to increase and improve the degree of decentralization we have for Bitcoin and the number of things that you can do with Bitcoin. And so one of the things that I'm well known for is being a core contributor to Sovereign, which became the largest DeFi platform for Bitcoin, which was launched in 2020 and has since processed many billions in trades and loans, all secured by Bitcoin. And right now I'm working on Bitcoin OS, where we, at the beginning of 2024, published a paper showing how we believed we would be able to take any kind of compute and make it possible to bring that programmability, that computation to Bitcoin, basically making Bitcoin a fully programmable layer by turning that arbitrary compute into a ZK proof, which could be verified and executed on Bitcoin. And then in June of last year, we, for the first time, managed to demonstrate this on Bitcoin mainnet. And then earlier this week, we launched a testnet, allowing developers to, for the first time, start experimenting on being able to bring any kind of thing, built permissionlessly on Bitcoin. So for me, it's been a 13-year journey, and I feel like I'm finally starting to truly accomplish the things that I set out to accomplish.
That's awesome. Okay. Lorenzo, why don't you tell the audience a little bit about your background?
Sure.
How you got started in Bitcoin.
Nice to meet you guys. This is Lorenzo from Uniset. I'm the founder of the Uniset.
Yeah. We are coming to you live from Consensus Hong Kong, where a lot of the discussions have revolved around meme coins. They've evolved from humorous tokens into a $100 billion market category that tests social dynamics, community building, and even political commentary. Joining us now to discuss is core contributor and co-founder of community meme coin Bonk, non-Bonk, and Selene Capital founder Jordi Alexander. Jordi and Nam, thank you so much for joining us. So you just came off of a stage talking about meme coins. We're gonna rehash the highlights with you right now. Okay, so over the weekend, the big topic was Javier Milei, the president of Argentina, and he was promoting Libra, which was revealed to be a rug pull by Hayden Davis, a market maker. And he basically said that, you don't make money on meme coins unless you're part of the insider team. So, I mean, I just would love to break down this. Your initial reaction, first of all, as a meme coin creator, and then we'll talk about your trades as a high-frequency trader. But go ahead.
Yeah, I think a lot of what came through Hayden's ideas and his messaging, which is a whole nother topic of conversation, is the idea that memes can only exist based on inside trading or some opportunity where it's an information asymmetry. And meme coins actually started as an idea and became very, very popular amongst retail traders because of the idea that VC-backed tokens or traditional token launches were full of those insiders. And there was the idea that memes are supposed to be these fair launches where people have these opportunities to get access to trades very early on, and that they don't have to worry about people who got in 5 or 10x ago, 4 years down the line in investment schedules that they never had the opportunity to. The unfortunate side effect, a lot of the financialization of memes that have especially happened over the last year, is that now, not only on the technical side with teams who are launching these, but also in terms of market makers or KOL groups or individuals who are promoting these things, we're seeing a lot more issues around insiders and tradings there. And obviously, there's been a variety of these, but Libra is probably the most timely of these going on right now.
Yeah, he said he was connected with Melania, a token also. He mentioned that the Trump token had a $5 million pre-buy before it was launched. So you're a trader in this crazy market. I mean, what are your thoughts on are you, I mean, you're in it, so you must be making money or find it profitable. So what's going on here? Are you an insider? I hope not.
No, not an insider. However, we are very sophisticated financial participants, so we're not the retail buying the top, $70 billion Trump coin. We're not. That's not us. That's not like the buy candle, just to be clear. But we focus a lot on understanding like blockchain microstructure, so we can trade efficiently. And there's all these MEV bots and all these people doing different things. I think meme coin started initially as this like pure, fun thing. People just saw something, it was funny, and then just start making money, and then it becomes very viral. People love something that's simple. They don't have to like read a white paper and understand all this stuff. They can just make a bet, and sometimes they make money. I think what's happened though is like this cycle has been a meme coin cycle, but we're really sort of like front running the learning process now, where the participants are getting so sophisticated. the criminals are getting so greedy, as we just sort of like saw. Like there's a certain amount of greed coming now, where they just want to extract it all quickly. They won't. They could wait, for the Malay coin. They could have waited and, hopefully make it into like a long-term project. But once they extracted it, I think a lot too quickly, then he disavowed, and then it's everyone just pointing fingers. So it's really good for the space that these conversations are happening. I think Hayden has done actually, maybe not himself a service. I see all the lawyers on Twitter commenting how he should not be talking about his stuff and plead the fifth. Actually, I think it's really good that we're getting some light shined on what's happening.
Because before it was so opaque.
Exactly.
And people had a theory or some thoughts about what might be happening behind the curtain, but he actually said all the worst things and made it public. But I wonder, since you're operating and trading in this market, how are you beating it?
How beating it?
Yeah.
So we're generally, market neutral in most of the things that we do, and there's always very arbitrage inefficiencies between exchanges, between different markets. So a lot of what we do is just keep things kind of in line, making markets efficient.
Are you running bots or?
Of course, everything's
Okay.
algorithmic. Yeah, I'm not sitting there trying to.
Okay.
Well, sometimes I am, but
Manually clicking buy and sell.
Okay.
Usually not. Yeah, so we have thousands of algorithms running constantly on every product.
Okay, one of the things that Hayden said with CoffeeZilla on YouTube was that, well, of course I had to snipe the cryptocurrencies because you have all these other traders that are sniping the cryptocurrency. And so I'm going to snipe it, I'm going to hold it, and then maybe I'll inject something on. I don't know what I'm going to do with it. He has sitting on over $100 million. What should you be doing to create a sustainable meme coin market?
I mean, that's an incredible problem to have. I have $100 million in capital and no idea of where to deploy it. I'm sure plenty of people listening have an idea of what to do with it. For Bonk, we spend a lot of time working on building sustainable companies and businesses where the idea is that they're long-term greedy rather than what Jordy was talking about with these short-term greedy ideas, where the businesses are supposed to be working on making their own fees and revenue, and ideally that's connected back to the token, whether they're using it as a payment currency or whether they're using it as a store of value in some way, shape, or form. And any token can be doing this, and especially in the updated regulatory markets that we're looking to see, more teams should be looking at these ideas of how do I pass value capture from a protocol level down to any of these tokens that are supposed to be a benchmark for the success or failure of any of these products. You run into issues with meme coins is this whole idea where people want them to have no value so that then they can theoretically have infinite value, where there's no definite models that they need to connect back to for how you value any of these things so that they can be worth billions of dollars. If you're Hayden and you're sitting on $100 million, you should probably be figuring out how does any of that help the country of Argentina, which was the whole point of running the project. So maybe give the money to the people who are running the country. That's probably a very good starting point for him.
Huh. Well, as the co-founder of Bonk, how are you creating a sustainable meme coin community?
Sure. So we focus on a couple of different areas where we think it's either providing people with tools to engage with the blockchain. These can be trading bots that they're engaging with, such as BonkBot. This can be interfaces that they're using to improve the wallet. So we do things like Pooper Scooper, which is designed to literally clean the shit out of your wallet and help solve a lot of the problems that you're seeing around spam transactions and NFTs. Or you're looking at ways that people are transacting directly, either in terms of the purchase of art or NFTs through platforms like ExchangeArt, or even the ideas around just purely trading other tokens through things like BonkSwap. There's plenty of areas at the application layer that interact with how people are spending their time on any blockchain and how they should be interacting with these applications that provide opportunities to gain value at the fee capture area. And those are how you're going to be able to build something that directly puts value back towards the token rather than relying on constant new market participants to come in who are essentially acting as the next greater fool.
Do you have to vet the people that come into your your investors, your community, because that they don't just come in and then dump your token?
Yeah, one of the great things for Bonk is that we didn't have initial investors. We managed to launch before these sorts of things happened, so we never had to worry about a Kelsier or any of these other individuals coming in. and what we want to see is basically how can we work with as many teams as possible in the startup grand thesis of launch hundreds of different products or protocols, and then when you find ones that have good value capture inside of their market or have the ability to be market leaders, then you spend a lot of time and capacity investing in them and making sure that they grow as quickly as possible. So ideally, anybody can build something on Bonk, and when we find a really good team that's working on it, then we help them as much as we can.
All right. Jordy, when you're making investments, what are the red flags? What are you looking for? And I guess when we're talking about the meme coin market, is it over now, or
That's a very good question. Is it over? I think that's kind of like the question that we were. I think things will have to become more sustainable, like you said. We have the two extremes. We have the pump fund where I think you just get like 3%, and then you have to get all these snipers, and snipers are fighting for the rest. Like this awful game with the sniping. Then you have Trump, who basically took 80% for himself or for his team, whatever. That's insane. Like 80% of the token is going to unlock for the next years, and they can just decide when to extract, what they can. That doesn't seem good either. So yeah, we need something more sustainable for allowing, just the right amount of chance to make it, where it's not like totally rigged against you. And I think some of these AI tools will be able to devise much better launch pads now that are more fair and like transparently sort of being run by like a neutral. I like AI agents because they're very neutral. Like they're not some guy with greed. They're just designed in a certain way. So in terms of investing in these things long term, I think. Yeah, like.
Can you invest long term?
I think some things like we call them meme coins, but the line is quite fuzzy, and some things started wanting to be like meme coins. A lot of real projects wanted to launch as a meme coin because it's a meme coin cycle, and they want the attention. So instead of launching as a real coin, they pretend to be a meme coin, but they're not really a meme coin. So I would say like that maybe is more sustainable because there's actually like
a utility behind them.
Yeah,
that they're just not a meme coin, but they actually were a project that decided to be a meme coin.
Yeah, so I've like helped one myself called Puff, which is on Mantle. It was a real project, and it's kind of based around the liquid staking protocol, METH. So Puff is like it's a dragon. It's an animal coin. It looks like a meme coin, but it's sort of like tied into like the utility of the ecosystem as well. Ended up getting like a very utility airdrop, and I think that was very successful. It got a lot of people engaged, and like everybody did well. Like nobody lost money. It's still trading, above. Basically, you can't really like lose money if you participated in like the early Puff days, or like at all really. So there's ways to use the fun and the kind of like the logos and then the excitement, and actually have like some fun, but like real businesses behind. So like BonkBot or like liquid staking, like all these things. So there's hope.
So be a real project and then become a meme.
That's the only way we can do it, I think.
Yeah. There's nothing wrong with having like a meme as an idea, but people eventually have to work together as the cult of the meme and create something, right? Otherwise, the cult just doesn't do anything and is just hanging out waiting to sell. Like you have to convert people from being enjoyers or people who just like the art or whatever it ends up being, and turn them into people who are helping to push the token forward and create things going forward.
All right, guys, thank you so much for joining us. We're going to still see more to this story coming later. That was a core contributor and co-founder of community meme coin Bonk, NomBonk, and Selene Capital founder Jordy Alexander. All right, we're going to take a quick break, but stay with us. More from Consensus Hong Kong soon.
and welcome back to CoinDesk Live from Consensus Hong Kong. I'm Leah Callum-Butler, and I'm here with my fabulous co-host, Marissa Chu. And it is not the first time that we've done this.
No, it isn't our first time, and honestly, I'm so excited to tag team again in a completely different geography.
Right, and like now it's in our stomping ground in Asia.
Yes.
So tell me, what has been your first, knee-jerk reaction, original takes on Consensus Hong Kong?
Honestly, I think crypto really had a tricky start to the year. There were a few stumbling blocks that really meant that everyone had to kind of recalibrate. But
To put it lightly, yeah.
But I think all of the energy that sort of converged into Hong Kong and the fact that everyone's invested their time and energy to come here and to basically show their vested interest, not only in growing out this region, but kind of letting the industry thrive in this pocket of the earth, is phenomenal. I think sentiment's been amazing so far.
Yeah.
No one seems fussed by the recent dramas.
Yeah, the vibes are amazing, actually. What's your take on, because we were in Austin, Texas together, so are you seeing any differences between the East and West communities?
I would say there's almost more of a financial grit to the industry on this part of the world. In terms of the general applications, I feel like in Austin we saw a lot more of general protocol activity, and here it's a lot more financial solutions oriented. It's not to say that the protocols aren't obviously very active in this arena as well, but the conversation seems to be geared more towards how are we creating digital finance infrastructure.
It's so true. I feel like we talk about this a lot. Like, obviously I focus on Web3 gaming, and we talk a lot about why have those kind of applications been picked up in Asia and not so much in the West. West is sort of going, don't financialize games, we need to get away from that. Whereas in Asia, people are really excited about that. So it's like a cultural difference in terms of being able to really embrace, I guess, the financial aspects of this technology.
Totally. The opportunities just look different out here. And I think what's amazing about that is it shows that this technology is versatile enough to suit a broad variety of use cases.
Yep.
And geographies are going to help dictate what those look like in particular regions.
Well, just before we dive into our first interviews, tell me, what does your week look like? Have you got anything exciting coming up? What are your must-see, must-do left for the rest of the week?
So I came slightly early, which meant that I had sort of a head start in experiencing Hong Kong, and I have to say that I recommend everybody go on a hike. The hikes are stunning, and the fact that they are centered right smack bang in the middle of the city means that it's a little escape, it's physically challenging, and it's honestly just visually stunning.
Beautiful. And also eat all the dim sum.
All the dim sum, but that's
All
the
the dim
fuel
sum.
for the hike.
Yeah, I love it. All right, well, I guess we should get started. So next, we take a look at the future of virtual economies with the Sandbox co-founder and COO, Sebastian Bourget, and partner at IVC Partners, Akio Tanaka. Welcome, guys. It's great to see you.
Same. Amazing to be here today.
We couldn't hear anything you guys are saying, but it sounded very exciting.
Yeah, the audio is a little bit challenging up here, but don't worry. Just let us know if you can't hear anything, and we'll make sure to repeat ourselves. You did just give me a little bit of a heads up just before we started this panel that you had something different that you wanted to talk about today, and I didn't get to hear it. So why don't you guys just take it away?
It's nothing different, but I just shared a conversation I had in Tokyo last December. And I was talking to other VC investors, mostly not from Web3, but Web2 world. And someone mentioned the keyword metaverse. And the immediate reaction from everyone there thought, metaverse? Oh, I thought that fad ended several years ago. Everybody there thought metaverse was dead. And then, because we have some portfolios in that space, I was talking this with those founders, and they told me, yes, actually, metaverse is dead for people above 40. And in fact, there's this very growing ecosystem of Gen Zs that actually spend enormous amount of time. And I was sharing some thoughts that we had. Obviously, there is actually more technically pure form of metaverse that actually provides full interchangeability, what Sebastian's providing. But there's also kind of a legacy metaverse systems like Roblox, Minecraft.
Yeah,
and some of the newer ones are Zepeto. And these ones have, I'm talking about people, 200 million plus people in some of those platforms monthly active. So definitely not dead. But for people 40 or above, unfortunately I'm one of them, it's actually dead. So obviously you have to actually know the market to go there. And I'm very excited to hear.
Before we just
Yeah.
go on, can I just ask, can you just define the metaverse? Because I think in Web3 we call it the open metaverse, so that you can have these open and permissionless spaces, which would not include things like Roblox and Minecraft. Like, how do you guys define the metaverse?
Let's hear from
the one that's
Sebastian.
alive. The one that's alive.
We're definitely not dead. We're kicking and alive. For me, like the metaverse is really this ability that you have as a user to take your digital identity, such as your avatar, and move along any platform, games, or virtual world. And not only your identity, but your reputation, all the content that you create, you earn, or you bought across those different games can follow you and can be used across them.
That's been that amazing original vision, right? Like, I feel like that's what brought me into the Web3 gaming space in 2020. I mean, where do you think we're at? Like, how close are we to actually achieving that vision?
I would say we're still in the early days of the metaverse. You know, every major technology disruption or shift will take probably 10 to 15 years to achieve. So we're like 5 years in, maybe. And so probably the biggest mistake that Mark Zuckerberg has done with Meta is like he promoted way too early the far science fiction vision that everyone is dreaming about. But he shipped a product that is very, very different from
underwhelming.
Exactly, how he set the expectation. And so we might reach that in 10, 15 years. But in the meantime, it doesn't mean like nothing is happening in metaverse space or that it's dead. Actually, companies like Sandbox, like Roblox, like Fortnite are still building the different layers of the interoperability, of the content creation we usually see, and delivering great content and great experiences in various fields of culture and entertainment. So people can take their digital identity in form of avatar and explore new kind of experiences. And lately we grown with more than 6.3 million users at Sandbox. The last event we did hosted over 500,000 players.
Wow.
That are like first step again, but we're getting there. Products are improving, experience are improving.
Well,
we have
and
to be
yesterday
patient.
too, we had a great panel here at Consensus, and I loved the fact that you said who in the audience are in Sand, who has actually played Sandbox, and the majority of the audience put up their hands, which was so cool. So congratulations on that.
You have a young audience.
Yeah. Yes. Yeah. Or
So-
young at heart, at least.
So one big question I have is, if we are, let's say, along a 15-year journey, we're roughly 5 years into it, what are the priority building areas that you're focusing on? And in terms of trying to draw in the younger generation of users, what are we sort of starting to drip feed that's going to help them seamlessly sort of enter this space?
I'll talk about it from an investor consumer perspective. Perhaps you can talk about it from the platform perspective. So we think that what's happening right now, we are training, educating the next generation. So for example, my kids, they spend all their after school hours on Roblox. And so they're already native people in virtual world, way more native than I am. But wait for them to get to high school and university, and when they start working, and they will probably discover the future version Sandbox. And that's, I think, where things will start clicking. And obviously, it takes time because we're talking about generational change. And so I think that's one of the key themes we are betting on right now as an investor.
What about from the builder perspective?
Well, I do believe we have to get started somewhere, and like focusing on the creator side first is important, like by developing the tools that empower a new generation of creators to bring to life their imagination with no code, with AI, allowing them to create new form of experience we haven't seen before, bringing top brands together to design experiences that we pair with those creators, and improving the user experience progressively. It takes time, but progressively we're growing as a platform where you will find differentiated content, a new type of experience where you can either socialize, explore, just play, compete, build, and we continue to also push for a vision where like we're collaborating and creating interoperability with other platforms to demonstrate the idea that your content is not just playable in Sandbox and all the different thousands of worlds that are on Sandbox platform, but into many other games. So step by step, getting better, a little improvement until we reach a point where like naturally a hit game, and you only need one hit game at the end to drive massively audience into it and build a trail afterward for others to follow.
I just want to add one thing is that some of the themes that Sebastian was talking about is already happening. recently we backed a team in Japan called Metaverse Creators. And the company was created when the founder realized after doing some research that there are now young creators whose main job is selling digital goods and their creations on Metaverse, and often in multiple metaverses. And they're actually earning like 10, 20 million US a year. So you're talking about like kind of esports like salary base or revenue base. So that's actually not future, but happening today. And obviously, we're still at the very beginning of this kind of transition into next generation of young people becoming metaverse native. So I think that's a very exciting theme for us to focus on.
I've got a follow-up question, if you don't mind. When you were sort of saying that the idea of the metaverse has fallen a bit out of favor, particularly with the mainstream, how are you seeing that play out with brand partnerships? Because I think the Sandbox had one of the most impressive lineups in terms of celebrity endorsements and brands. You know, what's that space like right now?
Well, it goes on. First of all, I'm quite excited. We're in Hong Kong. Hong Kong has been one of the leading markets for metaverse adoption and continues to do so. We have the largest number of like schools and universities who are educating about like the different jobs that are needed to participate in the metaverse, such as creators and experiences. We have like a metaverse institute that is going to open here officially to train people, and it's being recognized by government as well, which is giving grants to the students to explore those new technologies. And we have top brands from global that are like keep onboarding. Last year was Attack on Titan, a major anime and manga franchise from Japan. This year, I cannot tell it yet, but it's like a very massive Hollywood franchise that will leave like a giant footprint forever in metaverse. So I'm quite excited about that one. And I think it's important to keep showing as well a diversity of experience, not just top brand or music artists and celebrity, but also like cultural content. Like the British Museum is present in Sandbox. We had a collaboration with like opera and philharmonic orchestra play in the metaverse and so on. So we can show like the diversity and the richness of our culture from all parts of the world for people to explore, connect, socialize, and learn through that.
That's so cool. I know that you guys are working so hard to keep the open metaverse alive, so thanks for that. And I just wanted to say as a follow-up, what you were saying about education in the Sandbox, if anyone wants to see a use case of that, they can go to metaversefilipinoworker.com, and the final episode in this little mini-series about Web3 in the Philippines is all about a school which is teaching voxel edit in the Sandbox, which is super cool, so check it out.
It is. It's been the transformative experience making profound impact on the life of those kids, and now opening them a whole new opportunities, field of opportunity for them and their future.
Yeah, and amazing skills for the future. All right, well, thank you, Akio and Sebastian.
Thank you.
That was Sandbox co-founder and COO Sebastian Bourget and IVC Partners partner Akio Tanaka. So let's shift gears a bit and listen in at one of our stages.
But you know, liquid investing versus venture investing, you could be a little bit more fluid there. But those are the types of investments that we're looking at.
Can we?
Do you see that AI in combination with crypto creates a new infrastructure canvas like the smartphone created for applications like Uber and Airbnb? And if you see that, what use cases do you think of?
Anyone want to say that?
So the question is what use cases does the
repeat the question?
Yeah, that'd be helpful.
So Airbnb and Uber are typical use cases which were not possible before the iPhone and the smartphone. So nobody could think about that. Now I see or think we are seeing a new infrastructure platform with the combination of AI and crypto. Have you thought about that? What kind of use cases we can expect in the future?
Yeah. Okay.
Does this create a new ecosystem, a new platform for development?
Something that crypto enables that maybe would be hard to do without crypto.
Yeah, I mean, the thing I hinted at earlier, what I'm most excited about is one day being able to execute very complex strategies that you can pull off.
Hello, welcome back. If you're just joining us, you're watching CoinDesk Live from a sold-out Consensus Hong Kong. If you have FOMO, do not worry, Consensus is coming to Toronto, Canada from May 14th to 16th. You can get your tickets now at consensus2025.coindesk.com. I'm Leah Callum-Butler. I'm here with my wonderful co-host, Marissa Truth. And our next guests are paving the way for a Web3-enabled interactive experiences. We've got FlickPlay CEO and founder Parina Marino and Xblur CEO Paul Kim joining us now. Thanks for joining us, guys.
Thank you for having us.
Thank you very much.
Now, just for anyone who might be watching and they haven't heard about you guys before, maybe you can start us off by just explaining what kind of problems you're solving. Parina, do you want to go first?
I think like more of a problem, we're aiming to create a more interconnected world between our digital and real world experiences. We believe that the experiences that you have online should inform how they connect into your real world experiences and vice versa. So by creating a platform that really focuses on connecting these and using blockchain as the singular, borderless technology that powers the experience, we're aiming to connect more retail experience with gaming with real world access to create a global identity for consumers.
Got it. And access is a big theme for you too, I think, Paul. That idea of access, I think that's a very important thing for you too, right? What are you guys solving?
So XPLA is a layer 1 blockchain that is focused on creating a gaming and entertainment focused ecosystem on the blockchain now. We're developed by a company called Come To Us, which is one of the largest gaming companies from Korea. Maybe it's an old way of thinking, but our philosophy is that if you have the right content, people will come to you to enjoy the content, consume the content. It doesn't matter what chain you're on, what infrastructure you're utilizing. So we're trying to leverage the content and IP power that Come To Us has, not just in gaming, but also in the Korean entertainment industry. So we are trying to bridge over the Web 2 gaming and entertainment space over to Web 3. But my current priority is the gaming space. So it's creating the Web 3 gaming on the blockchain.
So to dig further into XBLA, what is it about the blockchain's design that makes it uniquely specialized for digital media content? Because digital media has been pretty pervasive within Web 3 overall, but no one's quite found the solve for it. So how is XBLA differentiating itself in that respect?
I don't think you'll see a lot of technological differences between not just us versus other chains, but just chains in general. A lot of tech stacks, for the most part, are similar. But what we're trying to build is an ecosystem focused on gaming and entertainment, where the support tools that we can provide, the design support that we can provide are more designed and geared towards content providers or content builders. So we're just trying to build an ecosystem, a playground, if you may, where content providers are, they feel more comfortable in building their vision of content on Web3, on Xblur. And hopefully we can, provide a, go-to place for people to come in and consume whatever content it may be.
So it's kind of about empowering creators with the digital toolbox they're going to require to actually interact within Web3 and address their audiences within that domain. Is that right?
Thank you for summing that up for me.
How does that relate to what you're doing, Parina? I know that you had a massive launch recently in Japan too, right? Like, tell us a little bit about how FlickPlay is a virtual toy marketplace, right? And I guess again, coming back to this idea of access, how does that take shape in your world?
Yes, we're big believers that location drive culture, culture drive identity, and identity drive purchase habits. That's how we operate in the real world. And the more we connect the experience of accessing, because I think that there is a big paradigm shift on the order of access to things in Web3. Normally you buy a game, through the game you get locked into the game mechanics, and then you buy skins to build your identity within it. And I think that the offer discovering of using blockchain technology is that that skin can give you access to a broader spectrum of experiences that are connected to the identity of that specific character, right, or digital asset. And when you connect that to real world locations where the culture of location or the access that specific access can provide you links to how you go to a coffee shop and you are able to unlock something specifically, or how after you get home, you can actually use that asset that you unlock in a corner in Shibuya to play in a game using a skin that is connected culturally to Japan, right? So we recently launched in Japan in partnership with Bandai Namco, Pac-Man specifically, and the city of Shibuya. So it was a massive initiative where we onboarded over 60 different retailers that were fans of Pac-Man, were able to go and unlock a very exclusive collection of digital characters that provides them access to digital experiences that enable storytelling, discounts, and so on online, right? So this is the inception point as we plan to continue to expand the map footprint with the different IPs that are in our ecosystem.
I've got a follow-up question, if you don't mind. Like, you guys have worked with some really big brands, like Bratz as well, things like that, I remember. So, and this is a question for you too, Paul, because I know that you guys have some amazing IP in terms of gaming IP on your blockchain. How are you getting these Web 2 or traditional brands on board, and like, what is some of the pushback that they have when they're trying to move into this new exciting space? Maybe you want to start, Farina.
Yeah, so I think that it's one of the challenges we face in Web3 is that there is this expectation that there is an overnight success, right? That normally goes really high and then goes down. So I think as a company, we have put a huge focus on showing the long-term value and the paradigm shift that it's creating not only at a consumer experience, but also at a potential new revenue stream that differs from all the traditional ways in which they have historically monetized, right? So we really think about our partnerships long term, and we show them how FlickPlay is an on-ramp to that experience, how for the first time they can actually own their customer. And I know that there are a lot of conversations around what does it mean to own your customer, but today, any of the big IP partners, if they launch a new experience, they still go to Meta, by advertising to hopefully reach that customer, right? So the idea of being able, through location, connect one fan with one of their favorite character and enable that to be a global access to experiences is something that they see a gap right now in the way their different business units work, and that FlickPlay is working to solve. So I think like just that upfront value added for a problem that they're looking to solve, and how from an experience layer, like I think like something Bandai Namco told me early on about Web3 is that oftentimes builders goes to them and they are trying to teach them on how to build community, when the reason why they exist is because for 45 or 60 years they have fostered communities, and that they do not really sell a product without an experience, right? And I think that experience layer is something that for the past 4 years we have like really looked to foster, so that we can get partners like Disney, Bandai Namco, MGA, the creators of Bratz, Baby Shark to onboard into our ecosystem.
What does that look like for you, Paul?
Think about it from a game perspective. So for a lot of the Web2 gaming studios, they're afraid of jumping into Web3, and one of the biggest reasons for that is their current user base. For vast majority of them, for lack of education around Web3, they are very hesitant in adopting Web3. So in turn, that forces the gaming studios to be cautious when it comes to jumping into Web3. Now, for us, we've made that change as a company, but there's another piece to this where these gaming studios they don't know how to monetize off Web3 games yet. It's not the easiest thing to do at the moment. And we're certainly not monetizing yet either, but we do believe the future of gaming is in Web3, enabling the ownership of digital assets and making the entire gaming experience new and bring disruptiveness into the industry is going to be good for the industry. So those two areas, I think, are the reasons. Yeah.
So dialing into the way brands have evolved their relationship with Web3 protocols, like both of yours, is in 2021 when we sort of saw the play to earn boom. I think brands initially saw a quick monetizable opportunity, and when that didn't really come to pass, that introduced a lot of skepticism. But since games have evolved so much since, and development has changed, and like the industry has matured. And as you rightfully said, there's been a paradigm shift that have made these brands a lot more receptive. Have those sorts of mechanics start to mature as well, or are brands sort of ready to receive this opportunity and experiment more willingly without necessarily knowing the final answer yet?
I think that there is undeniable signs that changes need to happen on how things operate today. I think that if you look at the music industry and how the labels used to monetize music versus how they were forced to evolve that with the emergence of YouTube Shorts, with the emergence of streaming, with the emergence of Spotify, it forced them, they almost hated to start with, but then they had to adapt, and they realized the impact that short form of content start playing their long tail game of creating adoption. And I think that we're at that early stage still of change. I think like for indie games, it's easier to prove how these new monetization models could operate within a singular more Web3-driven community. For bigger companies, there are a broader scheme of metrics that will actually drive them making harder or stronger decisions on how these become new revenue streams. But I think it's happening, and I think that companies like FlickPlay and companies like yours that have, in a way, some sort of responsibility towards guiding how they could potentially see Web3 and new revenue models. That's where the exploration is happening right now, and I think like that's a big drive of their interest, to selective interest to participate on it.
So it's a bit of resetting expectations, but also not discouraging anyone from actually actively and openly experimenting without a predetermined outcome.
Correct. Like I don't think that there is any like written science today, because it's very hard to replicate some of the success of some of the more Web3 native economies within like mainstream audiences today. But I do think like there is like an open exploration, because even if you look outside Web3, there needs to be change. Like if we look at overall distribution of Web2 games, they're struggling to figure out their way in the market. So I think like that gives Web3 an opportunity to get in, right? And I think that that's where the potential, I believe, is in the next 2 to 3 years. Yeah.
And Paul, do you share that sentiment?
Yeah, I mean, with your initial question, I think the state of Web3 right now in this current market environment tells you everything. We are in that transition phase from in 2021 to 2022. Like you said, it was all a lot of speculative games where with the pump and dumps. Now, I think Web3 gaming projects are realizing that that's not a sustainable way to grow the Web3 gaming space. And I think it's worthwhile to take this time where the eyes are off Web3 gaming a little bit to focus and really build something that we can trigger a mass adoption of Web3 games from Web2 to Web3. And certainly we are trying to do that as well. And we believe in the sustainability aspect of it. And as you may know, like the number one goal for Web2 gaming studios or gaming studios in general is to build a successful game, launch it, and to operate it for as long as possible so that they can maximize the ROI on the games. So far in the Web3 gaming space, that has not been the case. There's rarely a game that's 1 year old and that's still around. So we need to change that in the Web3 game space and really strive towards more sustainable Web3 gaming environment.
Yeah. Well, it may not have happened yet, but I feel very bullish that it's coming. It's coming. Yeah. All right. Thank you, Parina and Paul. That was FlickPlay CEO and founder Parina Marino and XPlus CEO Paul Kim. All right, next up, Frank Mong joins us. He is Nova Labs' Chief Operating Officer. Nova Labs is the developer behind Helium, which has been transforming the way that we think about wireless networks. Welcome, Frank.
Hi, how are you?
Very well, thanks. Now, look, I don't want to put you on the spot, but I've been on X this morning, and I don't know if this was actually something that you've officially announced yet, because it wasn't part of our show notes, but I did see something leaked about a massive partnership.
Mm-hmm.
Can I ask about it? Will you let me?
Wow, you guys are good. I'm sitting next to some killer journalists here. I'm a little taken aback by it, but yes.
It seemed like a bit of a surprise.
It is a surprise.
Out there, yeah.
For sure. Our friends at Telefonica, I think, unfortunately, got the wrong date and I think released some news that was meant for tomorrow. But needless to say, we've been partners with them for a couple of years now, and we've had a pilot in Mexico with Movistar. That pilot has gone on for a little over a year and has gone really well. And so we do have some great news coming tomorrow with a lot of details, but clearly you've already read that.
Well, for whatever X told me anyway. But yeah, congratulations. Like Telefonica is huge, so well done.
Thank you. Thank you.
So while the bad news is that the news hit the headlines ahead of schedule, the good news is that it is, in fact, good news. So tell us about how this fits into Helium's vision for really bringing this digital connectivity into the real world and bridging blockchain into something that's very tangible for the everyday customer.
Yeah, you know, given our mission has always been to create internet access for every person and everything from a perspective of little sensors and so forth. This conversation in partnership with Telefonica, as well as many others, really allows us to expand the network very quickly on the one hand. On the other hand, it really brings what I think is a problem in crypto, which is the demand. Where's the usage? Where's the utility on that? And I think in things like some of the things we've done, whether it's with our partners at T-Mobile or now with Telefonica, it's really onboarding millions of users onto a crypto-powered network. And that's really what we're trying to do. We're trying to do that actually under the covers, because I think that's the other problem in crypto, which is everything seems a little complicated and strange for the average person that's non-technical. And so we want to make that streamlined. I don't know of a better way to do that than your phone plan that just works. And you don't really care what's powering it. Is it crypto or something else? It doesn't matter. As long as it works and you have access to the internet, you're happy. And that's really our mission now at Helium Mobile, is to do that.
So it's essentially doing what infrastructure was designed to do, which is to underpin everything without necessarily making itself obvious or frictionful.
Yeah, absolutely. It's just giving you like usage that's as smooth as butter is what I like to say to our product teams. That, you know, it's got to be better. Whatever it is you're going to do with crypto, it's got to be better than what you have today. So from a Helium Mobile perspective, that's a free phone plan. I can't think of anything better than that. You have access to the internet, no gimmicks, you don't lose your privacy, and it's free. But you don't need to know that it's crypto that's making that happen. You just need to know it's better.
And so you just mentioned the Telefonica thing, which is very exciting, but that's a big Latin America type play, and we're here at Hong Kong. How does APAC fit into your growth strategy?
Yeah, absolutely. APAC, Hong Kong, Seoul, Tokyo. Like these are all cities that we've traditionally had really strong communities in. Our Helium IoT network that we launched 6-7 years ago has a ton of people, and the network exists here in Asia. I think for us, it's a question of how do you strategically and tactically execute something that's a little bit more close to home with your cell phones. How do you get, Asia lit up with a cell phone plan that's free? And who do we have to partner to do that with? And I think for us, we're being much more methodical this time, going country by country and trying to figure this out versus a sort of shotgun approach. Partly because we've had success, so we understand what it took to really win. But when it comes to your cell phone, I feel like the margin of error is far less. Like that thing's got to work all the time. And so we're learning quite a bit as we go along. And I think once we have it dialed in and tuned, and you'll see this in Mexico next, I fully hope that we have partners that come out of this, both in Hong Kong as well as in Japan and in Seoul.
So the other benefit, and I guess necessity to a successful mobile network, is its ability to have connectivity absolutely anywhere. And given how fragmented APAC generally is, making sure those underserved, perhaps more rural areas are as connected and as online as everywhere else is going to be critical to any mobile provider's future in this region. So how does Helium basically want to penetrate those areas and make sure that everyone's covered?
Yeah, one of the things we've learned over the last, I would say, 2.5 years in our efforts within cellular is that when you're outdoors, in most countries, not all, in dense areas, dense cities, it works. There's cell coverage. Where you run into problems that's fairly consistent is indoors. A big conference hall like this, or when you're in these modern buildings that are basically surrounded with what I call cyberglass, glass that's got metal tint painted on it for efficiency reasons. That creates what I call the Faraday cage, which is it keeps the signals stuck inside. And when you're in that situation, you actually need a cell tower indoors. And I think that's where Helium and our community come in play. Our technology is meant to work indoors, and we've simplified it and we've cost reduced it to like $200. Where you can put a Helium hotspot indoors, creating a cell tower inside. So phones can easily connect indoors. And I think solving that problem, which cell companies and telecom companies have a hard time doing because of the CapEx expense, we figured out with token economics on how we can actually defray that cost across many people, millions of people. But they own parts of that. They own that network themselves.
Can you tell us about the incentive system? I'm not sure how it works.
Yeah, the token is Helium Network Token, and it's a utility token. There's two parts to it. There's a token that is mined through sharing the internet, and the other part is when you pay the blockchain to use the services, it's a data credit. So there's a Helium Network Token and data credit burn and mint equilibrium that we created years ago. And so that's all running on Solana now. And that's the token that makes this very interesting. Because now the more usage, the more data on the network, the more you're putting pressure on HNT. You have to burn the HNT token to get the data credit. So the mission of the ecosystem today is to get to like a petabyte or 2 petabytes a day of data going through the network where you're burning millions of dollars of HNT. We're currently about 50 to 60 terabytes of data per day, which is great. We have about 450,000 users on it every day, just in the US and Mexico. And so I think as we expand in other countries, we get closer to our goal.
That is so impressive. I feel like DeepIn is one of the hottest topics of today, but you guys have been doing it for ages. So congratulations.
Thank you.
It's so good to see a use case that is really being used.
Thank you.
Also in emerging economies too, all around the world. So well done.
Definitely. Thank you so much.
Yeah, thank you. All right. Thank you, Frank. That was Nova Labs Chief Operating Officer, Frank Mong. And then just... All right, next up, we explore digital identity and data privacy with Humanity Protocol CEO Terence Kwok and Privado ID co-founder Evan McMullen. Welcome, guys. GM indeed. All
I
right.
actually haven't heard that in a while, which is wild to me.
So, we live in an age of deepfakes and AI, and both of you guys are solving this problem in your own way. So, can you briefly tell us how each of you are tackling the problem? Just give us that elevator pitch.
I think maybe Evan, you can go first.
Okay, sure. Thank you, Terence. So at Privado ID, we are scaling unified identity. This means the ability to prove once and use forever the traits that make you you, whether it's the fact that you are a person and not an AI agent, your KYC status, location, age, and more. We've also recently introduced the KYA, or Know Your Agent framework, that allows us to easily assign an identity to an instance of an AI agent and to confer it with privileges and rights based on the party behind it. That goes for both individuals and organizations. More than 50%, it's estimated, of internet traffic today comes from unaccountable bots. And accountability requires identity. So to scale a safer and less fragmented way forward on-chain and online, this is the strategy that we think is going to be the most feasible, approaching a mobile-first, friendly, and legal solution.
My God, prove once and use forever. Like, I think we underestimate how good that would be.
It also sounds like a digital passport without an expiry date, or like a know your customer situation, but online.
Indeed. And of course, you mentioned passports. Vital data that comes from authorities, such as governments or businesses, can also be a useful part of our identity and the privileges that we bring on-chain.
Got it. All right, Terence, what's your story?
Yeah, so with Humanity Protocol, what we're building is an identity-focused blockchain. And then I think for us, a little bit similar to what Evan's working on, we want people to be able to prove certain things and not have to do it over and over again, right?
Yeah.
Like when you look at signing up for a crypto exchange or this, and you're going through KYCs, all the time. But I think for us, one of the very core things that we're starting with in terms of human attributes is whether you're a human being to begin with, right? And I think it's pretty crazy if you think about how 2 years ago saying, "Hey, I need to prove that I'm a human being," people would think this is pretty absurd. I think now it's really important with ChatGPT for content, and then your deepfakes and all that sort of stuff. Even in Hong Kong, I think it was last year some company got defrauded with north of $100 million because the CFO pretended, and then they were on Zoom and doing all that.
I remember that. That was so scary.
So I think for us, we're building an identity blockchain where we're starting with proof of humanity. So using biometrics, a little bit similar to WorldCoin, but using biometrics to verify that you're a unique human being. But then down the road, adding in different sort of attributes that we also want to prove with identity validators, right? Starting with, as Evan said, maybe it's your education, maybe it's where you work, different sort of things that we also want to allow people to prove. Because frankly, I think it's going to be harder and harder to know what's true or not, especially in the online world as AI develops.
I think what's so critical here is we're talking about these mechanisms of ensuring digital safety, especially in the age of AI, and basically knowing what we're up against, especially as to Evan, your statistic, there being 50% of unaccountable users online. But then when it actually comes to the end users that we need to onboard and to have these people prove that they're human and have these people effectively own their data, but in an arena they might be unfamiliar with, namely blockchain and Web3, what does that onboarding path look like? How do we convince people that this is a necessary step for their own good?
So no one wakes up in the morning with dreams of logging in. What we need to do in order to scale this technology is to make sure that it is purposeful, that authentication and identity are simply steps to access other services, benefits, and capabilities that require or can be secured by that data. When it comes to onboarding human beings at scale, people eat with their eyes first, which means that friendly, user-facing applications are the way forward. when we look at markets such as Hong Kong, where we are right now, and the greater Asia region, we see a bit of a difference in terms of application experiences that folks have, more sort of toward a super app view of the world versus Western markets that are often a little bit more specialized in application functions. So I think identity cannot be a one-size-fits-all technical solution. We need to have a flexible framework that can be modified for different jurisdictions and different user patterns.
Terrence?
Yeah, so I think, user experience is one very important thing. The other thing that we're trying to do also with humanity is focus on sort of certain use cases that we think are nobody's dreaming about logging in, but at least, sometimes you're forced to log in, right? And so, for example, with sort of the proof of humanity sort of piece, proving that you're a human being, we're launching, for example, a platform for fare drops, so that, instead of airdropping your tokens to farmers and people who are abusing the rewards, we kind of want this to be we kind of want to be rewarding like real users and people, right? And then, when we look at some of the other types of credentials, I think ultimately, because my background, I come from sort of a more traditional enterprise and hospitality technology background. And so we sort of sometimes think about how to do this in a B2B2C way almost, right? And so, some of the other credentials, we might actually say, hey, you know what? It's pretty broken when you want to hire somebody and you have to do reference checks and figure out, that the person actually worked there, that the person actually, go to university there. So, like we're creating sort of products or, investing into ecosystem partners that are creating products that could potentially solve some of these real world problems.
And I think that's where things get really interesting because, Evan, going back to your point, making things regulation friendly, especially as you span different geographies with different regulations, and then also how you eventually tackle the end customer, whether it's via B2B2C route, a B2C route. There's so many ways that this can be cut. But how should this be done in your view? What is the optimal way forward? Do we start with regulators and businesses to basically say, if we streamline this, the users will follow? Or do we come the user way first so that they're more familiarized with the new protocols they have to abide by?
I think, businesses definitely, I think, well, two things, right? Businesses and regulators, I think, are still very different sort of things, right? So regulators, I think, especially with data and identity, I think it's going to be a little bit slower to adopt these things, and generally it's pretty diverse, right? Every single country, every single market. There are some probably countries that are a little bit more forward-looking, that are creating digital IDs, but for some countries, like the U.S., you don't actually even have, a national ID, right? So let alone, a digital version of it. So I think that's going to be a little bit slower. In terms of businesses, I think ultimately, as you guys were mentioning, there is probably going to be a need for some of these verifications very, very soon, right? I was just talking to a friend who was telling me that he hired somebody recently who claims to have gone to UCLA, but it turns out he did a summer course there.
Oh my God.
Right? But he put down UCLA for my undergraduate degree and all that sort of stuff, right? Like so having the ability to verify some of these things will become more and more important, I think.
And I mean, you could verify those things, but it takes so long at the moment.
You'll have to,
call?
He said, he'll have to call up the university, pay $250 to get an official transcript, and then wait, 3 weeks for that, right? So, so I think there are these things, and then even in the on-chain world, when we think about credentials, like when we think about RWA or even enterprise DeFi, it will. I think at some point regulation will come into play. Like, so you can't just do whatever you want. But I think there's going to be resistance for people to do a full KYC, on every single DEX that they want to use. And frankly, most of the platforms probably don't really care about doing a full KYC. They kind of just want to know if you're sanctioned or not. Or maybe in the case of certain securities, they kind of want to know maybe if you're an accredited investor or not, right? So there's if there's a way in which we're building to sort of allow for these verifications without revealing all the other stuff, and you kind of just do it once and you don't have to do it again. I think these are sort of products and services that will really make a difference.
Evan, I just got one quick final question. You guys are empowering users to take control of their own data, but when they're suddenly in control of their own data and, it's going to be self-sovereign, how do you actually empower them to know who they should share it with, where they should share it, what the value of it is? Like, how do we get to that stage?
So the last thing that we want to do is bring stress and more homework to end users around the world with this additional layer of management. And so that's why appropriate designs, such as how Privado ID builds using zero-knowledge proofs to prevent the accidental exposure and sharing of clear text data to unwanted parties. We can make technical design choices to prevent the complexity and difficulty of these interactions in a more secure manner. I think one thing that I'm really looking forward to in the next few years is scaling up some of the early experiments and partnerships that we've built out at Privado ID with government entities, enterprises, and even, as we were alluding to earlier, universities. And so it is through the development of these use cases that we can determine what path is going to be most appropriate and how we can make this as little headache and as much delight as possible.
So it's all of the ownership, none of the accident risk. Minimal.
Guys, this has been such a great chat. I've always thought that decentralized identity makes so much sense, but it's really, really hard to achieve the vision. So I'm glad that we've got guys like you building it for the future. So thank you.
Well, if we want to coordinate anything on chain besides treasury allocation and over-collateralized lending, we're going to need to verify a little bit more about one another. Thank you guys so much for having us, and I'll see you on chain.
Yeah, thanks for having us.
See you on chain for sure. Thank you, Terence and Evan. That was Humanity Protocol CEO Terence Kwok and Privado ID co-founder Evan McMullen. We're going to take a quick break, but we're going to be right back, so don't go anywhere. Hello and welcome back to CoinDesk Live from Consensus Hong Kong. If you're just joining us, we've heard from some of the brightest minds shaping the industry right here at this desk and on our stages. Up next, we explore the intersection of ticketing and Web3 with KYD Labs co-founder and CEO Ahmed Namale.
Hey guys, what's up?
Welcome. How you feeling, mate? How's
Feeling
your Consensus treating you?
Honestly, slightly jet lagged, but happy to be here. A lot of great energy in the space, great builders, and obviously an amazing conference thrown by y'all. So, yeah, excited to be here.
I think jet lag is sort of par for the course for anyone who's working in Web3. I've never met anyone who's always been on the time zone that they're supposed to be in. All of our circadian rhythms messed.
Absolutely.
So you and I have actually had the privilege of speaking before, but to those who are perhaps unfamiliar, can you give us a little backgrounder into KYD Labs and how your background in Live Nation, Ticketmaster, and Vivid Seats has sort of fed into that vision?
How am I going against my former employer?
Call them out.
Former. So, going back to it, it starts off, I'm the son of a musician. My mom, Somali and Ethiopian refugee, came to Canada for a better life, and I'm not creative at all, and I tried my best to live through her in ways like being creative, and working at Vivid Seats and Live Nation taught me that artists and venues really don't have control of their futures. And in a world where fans are hyper digital on TikTok, on Instagram, and on more digital means, emails and radio no longer cut it. And making artists and venues successful at marketing, selling their tickets, owning their distribution was something that's not being done by the incumbents today. So at KID, we created a vertically integrated solution that not only empowers venues and artists to sell their tickets and own their relationships with fans, but also have the capital to produce the shows they need without taking, in my mind, very predatory loans from ticketing companies that lock them into these ridiculous deals that don't benefit anybody. Ultimately, fans shouldn't pay mortgages to see their favorite artists, and artists and venues should own that relationship in a way where they benefit from the values that the fans give them. And yeah, that's kind of comes from our namesake, KID, keep your distribution. And me and David both stand by that, and we hope there's a day where artists and venues all own the People's Ticketing Company, which is us. We're an operating system, no more, no less.
So it's clearly a very disruptive model, and it's very much one that's designed to uproot a lot of the incumbents that hold just too much of the power. But when it actually comes to developing this relationship between the users and the artists, or the fan bases and the artists, what does that mechanic look like? How are we onboarding both sides at the same time so that people have a much more direct relationship with the music or the art that they love?
It really starts with the venue, and I think there's been a lot of failures in the space to understand the nature of the business. Artists, when they go into spaces like venues like a Madison Square Garden, those venues have deals that range from 3 to 8 years with their ticketing companies, so the artist is forced to use that. Where we started is working with venues and using those deals to be able to provide value to artists. So working in and getting those exclusive deals allows us to work with hundreds of artists at a time, building those relationships and baking those in, and working with the value chain as it stands today. Ultimately, if you deliver a solution like we do that enables fans to be rewarded for going to shows and artists get their data, when they leave the venues that are powered by KID, like Le Poisson Rouge in New York, they walk away with more than they would walk away with a Ticketmaster. They walk away with audience understanding, their analytics, and furthermore, a filled room, because we looked at this objectively, and our venues have too. We sold 51% more than a legacy incumbent. And that's why switching over to KID, and that's the KID effect. And I think, that's what we continue to drive. And, we're further on building adoption. And like we like to say, we're taking back all of our venues one by one across the east to the west coast.
I got to apologize that I called it KYD. It's KID. Got it. I'm not going to forget now. But I wanted to ask a follow-up question on that. So, Marissa was asking about how do we get those users onboarded. Yep. What does the Web3 element actually look and feel like for your users? Because that's been a big theme. We've been talking a lot about, how do we bring noobs, total new people into this space? And sometimes the Web3 elements are very high friction, let's say. So what does that look like for your platform?
So, when we started KID 3 years ago, we created a platform that it was completely custodial. So our fans never interacted with wallets. They didn't even know it was on chain, nor did our customers. Today, if you look back last month, we sold more than 500,000 in tickets to over 15,000 unique fans, and none of which knew about the Web3 component. They all went to see their favorite artists and shows in New York. Ultimately, the relationship starts with delivering a great fan experience. It doesn't matter if you're Web2 or Web3. It's fans want to go see their favorite artists, and they want to do it as fast as possible. And with KID, you're not buying from KID Labs. You're buying from Le Poisson Rouge, Action Bronson, Travis Scott. You're buying directly from the source. So for us, we got to make the artist look good. We got to make the venue look good. You can't have a complicated solution. So in short, we act as an operating system that's simple and clean to use, and fans don't know that it's Web3.
So obviously the relationship between artists and their fan base goes well beyond ticketing. So how else is KID Labs sort of facilitating a bit like a broader experience just as an operating system?
So we're diving deeper into point of sale. So enabling artists and venues to actually integrate their ticketing with their point of sale, like merch, buying drinks and concession, so that artists can go and say, hey, if I go on tour, it's going to cost me, X amount of dollars to get fans to buy tickets, but also buy X amount of merch, and also they're on Meta or Instagram. And down the line, when you look at payment processing, it's 2 to 3% at these at concession. So, stable coins are a great way to bring that number down. And when you're doing tours that generate tens to hundreds of millions of dollars, 2% is a lot of money. So ultimately, we want to get to the point where we go from the marketing and ticketing funnel, and later this year to point of sale, where the complete user journey is on KID and the artist has access to it, so they can plan their tours, they can book opening acts, and their agents can also plan properly for their careers. Ultimately, owning the vertical as a system rather than as a company.
I feel like partnerships must be really, really important in the music industry. And I'm interested to know, do you have any exciting ones that you can share with us? But also, how do you even approach those conversations? Because Web3 can be intimidating. Like, even if the technology that you've built is designed to onboard people seamlessly,
Right.
even sometimes, just the language that we use can be a little bit scary. So, yeah, how do you approach that?
I talk in simple terms, always.
Wait, what?
Simplify.
You got to be simple. When venues ask us, when we're pitching venues on using Kid versus Dice or Ticketmaster, it's why should we use you? We help you sell more tickets on TikTok.
Nice, clean, and simple.
It's clean, and they're like we give reference checks from our our venue customers, and that's really it. But looking at partnerships as a whole, we have a few exciting ones that we'll be launching and discussing at the end of the year. Closer to June, hint, hint. But we don't look at partnerships in our space as a winning quality. We look at customers. So venues that are joining and signing on Kid for 4 to 5 years, and at that point, we look at that as a win. Working with record labels, working with agents is just a part of the process. And it's something we do with hundreds of artists we service every year, and it comes with just having good customers.
So it's kind of like an incremental disruption in that you need to know where you need to continue playing the same game, but also understanding where Kid Labs can really facilitate change.
Correct. The music industry is one that is very opposed to change. So working in an incremental way, starting at the venue level, getting that exposure, working with them for years and building up your reputation across venues in the US is a good starting point for us, and we hope to be across 100 in the next 2 to 3 years. We're on a good route to that, and we're excited to announce some great things at the end of the year this year. But ultimately, it's, partnerships come from the fact that you work with great artists, you come from working with agents consistently. And we hope to announce a few big customers, some of which in New York are going to shake some things up, and I'm stoked.
You can tell us off air, don't worry about it.
Can't. We'll be sharing more closer to Consensus Toronto, so
We'll keep our eyes and ears peeled.
Pardon?
We'll keep our eyes and ears peeled.
Oh, it's going to be great. It's going to be fun.
Well, that is awesome. Unfortunately, we've run out of time, but I was just going to say, I think a lot of people have had their eyes on the music industry for a very long time as a space that is super ripe for disruption. So exciting that we've got someone like you who's actually going in there with simple language that doesn't scare people off to actually make it happen.
Well, it's a group effort, right? We all work together as fans, creators, and my simple language hopefully is a pathway for other people to build on us. And we believe in the future of music and the future of enabling artists to own their relationships and fans to own their futures. Like, it's kind of, this is the dawn of time. We've all went to concerts to celebrate and be around the people we love. And I think that's kind of being taken away from us. And I hope we can bring that back where it's affordable.
I love it. Well, thank you, Ahmed. That was Ahmed from Kid Labs, co-founder and CEO. So let's head over to the conference and listen into one of the stages.
Eric, for speaking with us. Unfortunately, we're out of time.
Cool, perfect.
And thank you for being here.
Thank you very much.
Okay, next up, we have another fireside chat, this time with the other big Eric from the crypto space, Mr. Eric Anziani, CEO and president of Crypto.com. Eric. Oh, wow. It's so exciting to talk with the two biggest Erics in crypto. It's an exciting time, right? Have you been to Hong Kong before?
Yeah, I mean, we actually started our journey in Hong Kong. We have a lot of great people, and it's so great to see Hong Kong coming back into the space, launching their new regulation last year, onboarding new players in. So it's super exciting, and I really love the energy. Everybody's here for Consensus, so it's great to be here.
Yeah, and welcome to Consensus. It's great having you here. So let's just dive into it.
Let's do it.
I think we'll start with the same question I asked Eric from Big Panda. What is your take on the major difference between this cycle and the previous ones?
I would say the first point is institutions are finally in.
Yes.
Over the years, if you've been in the crypto industry, we always say institutions are coming and they're coming, but they're never there.
Yeah.
And I think in January of last year, when the Bitcoin ETF in the US was approved, I think that was a momentous milestone for the industry.
Right.
And if you look at the inflow that has come into this ETF, it's above $100 billion now. It's about 5% of Bitcoin is in the ETF.
Yeah.
Traded volume is 700 billion. It's massive.
Yeah.
So I think that is a huge difference. We're seeing institutions coming in, participating, recommending also to their clients allocations into digital assets, 3 to 5% of portfolio. This is really big. And I think it's a very huge new flow that we're seeing in the industry. I think the second point is around regulatory clarity. Of course, the big elephant in the room in the US, we didn't have that the last 3 years, but I think with the new administration that really want to bring back the US in the leadership position in the digital asset space, we're going to see that clarity coming in the next couple of months. So that's going to be a big one, and everybody's looking at the US right now, and we're actively contributing and participating in those conversations. Other markets like Hong Kong brought that clarity last year. In the Middle East, in the UAE and Dubai, 2 years ago we had VARA, and then some markets were a little bit ahead of time, like Singapore or France, like 5 years ago they already had that.
Yes.
But the last 2-3 years we're seeing that regulatory clarity, and that means as a business we can invest, and we're confident that we can do that safely. The last aspect I would say is AI and maybe tokenization, which is starting to pick up. All our lives have been changed by LLM and an AI revolution for the last 2 years. The pace of innovation there is, I would say, is even more than what we're seeing in the crypto space, and it's already quite fast-paced. Yeah. For me, when you look at the impact of AI in our life, it's going to be the creation of all these AI agents that will provide services, different level of expertise in different part of the world to help you in education, in health, in different domain. And all these agents, there will be billions of them, will transact, exchange value. So we'll see trillions of transactions between AI agents, and all of that will happen on the blockchain. So that ledger that enables value to be moved is going to be used massively in AI. And then on tokenization, again, institutions, they started with tokenizing fiat money, USD primarily. Yeah. Now it's about $200+ billion of fiat money tokenized, USDT leading the pack quite heavily. And then now we're seeing new financial instruments being tokenized, treasury bills, money market funds, and more instruments to come. And then we'll see maybe down the road in specific markets, like assets like real estate and others coming also to the blockchain. Yeah. So for me, those are kind of the 3 major trends that I see that are quite unique to this cycle.
Yeah, I'll just touch upon one point that you mentioned, like regulation is so important, right, for a centralized exchange. I mean, you can't do anything without it. Do you think the need of the hour is having separate crypto regulators, or do you think it still needs to be under the overhang of the central bank or the securities regulator? Because as you said, crypto, like 2 years ago, we would have never thought AI would intersect with crypto, or we would be here, right? So the industry changes so fast. Do you think it's better to have like a dedicated regulator?
I think what's most important is having fit-for-purpose regulation. Whether we have a new regulatory body like we have in the UAE, or we use existing regulatory bodies, I'm quite agnostic to that. Okay. But the regulation needs to adapt to the asset class. I would say most assets are probably commodities-like type of assets. Some are going to be digital collectibles. Some are going to be e-money, especially the stable coins. And then in very rare cases, they may be security. Like if we actually tokenize a security, the tokenized asset is also a security. Yeah. So I think based on the nature of the assets, then we have to have the right regulation framework. And who manages that? Is it a dedicated regulator? Is it different regulators that have expertise in their asset class? I'm quite agnostic on this front.
Okay. And talking about, I think, the most important thing for any crypto exchange, expansion, right? What are the regions sort of in your crosshairs right now for 2025?
We said institutions are in, right? Yeah. So I think our main focus in last year was really capturing that new flow. So this one is a more global trend, and then we can go to the regional aspect. Our advanced platform, our exchange venue, became the #1 USD-supported platform in the world. Last quarter, we did more than $1 trillion of volume on that. We built a very strong OTC desk. We just got, a few months ago, a qualified custodian in the US as a trust core, and in Singapore as well. So we really built very strong offering for institutional clients, whether they are the big asset managers or the market makers that contribute into the ETF flow and can deploy their strategy on our platform. So that has been very exciting journey to see the last year. If we look at market in particular, the big news the last few weeks is Europe and MiCA.
Yeah.
Finally, we have a uniform regulation across the European Union. That's fantastic news, and we're the first to passport and have it available across Europe. So for us, there's now new growth opportunities. We have clarity, we can market. So I'm already seeing a lot of uptrends there. It's very exciting. We talked about a Binder list.
Yeah.
Very high growth, and we have government that are innovative, bold, that are putting money behind growing the industry and the sector, and that's quite unique. So I've been last week I was in the World Government Summit, meeting different participants, government regulators, and people of the ecosystem here in the UAE. It's fantastic to see the engagement. People really want to grow and then gain also leadership there. And then we have other markets where we are planning some new launches. Will be quite exciting in Brazil, in South Korea. So this year there's a lot happening, and we're looking forward to it.
Yeah, I saw twinge in your eye when you said new offerings, but I'm not going to grill you too much on that. We'll wait for it as always. There's also been like a certain, it always existed, but like there's now a more fierce competition from DEXs, right? I mean, centralized exchanges also have to up their game in the coming years and months. What do you think is going to be the differentiating factor for a centralized exchange versus a DEX?
Yeah, so I mean, we have to admit it now. There's a lot more activity on decentralized exchanges. That's what we're seeing. Yeah. When we started in the industry, maybe people were creating projects. We had like a couple of projects per month. Now we have 50,000 tokens created per day, right?
Yeah.
It's almost insane, right? And it's very hard for consumers to grasp and to navigate. But definitely there's been a shift, and there's a lot of volume coming from there. So I think when we look at centralized exchanges and having built businesses with a very strong foundation of compliance, and that is something that reassures customers. Not everybody is going to be able to deep dive into 50,000 tokens every day. Yeah. Having consumer protection, making sure there is market integrity. We've seen the last few days, insider trading and all the bad behaviors. You have protection when you trade on an institutional venue or a venue that is regulated, right? So I think there's a segment of customers that will still value that for quite some time. That level of protection and knowing that there are rules and frameworks in place to prevent bad behavior. Yeah. Right? I think the second aspect is the connectivity to fiat. I think it's still unparalleled. I think Crypto.com is very well known for having the ability to bridge traditional money to digital money very easily. So I think that is hard to replicate in the decentralized world. But at the end of the day, there's an offering there. We need to be able also to get it to some of our consumers that are a little bit more advanced or keen to experiment. But we need to find the right way of maybe having some kind of score or insights on what is coming there, tools for discovery, and maybe on a different platform, right? Could be our on-chain wallet, non-custodial wallet, and other offering that we have. So we give access, we're a gateway for this new offering that is happening on the decentralized world, but we can put some more insight and information and educate consumers on that front.
Yeah. I mean, I've been talking to so many leaders of centralized exchanges in the last few days. There's an interesting, Gracie Chen said yesterday, like this is sort of the trash time for crypto, of course, in context with the meme coins and everything. What is your take on that? You've mentioned it briefly, but do you think like it's also like a passing fancy, or do you think this has just done some damage to the sector, but it's going to prop back up again?
It's a tough question, and definitely there is a lot of communities and engagement being created, and there's also a lot of bad actors in that. So there's pros and cons, I would say. It brings also a lot of the new generation in, Gen Zs that just want to discover and play. That being said, as a financial institutions, we need to make sure we put the right level of consumer protection. And my view is that different platforms and different level of information we can provide to help people navigate this new world. It's not going to go away. But I think different venues and different tools should be provided for people to safely experiment with those.
Yeah. And you've touched on it briefly, but like, what are your expansive views on tokenization and the B2B space in general? Because even like you said, we've seen from the beginning, we've seen like the early stages of fiat tokenization, and now we're even into real estate and probably a lot more in the coming years. Like, what are your views on that? Do you think it's something that centralized exchanges need to get on board with? And like I know Crypto.com is doing it, but what are your overall views? Like, is that going to be one of the drivers for you in the coming years?
Our conviction is that, in the next couple of years, in 5, 10, 15 years, a lot of the assets that are usually today in traditional infrastructure will be tokenized and will be on the blockchain. So we started 2 years ago making sure we have the right licenses and frameworks so we can actually distribute those assets. As we talked before, you have a security. If it's tokenized, it remains a security, so you need a broker-dealer to be able to distribute it. So we've put that licensing framework in place so we can offer all these assets. We launch in the US equity trading, spot option is coming. We're rolling that out globally, FX, commodities. So getting that infrastructure so people can actually trade those instruments and helping them tokenize them and bring the value of easy transfer, low cost, fractional ownership, all the good stuff that tokenization brings. So we do feel it's going to be really big. We're already prepared, and I think we're the first in the industry to expand our offering from pure crypto native assets to tokenized assets. Some will be used as collateral. I think we'll unlock a lot of trading opportunities, especially in the institutional flow. A lot of the big corporates have equities, they have bonds, they have even ETF in their portfolio, and they can't use that as collateral and get opportunities to trade. So I do see a lot of value being created by tokenization, and as an institution, we'll be preparing to distribute all those assets and then working now with the institutions to tokenize.
Yeah, and so with the Trump administration coming in, this is sort of like the US again, I think, has taken sort of the market leader position. Like it's driving hopefully a lot of new regulatory clarity into the space itself. What are your thoughts on this? Do you think specifically when I say like what is needed most from the US side, is the Bitcoin strategic reserve going to be something that's going to change the crypto sphere forever, or does the crypto industry just need more clarity from the states?
Well, always all in for clarity, especially when you want to run a business. It's super helpful. I think the last 3 years we didn't have that, and most of the regulation was regulations through enforcement, which is not the ideal way.
It's not regulation, yeah.
So right now this kind of is posed, and now people are thinking through what do we need to put in place to bring that clarity. There's a working group that has been set up, and in the next 3 to 4 months we'll get some outcome out of that, and hopefully a path to clarity. Generally, the administration is really pro-business and want to regain that leadership for the US in the digital asset space. So we're super excited about that. Talking about the reserve, it's really, really cool and hot topic. I have to say, I've traveled many countries last year, and whether it's central banks, sovereign funds, or even treasury departments, everybody is already thinking about that. And these conversations are heating up. They're like, where do I custody this? How can I trade? How do I manage this with my existing obligations as a central bank? So this is really a hot topic. And now that the US is considering it, even already at the state level, there's more than 20 states that have passed bill or going to pass bill to have some digital assets reserve. So this is happening. For me, it's inevitable. Which entity, whether it's the Fed, whether it's sovereign fund, whether it's another entity in the Treasury Department, we'll figure that out in the next few months. But it's going to be part of a portfolio, not only of individuals, but now of states.
Yeah. I mean, we've come such a long way, right? I mean, it's so good to see crypto back in the news, not just back in the news for the wrong reasons, but back in the news for the positive cycle. And I think, oh wow, we're exactly out of time. So it was lovely chatting with you, Eric. Thank you so much for being at Consensus, and it was amazing. I think the chat has been really insightful for the audience. Thank you so
very much. Thank you.
Please welcome to the stage Steve Young.
Good afternoon. Ton is a blockchain created for mass adoption. In 2023, Telegram and Ton blockchain launched a exclusive partnership. to solve two main issues. One, lack of distribution channel, where crypto is confined to crypto space only, not able to attract new users. Two, difficulty of using on-chain products, prohibiting new users to come on board. Since then, we have worked hard to launch a Telegram mini app, native and full screen experience directly inside Telegram Messenger. Users can experience on-chain mini apps without leaving the Telegram messaging or downloading a separate application. We also launched a wallet in Telegram, allowing people to custody and also send cryptocurrencies directly inside Telegram Messenger. We launched Ton Connect, connecting Telegram mini apps and wallet in Telegram seamlessly. We also continue to improve the accessibility of the Telegram mini apps. Now, you can add a Telegram mini app shortcut directly in your phone's home screen. We also launched Telegram Stars. We announced our intention to develop a way to allow people to pay on-chain gas fees using Telegram Stars. Now, on Telegram, people can purchase crypto using Apple Pay. So we are putting crypto in every pocket, making crypto as easy as texting. We also worked on the distribution issue. About estimated 90 million public channels on Telegram generate over 1 trillion post views per month. Through Telegram ads platform, you can place an ad directly in the targeted channel. We also improved the discoverability of mini apps. Right under the global search bar, we included an apps section where you are able to view trending applications. Also, in Wallet in Telegram, we plan to add a dApps catalog similar to an app store. Since then, Ton community have come up with many creative ideas to make their mini app go viral. First, Tap to Earn games emerged, where they created a very extremely simple way to engage users. It's tap to earn. All you need to do is to tap. So people of so many countries and ages have participated, resulting in the top mini app Hamster achieving about 200 million Telegram users playing this game at one point. Also, Refer to Earn and competition between Telegram communities have added fire to this adoption. Telegram launched Stories. And now we see an application utilizing this real estate to get their mini app to go viral. So I tried this app. It's a shake to earn game directly inside Telegram messaging. The more I shake, the bigger my banana becomes. So I tried it, and I tried it like twice. And then my friend, actually my colleague, posted this in the stories. So he says his banana is 4 or 5 times bigger than mine. So you can leverage the social dynamics and competition of ego to achieve higher retention and potentially your path to monetization. There are so many different mini apps being built on Ton. Consumer mini apps, ride sharing, e-commerce, dating is a huge one. There's many other use cases, AI, but I would like to focus our attention on one particular use case. It's social trading. So top 5 Telegram trading bots in Telegram today have generated $2 billion with the B annualized revenue at the peak of this month. So if you look at them, they are text-based, very advanced features for advanced users. So how can they reach the next, how can they bring their product to mass audience? Well, they need to give it a mini app interface, powerful, yet extremely accessible for even for first-time users. This is a full screen mode of a trading mini app right inside Telegram. We noticed that two perpetual dexes, Storm and Trezor, mostly generate volume right inside Telegram mini app, and this type of interface compared to websites. So over 70% of the users and trading volume are generated directly in this interface. So we believe, well, this is my personal views. I believe that the next adoption of DeFi and trading requires a new interface, a mobile interface, making it accessible to new audience. So how can we get DeFi to go viral? So what is the most valuable asset in Telegram? It is my friends, my history, the channels that I trust and follow. It is the history, memory, and trust relationship that I've built in my social network on Telegram. So the next DeFi mini app that can go viral must leverage this most valuable asset in Telegram. So this is just any Telegram channel that talk about crypto. There are 40,000 such channels on Telegram. Instead of teaching people to go use this app, here's the leverage, here's the strike price, we should make it available for them in one click inside social context. So this is a channel that talks about crypto. They think TON will go to $40. So right below this post, they attach a button where once clicked, you can subscribe and copy the trading that the strategy that the person I trust posted by clicking once. So we are spreading copy trading strategies across all Telegram channels, but leveraging the trust relationship. New users are much more likely to try DeFi product if someone I trust created the strategy. If you think about how we all got into crypto, you will find that there is one person who convinced us, affected us, influenced us to learn more about crypto. And this is the exact social mechanism we need to leverage for DeFi to go to mainstream adoption. So 40,000 communities can create their own influencers, teachers, tutors, VCs, professional traders, friends, individuals can create their strategies with 100% of their conviction that they think this is the right strategy. And they can spread this link to your friends, and they can subscribe and follow you with one click. It is not only about copy trading. There's also copy farming. So you can curate your own farming strategy that generates the highest yield based on your risk appetite. And when you see the one curated by your friend, or by your influencer, or your channel content creator, you are much more likely to try it. Especially, all you need to do is one click. So in TON, our community is committed to bring 500 million users to TON by 2028. This is our mission. Telegram is projected to grow to 1.5 billion users by 2028. We are on our mission to transform 1/3 of this user base into TON. Social trading, AI, games, anything that you can think of, e-commerce, ride sharing, travel booking, so many dating, and there's so much possibility in TON, and you can leverage these mechanics to achieve mass adoption together. So we invite you to join this mission and this movement, the best place to build is on Ton. Thank you.
Please welcome to the stage Jack Booth and Karen Kwok.
Hello.
Hello there. How are you,
Hello.
Jack?
Good, thank you.
Good, good. So today we're talking about crypto adoption. So I want to start with talking about the background of crypto in the past few years, because it has been quite a wild ride, right? You see, in 2021, the price was at $69,000, and then it's just drop in value 80% in 1 year's time. And then you see the scandals with FTX, and then now it seems to be having a comeback. Bitcoin is trading at $97,000.
Yes.
You see institutional funds like BlackRock, it's getting into the space.
Yep.
So where are we right now since 2021, 2022? What's the current use case at the moment? I want to start with that.
Okay. So what we're seeing, I believe, is a legitimization of crypto with major institutions kind of adopting it, building on it, using it, experimenting with it. But we're in a place where we're still kind of talking about crypto through these three lenses, which I don't think are potentially beneficial to mass adoption. We still have this massive thing around mass adoption, it's so elusive. How do we actually break through the noise and bring crypto to a mass audience? Well, we need to stop talking about it through these three lenses that I think we do talk about too much, which is, one is the philosophical lens, decentralization and how decentralized is your blockchain. One is the technological lens, how fast is your blockchain? And then the third is the financialization lens, number go up. People too much talk about those things and not about the real value. Web 2 has really dominated with showing and getting users to the real value immediately.
What is Web 2 again? So
Web 2, I think about Uber, I think about Food Panda, I think about these applications which you use and gets you to a very valuable thing as quick as possible. So Uber, you don't need to worry about the technology Uber's built on. You just know that it gets you a car very quickly, very easily, right? And the marketing is around that. It's around direct to the value versus all these other things we talk about now, which are, they're very interesting. They're a part of the story. But when you're trying to onboard normal people don't care about these things. Number go up, philosophy, and technology. They just want to go straight to whatever the application should be doing for them.
I think that's the problem, right? Because when it comes to crypto, all we think about is how do you make profit out of it because of the volatility of the value of the trading value. But what about the use case for consumer? What can we do with it? What can you actually get value using through consumer lens? Do you mind to talk to me a little bit about that?
Yeah, well, there's some glimpses of real-world use cases that can be super valuable. So stablecoins is obviously the biggest one, right?
What is this actually?
So stablecoins, coins that are backed one-to-one by fiat currency, normal
Which
dollars.
Which is US dollar,
US dollars.
for example.
Yeah. And what those allow you to do is pay freelancers globally around the world, protect if you're a citizen from a developing country, you can protect your money from inflation by choosing the world reserve currency, US dollars, over what you have naturally. And so that's one use case, stable coins.
And it's currently happening at the moment.
Growing massively. For instance, in Ton, we have an application called Wallet in Telegram. Wallet in Telegram integrated USDT back in April 2024. It grew to, it was the fastest growing supply of USDT. It's now since slowed a little bit, but it's now over $1.3 billion issued on TON. And there's about $7.5 billion of transfer volume of USDT over TON network every single month. So this is like equivalent, very equivalent to something like a TransferWise or
which is like a network for currency transfer in the UK and globally.
Right.
Yeah.
Or Kakao Pay as well, which is another one in Korea. That I think like their average monthly volume is about 7.3 billion or something like that.
Okay.
So we're in just 6 months, 7 months after launch of USDT on TON, it's now already doing more volume than some of the fintech companies that are building in that digital transfer space.
Right.
Yeah, so that's one use case, and then another use case is around digital identity. I think with my company, so we run TON Society, and so we are providing a digital ID to users on TON. So you do activities, you complete different tasks, you go to events, you start building on TON network,
yes.
and you get these soul-bound tokens. These are NFTs that sit in your wallet, they can't be transferred. And that builds an activity-based digital identity over time. So now we don't need to, now we have a proof of humanity effectively in TON ecosystem where we know there's this amount of people using the network, interacting with it, engaging with it, building on it. And that gives us a whole load of other use cases which like we can advertise to those people, we can engage them with particular relevant events, right? So I think digital identity is also a big use case.
But why is TON or cryptocurrency play a better role in this? Because as we can see, like consumer habit is very sticky. It's very difficult to persuade them to change. That's why we see that in the US, for example, people are still writing checks to pay like someone, right?
Right.
And why is like cryptocurrency or TON better than previous digital payments like Visa, MasterCard, or credit card? Like, what's the benefits here?
Well, I think it's the removing the middlemen, right? Like the main promise of crypto has always been just to remove anyone that's intermediating your transactions. So you're just doing P2P transfers. That gives you a whole load of benefits. Like, okay, now I don't need to pay any transaction fees, right? It's cheaper. I pay less transaction fees between sending money from one place to another.
So consumer will know that, like they don't need to pay for it.
Consumer gets a cheaper transaction.
Right.
Right. It also like without middlemen. Now I don't have to. Now I can custody my own assets, so I can control my own assets. I don't need to give over control over to a bank. That as we've seen with like SVB Bank, that bank went down.
The Silicon Valley Bank.
Silicon Valley Bank, right? That bank went down, and some people lost their deposits.
Right.
And so you don't need to worry about bank runs. So these kinds of things, like, they're not necessary to talk about actually for the mainstream user, but they're important developments and improvements on the technology that allow. That help to improve people's lives.
Right, but then at the same time, if you talk about the collapse of Silicon Valley Bank, the FTX collapse is also another factor, so reflecting that there's also risk with cryptocurrency, right? So, yep. I mean, is there any and also at the same time, cryptocurrency is not regulated at the moment. So I think that's the thing that consumer might not be comfortable about, right? So what kind of things that you think TON or cryptocurrency can do that can help rebuild the confidence in the cryptocurrency? Is it through more activities or app use? Because you also mentioned Telegram, right? Which also has suffered its shares of scandals because the CEO was arrested in Paris in August last year. So I was just wondering, what's your plan? What do you think the cryptocurrency industry can do, basically?
Well, I think the cryptocurrency industry, just as I was saying before, is it needs to remove the aspects of philosophy, technology, financialization, and focus on the real value of what it can provide to users. if we can do that, if we can change how we talk about crypto to be more values-based, then people start to understand, okay, this is valuable. Okay, now I can send money across the world instantly and freely. Okay, now I don't need to worry about a bank going down, right? Like they understand the value by using it versus like us trying to tell people about it.
Is there any examples that you can provide? Like, because Telegram, it's like a messaging app. Like,
yeah.
Is there any is it like sending gifts or like sharing messaging with your friends that you can encourage activities? Do you mind to provide more examples over that?
Yeah, so in Telegram, one of the main use cases people are using crypto now is in these interactions where we are enriching the social experience.
Right.
So when I say enriching the social experience, it's like, how do I one-to-one speak to you in a more interesting and fun way?
Right.
So I can buy Telegram Premium with Ton, and Telegram Premium gives me access to emojis, statuses, stories, animated stickers, right? And these are all new ways which I can enrich my social experience with people one-to-one, people in chats.
And I will pay for it.
Yeah, and you pay for it.
Like, how do you do that?
So there's I think 12 million users now paying for Telegram Premium every single month, and you can pay for it using Toncoin inside of the Telegram platform. So that's one thing that you can do. Another thing is Telegram has just launched Telegram Gifts.
Right.
So Telegram Gifts are gifts you can give to other people.
Okay.
Right, in your chats, in your DMs, and then they can be upgraded into an NFT on Tom blockchain. So it's like opening a pack of Pokemon cards.
Okay.
Right?
And then
like you open a pack of Pokemon cards, and all of a sudden you're like surprised with, oh, I've got a Charizard or something, right?
Right.
So this is the same process. Someone gives you a gift, you click upgrade, you pay the gas fee, the transaction fee, and then your gift visibly upgrades before your eyes into something that you can then sell on Tom blockchain.
It does sound like to me a little bit like the WeChat we heard about in China, right? The messaging app.
Absolutely, yeah.
But then the problem is that what you want to do is kind of like cross-border, I suppose. But then WeChat is like in China and it's like closed garden. So there's a lot of like regulations that you need to deal with in different countries and so on. And at the moment we see like there's a political shift in crypto regulation in the US, but then you don't see that in other countries yet.
Yeah.
So do you mind to tell?
Welcome back to CoinDesk Live from Consensus Hong Kong. I'm Jen Sanasi here with my co-host, CoinDesk Head of Media and Innovation, Sam Ewan. Sam, we are nearing the end of Consensus Hong Kong, and I have to say, I'm kind of sad about it.
Well, we have a couple hours left.
We do.
It's going to get spicy. A lot of things are going to happen in those last few hours. But it's been a great, great day. Great week for crypto in Asia.
It's been incredible. I was reading some stats this morning. More than 100 countries are represented here. The conversations have been awesome. For those of you who can't see the show floor, it's just such a vibe. There are so many companies from so many different sectors of this industry having conversations with each other, making deals, coming up with new ways to solve problems. It's been really awesome.
I've seen a lot of people who come up to me and say, I've been talking to this person on Telegram and I've never met them in person. And then here they get to do that. And I don't know, there's been a lot of meetings, deal flow. I think there's a lot of people who are impressed with a first time event in Asia for us to do. Now, granted, we put on amazing events around the world, but I think all of us feel great about how well this one's gone.
Yeah, okay. So far, what has your favorite moment been?
My favorite moment? I think there's been a lot of sentiment shift while we've been here. When we were loading in was when all of the news broke and the scoop we had about Milei and Argentina and the Libra token. And I think I was coming in expecting everyone was just going to want to talk about how bullish they were on meme coins. And now I'm hearing so much here of like, hey, when are we getting past this? Because you have so many builders, you have a lot of investors, you have people who are focused, I think, on the long term versus the short term. So I've just been happy that enough people here are focused on like what crypto and blockchain can do in terms of reimagination of technological infrastructures and not just be stuck in the casino culture we've been in for a while.
I've heard a lot of that too, and I have to say, you know, all the conversations I've had on stage over the past day and a half have been about real world use cases, about how this technology is being implemented in various different ways, whether that be culturally through art or by serving folks who are underbanked or don't have the same kind of access that we have in North America to different financial products. It's been really refreshing to hear that again. So often there's so much speculation in this space.
Yeah, I mean, I went to our decentralized AI track today, and that stage is popping off. People are very excited about the category also. So that's one that I think I'm interested to see the long tail of what happens when we look at the blockchain and AI as being sister technologies. And so many of those projects hopefully are getting a real kickstart here.
All right, well, let's turn the conversation now to privacy. Privacy and scalability are two major themes here at Consensus Hong Kong, and thanks to Zero Knowledge Technology, we are seeing groundbreaking solutions that could unlock the next wave of mainstream adoption. Joining us now is someone at the forefront of innovation in this sector. Aleo co-founder Howard Wu joins us. Hello, Howard.
Hi.
All right, so Sam and I just talked a lot about our experience of Consensus Hong Kong so far. What's yours been?
It's been exciting. I was just doing a panel yesterday on the main stage. The audience was very excited to hear about ZK. Try to get as much information out there as possible because there's been a lot going on in the ZK space, and I think this is one of the first, if not the first, events of the year right now.
Lay a foundation for us. When we talk about ZK, what are we talking about? I know that there's like a privacy aspect to it, there's a scalability aspect to it, but for our audience, when we're talking about zero knowledge proofs, how should they be thinking about it?
So when it comes to ZK with blockchains, there's really three ways that ZK offers advantages for crypto. The first is scalability. The second is what we call computational integrity, meaning I can prove to you that I ran this computation without revealing it. And then the third is confidentiality. You know, this is the privacy piece. And I think, you know, this last piece is one that has been very much kind of something that people haven't talked enough about. It's something that we think is going to be huge. And I think as a community, people are starting to realize that ZK is the end game. You know, a few years ago, people were talking about rollups. There's optimistic rollups, there's ZK rollups. And I think where the industry has come to, you know, settle is to realize that if you're moving $5, optimistic rollups, absolutely fine. But if you're Citibank and you're trying to move $1 billion, you want to have something that has a mathematical guarantee, and you want cryptographic proof, evidence that this thing happened and happened correctly. And that's where I think ZK is really starting to take shape.
Can I just, I want to drill down a bit for a second, because I also don't want the idea that privacy only should exist for the large players, the big banks, the people who are already obscuring a lot of information from us. Tell us about the benefit of ZK technologies for the average individual.
Yeah, so when it comes to ZK, I think what it's enabling is two components. The first is enabling new user journeys that don't exist in crypto today. And then the second is for developers to expand their expressivity of what they can describe in applications. So when it comes to the user journeys, let's take, for example, the use case of money. Today, when it comes to USDC or USDT, one of the challenges is that it doesn't enable the full scale of user journeys for money. Let's say I want to buy an anniversary gift for my spouse. The problem with USDC right now is that, well, being married to a spouse, they probably know my wallet address. So they can just look up on the blockchain and see, wow, when did you remember our anniversary gifts coming up? 2, where did you go to buy this gift? And 3, most importantly, how much did you spend? And I think
support a lack of privacy in this aspect.
So I think that's one aspect where there's user journeys that just aren't captured in crypto today, and ZK enables those types of capabilities. On the developer side, what I think is most exciting is that ZK is unlocking how much you can compute. So in Ethereum, when you have these 10-second block times, everyone is fighting for this kind of 10-second block space. It's like a mainframe. And one of the challenges with that is developers don't get to write much. And what I'm really excited about with ZK is now you can start to do off-chain computations, things that take a minute to run, things that take an hour to run, or even a day to run. And this opens the opportunity for things like machine learning and AI, where you have to write these large classifiers and do inference on it. Those are things that just can't be done in a Solidity smart contract today. And I think ZK is going to allow for these chains to now support that type of capability.
I want to zoom the conversation out a little bit here. When we talk about privacy, do you think that that end user, that use case you were just explaining to me, understands the need for this privacy? And I ask that because in this world we live in, where we give away our data, where there is such a lack of privacy, it's so convenient to give your data away, to give your information away for that quick hit or to get that item faster.
I think we are at the very ground floor of this. I think we're very early, and to your point, I think most consumers and also even most enterprises haven't been well educated about the opportunity yet. I think that's where events like Consensus Hong Kong are a huge opportunity to get that message out there to people in industry. Right now we're seeing these new types of blockchains, including Aleo, emerge. And the way that I like to position and talk about this is to say that Aleo is HTTPS for crypto. When you looked back 20 years to the advent of the internet and the rise of the internet, everything was HTTP, and there was no HTTPS. Now we're looking at 98% penetration of HTTPS, and people realized they were using web traffic out in the open. Everyone could see everything, and everyone could twiddle and fiddle with it, and that was a big issue. I think in crypto we're starting to see the same realizations, and the technology is just starting to catch up to that realization.
But Howard, let me paint the case, because you made a great comparison in the web. AI has allowed for the Metas of the world, the Googles of the world, to utilize these now advanced systems where, whether you have a login or not, they still now know so much about you. So how do we educate consumers that, yes, the stuff you want can be free, but maybe to have more agency over the data that allows you to say, okay, I'm okay with this exchange and I'm not okay with this? Is that sort of part of what you're trying to solve?
Absolutely. I think Chris Dixon from Andreessen Horowitz captures it best with his new book, Read, Write, Own, right? And I think that that's one of the main messages of crypto, is that you now own your assets. I think where people are where people are falling short right now is they're not seeing that these assets are fully transparent. It's fully out there in the open. And if you want to live in that world, you can, and the crypto enables that. But I think for most people, they're expecting some level of banking level privacy, something that looks more like their traditional bank account. When I sign into my JP Morgan Chase account, I'm expecting that my mother can't see my balance and how much I make and how much I spend or how frequently I spend. I think that for my friends to be able to track and see which meme coins I'm participating in or where I'm trading, I think that's part of the user journey that's missing right now in crypto. And I think what ZK is going to offer is for every user to start securing themselves and do it in a compliant manner.
Well, compliance is interesting. Are there regulatory challenges for you as you continue to build? I mean, we've seen governments kind of crack down on some protocols that use this kind of technology. How are you thinking about that?
Absolutely. I think compliance and privacy are the big elephants in the room when you talk about ZK. The way that I like to draw the analogy is to say every new technology has good and bad actors. And when you look back to the advent of the internet, you saw this exact same story play out. Take Napster and Spotify as an example. Both are pieces of software that allow you to download music and listen to it. But one said, let me circumvent the system, and the other said, let me integrate with the system. I think with ZK, you're seeing the exact same thing. I think the call out is there's Tornado Cash and then there's Aleo. And Tornado Cash said, let's circumvent the system. And technologies and new blockchains like Aleo are saying, let's integrate with the system. Let's make it compliant. Let's allow users to demonstrate the compliance, and let's give users full control over their assets.
What happens in a scenario like we've seen over the last couple of days with the Libra token? It seems like there's a bit of a cabal that are working these meme coins. They're gaming and sniping right off the bat, and then suddenly, sort of dumping on everybody else, and retail gets hurt. Exactly. And the more privacy we have in there, the more it may allow those folks to be able to do it under a veil. Yeah. So how do you sort of utilize this technology where you're not also allowing the system to be gamed against the average consumer?
That's a great question. So I think this is where the compliance piece really kicks in. When it comes to the future of crypto, I think a lot of pieces of crypto are going to be regulated. And I think this is also for the benefit of users. When you look at the ecosystems today, we have no concepts of verifiable credentials. We have no ways to even attest to age verification. Decentralized ID is still very nascent, and governments are only starting to pick up on that. I think this is going to be a huge piece that ZK is going to provide a solution for. There are teams right now, even here at Consensus Hong Kong, that are demonstrating that I can scan my passport and provide a zero-knowledge proof about certain properties about myself without revealing all of my passport data. I think to the extent that we start to attest and provide KYC and provide that in a way that is privacy-preserving, it will allow us to actually have some level of attribution and hold people accountable in systems like this. Right now, when you look at these types of on-chain transactions that you're talking about, the problem is that there is no accountability, and that's with and without ZK that's happening. And so I think that technology used correctly will only help to provide better safeguards.
It's interesting you bring up that example. I know the government in Buenos Aires is experimenting with using zero knowledge for this kind of document verification. Before we let you go, can you give us a real-world example of a use case where zero knowledge is being experimented with or implemented in something that we do every day?
Absolutely. I mean, going back to that example of the anniversary gift, private stablecoins and private payments are an area that I'm very excited about. It's something that we're certainly exploring very actively. When it comes to both the consumer and the enterprise, there's many reasons why this is better. It can be cheaper, it can be faster, and it can be compliant. When you look at payroll, a lot of enterprises want to try to pay with USDC, but the problem is they don't want to leak how many employees they have, how much they're paying them, and give their competitors all this intel. Ditto with cross-border payments. There's so many barriers of friction right now when it comes to the traditional rails that crypto has an opportunity to do that. But the problem is there's no way to do it compliantly yet. And so I think that's where ZK becomes a huge opportunity to make these real-world use cases come to fruition.
Howard, thanks so much for joining us at the desk, and we hope you enjoy the rest of Consensus.
Thank you so much, and thank you for having me.
Thank you.
That was Aleo co-founder Howard Wu. We are going to take a quick break. We will be right back.
It's a great opportunity to network, meet local but also global people.
Come to Consensus!
I'm loving it here.
Welcome back to CoinDesk Live from Consensus Hong Kong. We are coming to you from the showroom floor where the brightest minds in crypto are coming together to discuss the future of Web3. I'm Jen Sanasi here with my co-host, CoinDesk Head of Media and Innovation, Sam Ewan. We are joined at the desk now by Consensus partner Oros Chief Commercial Officer, Jason Atkins. Hello.
Thank you, Jen. Thank you, Sam. Thanks for having me.
Thank you for being here. I just have to say, when you walk into Consensus, you are met with the Oros activation, and it makes me feel like I'm just kind of floating into a world of Web3.
That's great. That's what we wanted to hear. We have a great team at Oros. Our marketing and branding team put that together with the Consensus team, designed it around the feeling of liquidity and liquid markets, which is what we stand for and what our company represents. So to hear that you felt like that when you walked through the tunnel, that was an amazing piece of feedback, and I'll share that with the rest of the firm. Mission accomplished. Thank you for that.
You're welcome. Now, we were just talking before we went live here. You've been living in Hong Kong for more than a decade now. Consensus is in Hong Kong for the first time. What does it mean for you to be taking part in an event like this, a crypto event like this, in your hometown?
I mean, it's a great sign that Hong Kong is maintaining its relevancy on a global stage. Bringing these sorts of events of this scale and size and attracting international talent, international people, projects, teams to come visit, see the city, see what it's about, feel the capital flow and the people that are here is such an exciting thing. And to be honest, as we were talking before, I don't have to hop on 16-hour flights to fly all over the world instead, so I get to stay at home and entertain and show people around our city, which is such a beautiful place.
And what brought you into crypto? We know what brought you now to Hong Kong, right? But what brought you into crypto? Because you were in TradFi before, if that's not
Yeah, that's correct. Yeah, I was in TradFi originally. I guess it's a familiar path for a lot of people. I was in foreign exchange markets, so cryptocurrencies is sort of the name that they used to go by. FX was a very similar sort of asset class, moves a lot, very volatile at its early stages. So crypto was a natural move for me. I moved in the industry around 4 or 5 years ago and have not looked back ever since. It's been invigorating, exciting, and different every day. We get to do different things. We get to meet different teams and projects all the time, and it's just a great space to work in.
What was that moment that made you want to switch to crypto? And I ask you that because there are a lot of TradFi folks and TradFi institutions that are looking at crypto now, but what was that pivotal moment for you?
Yeah, it was an opportunity to really build something, like start a part of the business. So Oros is a high-frequency trading firm that didn't have a commercial arm at all. It was focused purely on proprietary trading for ourselves. The co-founder reached out to me and asked me to help him build a client-facing commercial business. And that was a real opportunity for me to put some of my ideas about how to build that type of business into effect and do it in an industry that was personally quite interesting to me already. So that catalyzed my whole entire move, and as I said, haven't looked back since.
You know, when we were talking with your team, I was shocked actually at the amount of transactions that go across Oros. You guys are really behind the infrastructure of crypto in such a big way as market makers, processing a ton of liquidity. I mean, tell us a little bit about what Oros solves for, because it sounds like you guys are in a lot of things.
Yeah, so we transact, as you mentioned, many billions of dollars per day mostly, depending on market conditions, of course, but we're sort of the lifeblood behind liquidity. So we provide tighter spreads and deeper books so that every participant, whether it's someone trying out crypto for the first time and buying on Binance a little bit of Bitcoin, or right up to the institutional players that need to transact in really, really large size, we make sure that the cost of trading is cheaper for everybody. Now that sounds very altruistic. Why do we do that? Well, because we have sophisticated algorithms and models that allow us to trade profitably. In doing that action, we provide liquidity to the whole market, and so everybody benefits. And I think by sponsoring this event and being here, it's about telling that story, that it's really important that people understand that liquidity is the lifeblood of all financial markets, and crypto is no exception. So having true institutional partners that are sophisticated and good actors, we pride ourselves in our ethical market making, transparent approach. We tell you what we're doing, we do what we say we're going to do, and we provide liquidity to all participants across the market in a regulated and compliant manner, and make sure that we do the right thing by the markets. It helps everybody.
Given your background, are you surprised how quickly institutions have seemingly started to adopt crypto and started to kind of experiment with different crypto rails?
I wouldn't say, no, I'm not surprised, because if you think about the returns the asset class has seen, if you think about the institutional players, most of them are looking for returns, whether that's outsized returns or stable, consistent returns. All players are trying to grow the asset class that they're trading in. So it's not surprising to see them arriving. What has been surprising is how quickly that switch has happened. Once the ETF came in at the start of last year, the floodgates open, and people have started to really start to adopt it. But what I don't think people understand is that these numbers that are coming in now are going to be dwarfed by the long-term effect of institutional adoption of crypto. Pension funds, sovereign wealth funds, as they start to move into the space, liquidity becomes even more important. Because as we probably have seen recently, if something sucks all the liquidity out of the market, everything becomes harder to trade and more volatile. So at that point, you need people like us to be there trading in larger and larger size, providing markets on both sides, to let everyone transact from small trader right up to these big sovereign wealth funds that are coming in.
So if we take an example like, the Trump token that launched a couple weeks ago, it brought millions of people in so quickly. They need folks to basically be working the backside of that, right? To be figuring out how do we make sure that the volatility doesn't affect the average retail trader. And really that's like a service you guys are providing.
That's exactly it. So we see ourselves as volatility compressors. So we're trying to reduce the aggregate volatility of the market by we're trading on both sides. And what that does is it makes it a more investable asset class. If you think about any asset, stocks, bonds, if they were extremely wildly volatile, the investors would have to take smaller positions and therefore couldn't invest as much because on a risk-adjusted basis, it's just too big. So as the asset matures, and then we've seen this with Bitcoin, aggregate volatility will fall. And then as the volatility falls, people can deploy larger size, new investor types can now invest because pension funds don't invest $5, $10 million, they invest billions and in aggregate trillions of dollars. And to do that, you have to make sure that what you're putting your money into is not flying around all over the place and risking losing all that underlying capital.
And just before we wrap, if you look forward to the rest of 2025, what's that big catalyst, that big trend you're watching from an Oros perspective?
I'm going to say probably the most obvious answer here, but I'm really excited about what's happening in the US. I think a lot of people are trying to say it's Asia versus the US or where's it going to compete. I think the whole entire market is going to grow as a result. And just like the rest of the world, Asia will find its niche. It will find its way to participate, innovate, and be part of that. And having consensus here is a really good representation of that. It's not like everyone's just leaving Asia and going to the US, but I'm really excited to see what that adoption out of the United States and under a Trump administration is going to lead to for our industry. And I think the pace of innovation is going to be breakneck through this year. So I'm really excited to see that happen.
Competition is good.
I mean, we've seen there's 100 countries here. 75% of the people are not from Hong Kong. So I think it proves out the point that this is truly a global movement and we shouldn't be thinking in silos. We really should be thinking as an industry itself, right?
Bingo. Yeah, and every area of the globe can contribute in its own way. We see that in the traditional financial markets, right? It's not like it's just the US. China has a market and there's Korea and there's Hong Kong still. And this sort of market structure is good for the world. It leads to innovation in areas where you wouldn't just get it if it was just one market. So it's exciting to see.
Awesome. Thank you so much for joining us at the desk, and we hope you have a great rest of the event.
Thanks, Jen. Thanks, Sam. Thanks for having me.
All right, that was Consensus Partner Oros Chief Commercial Officer Jason Atkins. Up next, the CEO of Sonic SVM, Chris Zhu, joins us. Sonic SVM is the first chain extension on Solana for games, applications, and the industry's first TikTok app layer. Welcome, Chris.
Hi, Jen. Hi, Sam. Thanks for having me.
Thanks for being here. Now, we got to just ask the question that everybody is wondering after that introduction. What is a TikTok app layer?
Yeah, so we actually grew out of a couple different teams. Tencent, ByteDance, Electronic Arts. The entire team's kind of background was in distribution. So when we started building crypto, we really realized that the attention is really prescient, and we needed to build a pool of liquidity to bring outside users in. So we built that on top of TikTok. As you can imagine, we had Telegram, we had Ton. We basically built an abstraction layer on top of TikTok to bring all of the TikTok users into Solana.
So I still need to know how this works. So if I'm on TikTok, what am I seeing? Or is it, I see someone's video and it's taking me off platform?
Yeah. So basically, if you're in TikTok, there's a high probability, if you're a crypto user, to go through one of the ads as well as one of the creators that we actually work with to see this application pop out directly within the TikTok video that you're watching. And once you click into it, you have the opportunity to qualify for crypto rewards and play crypto games to basically earn points for future benefits as well. And there's trading features embedded directly within the TikTok without leaving the application itself.
Is this available for TikTok users across the globe?
Yes, and that is the perfect crypto audience for everybody as well.
And so just on Sam's question, if I'm using the TikTok app, I have access to this, or do I need to install something that gives me access to
Yeah. So we basically target users who have prehistory with trading and with kind of looking at this type of content. So depending on your TikTok user behavior, you might be targeted with those ads or not, but we have a very wide distribution of creators as well as advertising partners that we work with. So there's a high probability that you get access to this as well.
It's interesting. TikTok was a client of mine many years ago, and they faced some backlash for a moment when they started to talk about NFTs. 2021 maybe.
Yes.
And I'm interested because they also were pretty forward-thinking, everything from ghost kitchens on up, of how do we utilize a real sort of like a one-app ecosystem. So it sounds like trading would be a natural part, but how does that work within the TikTok executive team? Do they want this thing, or they're happy to have someone else be doing it?
Yeah, great question. So the way that we actually work with the team is more through the distribution side, the advertisement, and there are actually dedicated teams within ByteDance that work on Web3. Albeit TikTok might be more of an open platform where we build these mini apps on top of TikTok, and they don't really regulate to a certain degree where we have to actually abide by the local regulations, the gambling regulations, the terms that we use. So we're very careful with how we actually phrase the product. But because we're actually a gaming chain itself, a lot of the products on top of us are giving rewards based on the money spent within the game, so it's totally regulated.
Is this concept we're talking about to you the future of gaming? We talk so much about what's going to bring Web3 gaming to the masses. How are we going to bring the next billion users on chain? And it sounds like maybe an integration with an already established platform like TikTok or Telegram or something else might be the answer. But and so I'd love to get your thoughts there and maybe talk about any challenges that still exist.
Yeah, for sure. So we've been actually building on top of Solana and within gaming, in crypto gaming for the last 3.5 years. So we've seen many waves of products come and go, but you will see that the successful products in crypto gaming within Web3 have been really following the asset standards of that kind of generation. So in 2020, it was DeFi plus gaming. 2021, it was NFT plus gaming. And these couple years, it's meme coins or other assets with gaming as well. So we really think games are actually a really good host for whatever asset that's actually on top of them. But it really matters what type of assets you're building as well. So with these really large scale games, it takes a very long time for them to produce the content, produce the assets, and that's one of the downsides of these games. But once you have one of these hits, the generational wealth within these games can actually be captured through asset sales, these skin sales as well. So for us, when we look at these games, we really think about what are the core assets and how are the users trading, speculating, but at the same time enjoying the gaming content, and is that sticky enough? So that's how we think about games and Web3 games. It really depends on the product.
And these games themselves, are they more casual games? Are they predictive? I mean, sort of what's the nature of the games that are being developed?
Yeah, so we actually look at the entire landscape kind of as an ecosystem. So there are lower kind of value gambling games, there's slot machines, but there's at the same time also really high quality MMORPGs where the entire economy is really open and the money velocity within the game because of a crypto goes faster and faster. So you can actually charge users way lower of a transaction fee, but because the velocity is so fast, you get double the size of the economy. And that's also one of the reasons why we built on Solana is because the cost is so low and the speed is so fast. So you get a lot more activity for the entire economy.
Well, let's talk about that because Solana's not the only chain that offers low-cost, fast speeds, and Solana's had their fair share of outages and issues over the years. So why Solana? When you were looking at what chain to build on, why did you ultimately decide on Solana?
Yeah, so when we first got into the space, the team was actually in traditional gaming, right? Traditional distribution, selling global assets. When we started looking at different chains, one, the cost, yes, Solana might not be the only cheap chain. It's definitely one of the cheapest, right? And at the same time, users get a very good user experience with the developer kits as well as like the wallets on top of the chain. So 3 years ago, we started grinding the trenches in Solana, and that still remains true. And for the last 365 days, actually Solana has not had an outage for an entire year at this point. And it's scaled so well to handle the congestions, all of the user demand. And really importantly for us, to build a game, you need a lot of tools as well. And Solana has all of the developers and the developer tooling and the support there. And that's one of the biggest reasons why we built on Solana and remained there.
So we've seen in the last couple of weeks a little bit of a sentiment shift on the meme coin conversation, right? And partly I think because they look at anyone with a big following to say I can monetize my following and I can know early enough, Dave Fortney has been doing this very in public in a way that seems quasi-illegal.
Almost too in public.
Almost too in public. But I guess when I look at TikTok, which is really such an amazing engagement and attention engine, is there any fear that this could just be, I am a influencer with a giant account, I can quickly get in, I can get other people in, I know I'm making money off of them, and then I can just go about my way. This is just another product I monetize my audience against.
Yeah. So we've actually seen a very interesting sentiment change within the audience of those meme coins as well. So within crypto Twitter, a lot of people are speculating for the hopes of like earning a lot of money. And when that happens, you definitely have like quicker attention span and people, getting scammed sometimes, but also, actually buying the tokens of some of their favorite creators. And that also stays true within TikTok. But within TikTok, that liquidity and those users are actually less speculative. So they really like to buy the tokens and the merch of the creators that they follow. So they care less about the monetization and the incentives there. I would actually argue it's healthier that way because they actually really enjoy buying the derivatives, and sometimes they might have a profit, but it's almost like you think it's investing, but it's really actually an act of consumerization of these creators. So TikTok creates this atmosphere where they don't want to trade it, within a 24-hour time span.
Where are most of your users coming from? Do you know what region?
So actually, US is still like number one, and then Korea, surprisingly, a lot of the users there. I think it's like a good nation for entertainment and financialization at the cross section of it. And then there's a lot of users from Southeast Asia, just because mobile gaming is so big there as well.
Chris, thank you so much for joining us at the desk, and we hope you enjoy the rest of the event.
Thank you for having me again.
That was Sonic SVM CEO Chris Zhu. Let's now listen in to one of our stages.
And take out a loan on linear to spend. Yeah. And so you get this sort of cross-chain use of DeFi, but not just for trading, but actually for real world sort of, I'm tapping to get on the MTR, I'm tapping to spend in the bakery or at the pharmacy, and I'm using DeFi to do that. And then I think the evolution is going to be like going from, like, say, cross-chain lending and borrowing to an environment where when I tap with my Google Pay or Apple Pay, I'm actually triggering a DeFi microloan. And it will be much more efficient than taking out a credit card loan.
And keep your money at work whenever,
exactly.
whenever you don't need
you're
that.
earning yield right to that last possible point in time where you tap. So you're sort of controlling your assets rather than handing them to like a top-up
DeFi
card.
needs these kind of unique value propositions to basically accelerate the migration away. I would like to make one point, something I'm working very hard with my team now. I believe that the DeFi distribution is totally broken. I've seen too many projects, DYDX being one of them, trying to acquire users directly. And I think as a practitioners of this industry, we can think more deeply about how Web3 products and DeFi products will be distributed. And I believe the DeFi infrastructure might actually be CeFi. And let me build on this. What you see is the CeFi players, the Binance, the Coinbase of the world, probably have 200 million, 250 million users if you aggregate all the customers from all these centralized exchanges. All these centralized exchanges are in a global race to acquire licenses in as many countries as possible. Every time they get a license, it's mostly for spot. So they have to stop lending, they have to stop futures, they have to stop many activities because the license they get is only for spot, for the most part. So what you see is all these centralized exchanges are building their own wallet. The Coinbase wallet, the Binance wallet, the OKX wallet, and so on. And what I believe is we DeFi practitioners should consider very strongly to essentially bring the product where the users are. And in my opinion, the next 100 million DeFi users are in CeFi. The CeFi users are just almost ready users for DeFi. They're already crypto educated, they understand the various coins, they understand the concept of different chain when they want to withdraw or deposit from different chains. And what we see is the CeFi players starting to expand their footprint into DeFi. And these centralized players, the Sexies of the world, they want to keep basically the customers within their ecosystem, and they're telling their customers, oh, if you want to go into perps, should it be with DYDX or someone else? If you want to go into lending with Aave or someone else, we're going to facilitate all the plumbing, we're going to facilitate all the bridging by essentially facilitating and being a gateway to DeFi. So in my opinion, one of the infrastructure challenge of DeFi might be CeFi, even though it's kind of counterintuitive, because this is where a lot of users are, this is where there is a lot of engineering which is ready to facilitate the access, and bringing the product where the users are works very well. If you look at your traditional finance experience, if you're a customer of HSBC or Citibank, they bring to you insurance, they bring to you brokerage, they bring to you FX. And it's very convenient. You don't want to open 5 or 6 accounts. So we are reinventing finance, but we're not reinventing people. People remain the same. I remain the same. A little bit lazy, I have to say. And I just want the comfort of things. So I believe all of these kind of silos between CeFi and DeFi will become more and more blur and start to overlap. And maybe I'll close with that. Possibly the best infrastructure upgrade for DeFi might be CeFi. What do you think?
I think that there's different opinions in the CeFi world about the future of centralized exchanges and whether they have like a limited lifespan and that the future has to be decentralized exchanges. And we're definitely seeing that, like OKX, for example, have both their centralized exchange and their DEX.
Welcome back to CoinDesk Live from Consensus Hong Kong. If you are watching us from home and feel like you're missing out, don't worry, because we're doing it all over again in Toronto, Canada from May 14th to 16th. You can get your tickets at consensus2025.coindesk.com. I am Jen Sanasi here with my co-host, CoinDesk Head of Media and Innovation, Sam Ewan. Joining us now at the desk is TON board member Steve Yoon and TON Society co-founder Jack Booth. Hello.
Hello, thanks for having us.
Hello, hello. We know that you have been very busy folks. So let's just start this by laying a foundation. I know years ago, Telegram was going to launch TON, and then there were some challenges with that, and then the group of independents launched TON, and now here we are talking about it. Give us a brief history. How did we get here?
So as you know, TON was designed and created by Telegram, and when they were forced to give up the development, they open sourced the whole code base. And from then, community members like myself picked up the baton and to continue the development. And in 2023, we created a TON Foundation in Switzerland, and we entered into an exclusive agreement with Telegram to basically leverage Telegram to get Ton blockchain into mass adoption.
Now, talk to us a little bit about the Telegram partnership. I know a lot of the headlines have really been focused on gaming on Telegram, but talk to us a little bit about that. Is that your main focus, or are there other ways that Ton integrates with Telegram?
So Telegram launched the Telegram Mini App platform, and we integrated Ton-based wallet inside Telegram. So basically, it allows an experience of on-chain applications without downloading a separate wallet or another application. So it's not clunky as the website version, but it's totally powerful and intuitive right inside Telegram Messenger that people can use within the social context and the boundaries of social network that they have. And also we established a exclusive partnership with Telegram just this January, where every mini app on Telegram looking to utilize a blockchain function must use Ton blockchain as the exclusive blockchain. And the reason for that is for user experience. The Ton was designed to service 1 billion users. And there is no such scalable blockchain in the world other than Ton. So this is why for Telegram, it is important to standardize the user experience across mini apps.
And you mentioned gaming as one of our main use cases. And the reason why that is so important is because we have so many new people in crypto inside of Telegram. So the user base is 50, most people that have done surveys have found 50–60% of them are new to crypto entirely. So how do you actually activate that audience? Well, gaming is a great way to actually bring them on, get them engaged, help them to learn a little bit about crypto through a simple game interface. And that's why you've seen some of these apps last year grow from 30 million users, 50 million users, 300 million users in the case of Hamster Combat. So the gaming ecosystem is now changing on Ton. The tap-to-earn craze has died off a little bit, which is good. You know, these guys were early adopters of like how to onboard people with a simple use case. But now the games that are coming out now are much more mid-core, much more interesting and engaging, and integrating crypto in new ways, where it's still going to keep people engaged and allow people to share these applications a lot more widely, and then be complemented now with a focus that Ton Foundation is having on DeFi, so that these people can come from the games, go straight into simple yield producing protocols.
You know, what's so interesting to me is when you think of the early days of Discord in crypto. Discord was the user base was very anti-crypto. We saw a lot of people want to flee, and the place they ended up was Telegram. So you have a gaming platform that sort of didn't want to embrace its crypto roots. And I feel like Telegram, which is so native to kind of the crypto ecosystem, has now embraced gaming as an alternative to that. Do you think there's any correlation to that and the fact that Telegram embraced the crypto ecosystem like with open arms and then started to create their own blockchain?
I think Telegram absolutely is the crypto-native, crypto-centric platform. There are 40,000 crypto communities on Telegram alone. So we are exchanging Telegram context all day long. So I think it's definitely the right place to build a blockchain application. And I can also go further into some use case. Yeah. So I think the next mass adoption on DeFi will come from community-driven copy trading. So instead of asking someone to use a complex trading instrument, we can create a super accessible mini app interface and distribute trading strategies in Telegram channels in context. So 40,000 crypto channels on Telegram can be saying, okay, we think Ton will go to $40, therefore you should trade, you should follow my trade. And if they trust this person who posted it, they can simply click without leaving Telegram Messenger at all. Confirm and subscribe. So I think leveraging the trust already existing in Telegram social network is a key to bringing a mass adoption in DeFi.
Yeah, and if you think about what works really well in Telegram, because it has this unique way of distribution where it doesn't have an algorithm censoring a news feed, right? Every other social network has a news feed where you post everything, whereas the distribution in Telegram is different. You have one message, and if that message is good, worth sharing, it can be forwarded onto all of your chats, all of your channels, all of your DMs, right? And then inside of that, maybe you have 1 million people. 1 million people can then forward that onto all of their chats, channels, and DMs. And then 100 million, and then up to 1 billion users, right, inside of Telegram can receive that message if it's worth sharing. So the things that do really well in Telegram are these social apps that really use the social distribution of Telegram to enrich the actual experience of the user, right? You can see that with the growth of Telegram Premium, where you can buy Telegram Premium with Toncoin. We see a lot of people do that. And what Telegram Premium gives you is animated emojis, stickers, statuses, all these things which like improve a one-to-one interaction, because now I can give you a nice cool emoji in support of whatever your point is, right? Simple things like that, but they grow because they are enriching the social experience. So there's one actually app which I can highlight, which is called Olympics. Olympics does skill-based wagering. So effectively, like, it can turn any Web 2 game into a skill-based wagering game with a leaderboard, where I can now tell you about the game that I'm playing and say, Kate, come join me playing this game, and I'll bet you 1 ton you can't beat me. These games can grow to millions of people in a single tournament. And so when you think about the distribution of Telegram and how big these tournaments can grow, like, that's a really exciting use case as well for Ton, where it could even eclipse trading in many ways, because it's a much more native thing to non-crypto audience, a skill-based wagering game, right? So like 100 million users all paying 1 ton in a tournament to beat me at Candy Crush, right? That's a much more fun, engaging thing that uses crypto and still gives you the reward of crypto than potentially trading, which is a bit more difficult to understand for most people.
I want to come back to something we were talking about before. We talked about chain exclusivity. We talked about games. There were some games that were not happy about the chain exclusivity. I know there were a few headlines about that recently. How would you respond to games who are looking at this chain exclusivity, looking at the Ton ecosystem, and are deterred by it?
I think that once they achieve such viral success, so having 50 million users and more, they will actually understand that there is no other chain that can mint tokens for 50 million users and above. So on paper, it could sound a bit restricting, but in reality, it is a total necessity, a technical necessity even for them to service their users. As an example, there is one application in one other blockchain who created a mini app, achieved tens of millions of users, and when they were trying to mint the tokens, they crushed their own blockchain, and they simply couldn't fix it. Therefore, they had to recreate a smart contract on Ton to actually service their users in Web3. So rather than restriction, it is a necessity for them.
I wrote one of the first... Oh, Jack, go ahead.
Just to add, another point is around the user experience. If there's multiple different connection protocols inside of Telegram, it's very dangerous for the user because they don't know what the normal connection process to a blockchain looks like. And so they can end up connecting to a scam protocol that's going to drain their wallets and take all their money, right? That's very, very important. And I think is one of the main reasons why Telegram decided that it should be exclusive to just one experience of connecting to a blockchain, which is Ton Connect.
So I wrote one of the first articles on Hamster Combat, which you guys mentioned earlier. At that time, it was about 6 or 8 million users. You mentioned, I think it's 300 million. It's some ridiculous number. It was fascinating to see how quickly that grew, because I think we all think in crypto, yeah, as Jen was mentioning, that gaming is an entry point for so many. It didn't feel like you were playing in crypto. I know there was some controversy of whether the reward system was the one that people wanted who would spend a lot of time playing, but regardless, I remember forwarding that game to so many people saying you have to just play to understand. You don't need an amazing tier 1 gaming, shooter game. You can really play something that just is virally behavioral, shareable, and has social rewards in it built in. Is that really the secret sauce for a successful game on Telegram?
I think refer to earn is a critical part of achieving virality. And also having a simple mechanics of engagement is also very critical. But there is one paradigm shift, in my view, where the Ton community is going through. So I've talked to many people, and in our community, we used to think that creating a super app is more like a funnel, where there's a very simple hyper-casual game at the top, mid-core games, and then DeFi is somewhere in the bottom. But I've spoken with people who experienced and participated in the growth of WeChat and Kakao and other super app ecosystems. Actually, when we have 1 billion users, some people will never use DeFi, but they will always play hyper-casual game. Some people will never even play hyper-casual game, but actually use DeFi protocols, and so on and so forth. So therefore, it means that instead of trying to transform the hamster combat users into DeFi, we should consider them different user demographic. Maybe there is an overlap. So it means that we should build more and more use cases, ride sharing, e-commerce, AI, mid-core games, and many other use cases that can fit my unique target user base among the 1 billion Telegram users.
Okay, we have to go. I really am going to get in trouble for asking this, but I have to get one more question in. Is the idea to make Telegram the next super app, and how do you think about combating the other super app that's WeChat?
I think that no other super apps or social media at this scale is even able to dabble into blockchain because of Ton's unique architecture. So it's a private company without an IPO. It has always stood for the freedom of expression and speech. I think Ton hits the right culture, and then Telegram hits the right culture and the legal setup to be able to do something exclusive and intimate with the blockchain.
Yeah, I would say definitely yes.
Yes, the super app.
Telegram is going to become the Web3 super app. Ton is going to be the foundational layer of it. All the apps on top of Ton are going to become well-known, used, and make crypto easy, simple as texting. That's the vision, and that's certainly what every team on Ton is working towards. It's what Ton Society is working towards. It's what Ton Foundation is working towards. Crypto, simple, easy to use, and straight to the value, right? Like, we don't need to financialize or philosophize or talk about the tech all the time. We just need to get people straight to the value so that we can prove that crypto is valuable, is useful. And I don't think we do that enough. We just talk about the philosophy. Is it decentralized enough? The tech, is it fast enough? Or is it, or has the number gone up, right? We financialize everything. Let's talk about the value and get people straight as quickly as possible to whatever that value that crypto should provide is. And that's what apps on Ton are seeking to do.
Well, Sam and I are all about the value. So thank you both for joining us here and sharing, and we hope you enjoy the rest of the conference.
Thank you so much for having us.
That was Ton Foundation board member Steve Yoon and Ton Society co-founder Jack Booth. Let's take a listen and hear what's being discussed on one of our stages.
Behavior transformation tool once we get our data in order. So hats is the second use case. The third use case I want to talk about is really, I think, where the future is headed, and that is how do we connect this future having AI agents, however we define them. For my purposes, I'm defining an AI agent, which is an independent protocol that can take a little bit of data about you, phenotype you as somebody with a certain number of challenges in one of your health pillars. So maybe you're a poor sleeper. Maybe you have a metabolic issue which might result in cancer down the line. Maybe you are somebody who has a nutritional imbalance or a hormonal imbalance. Right now, your path is go to the doctor, have them look at your blood work, and come up with some sort of a solution. If you ask them, does this work? He'll say, on average, it does, but I don't know how many people have tried it on, how many people actually did it, and of those that did it, how many actually experienced the benefit? Well, armed with the self-sovereign entity and some sort of a measurement through tokens, we can actually have AI agents tender for our health service. They can say, well, dear Ivan, for somebody who is described by these phenotypes and these markers of health, I can offer some solutions. And by the way, here's the on-chain data of everybody that's tried it and how it's worked for them. So you have a little bit of a competitive process. By the way, we already have a lot of shortage of doctors. We're not making any more as fast as we should. So this AI agent story is a very, very interesting way of introducing controlled experiments in healthcare that are perfectly transparent and work well on the phenotype of client that we are. Because our bodies work the same way, but we need different things in different proportions and at different times. So number one, auditable recommendations. You are suggesting something, where is the evidence that this works for someone of my phenotype? That's number one. Number two is bias reduction. Because the recommendations that we're issuing are not based on a randomized controlled trial, which is designed for the average person that doesn't exist, we have the ability to control for biases. This particular intervention, does it work? And if it works, does it work for a 46-year-old Bulgarian with my phenotype? That's a bias reduction that currently is not possible in healthcare, but will be possible if blockchain and AI had a baby. And the latest, I think, thing to consider is that none of us have any idea what is around the corner for large language models or AI broadly. The pace of change is frankly disorienting even for somebody like myself who lives and breathes this. So the ability to have something that allows you to hot swap models, hot swap agents, and tender out in a secure way, hey, who can help me get to where I want to be? I want to be able to dance the Zumba on my, or rock and roll even on my great-granddaughter's wedding. That means I have to have healthy knees at 85 and be able to lift 30 pounds overhead. That's my problem statement. Which AI in healthcare can help me get there? Well, you can hot swap all the possible models instantly and come up with a number of conclusions. That is not as far as you think. We are prototyping this as we speak. So I think for AI agents to be possible, we need to solve the data issue. We're working on this. And then imagine a future where instead of having to go and sit at an office, you can actually have a conversation or simply click a button and say, hey, suggest the next best action. That future is closer than you think. In conclusion, I just wanted to show you what this future might look like. And this is more or less our data model today. Number one, I've talked about AI, I've talked about blockchain. I think I've hit most of the buzzwords. I'm just going to mention Trump just in case so that we have all the bingo words. The idea is that healthcare will always be a human discipline, and it will always require a human in the loop. None of us are ever going to be accountable to a machine. But the data processing, the data collection, and the resultant process needs to be governed by a machine because humans simply can't handle it. So if you want a personalized health span journey and you want real-time suggestions of what actions to take, that can be governed by an AI agent. And until regulation changes, there needs to be a practitioner in the loop who oversees the program, validates it, and is there as an accountability partner to make sure that you actually go ahead with the interventions that they're offering. So there you have it. We need to travel from 1985 to 2025 very, very quickly in healthcare. The solution to that is first, understand that you need to be sovereign with your data. It's no longer acceptable for us to be the domain of the health system when it comes to owning the most important data set about us. Far more valuable than our crypto wallet, I would argue. Once we have that sovereignty, we'll have the ability to seamlessly and easily and securely share our data, which allows for us to have a real-time guidance and action for how to manage and be the CEOs of our own health. I'm sure some of you disagree with me. Would love to talk to you after this. If you want to learn more, the gift I can offer you through this QR code is if you scan it and put your email address down, we're going to send you a personalized longevity guide, which will take you through the 6 pillars of health, give you some ideas of what you can do today to set yourself up to be healthier when you're 50 and 80. And we're going to give you practical examples and references to science with what you can do in each of the health pillars. And hopefully that's useful. Thank you for your time and good luck with your health journey.
Please welcome to the stage Munib Ali, Jacob Phillips, Rich Rhines, and Sam Kessler.
Hello. Thank you guys all for joining us. We're here to talk about Bitcoin. I'm Sam Kessler. I'm a reporter at CoinDesk, and I'm joined by Munib from Stacks, Jacob from Lombard, and Rich from Core. There's a lot that we're going to cover. We don't have a ton of time, so maybe we can just jump into it with I thought it would be helpful to just get a really quick introduction to each of your projects for the few of us who aren't already familiar. So Munib, maybe we can start with you, and then we'll get into the meat of this.
Sure. I'm Munib. I'm the founder of Stacks. It's a Bitcoin L2. Think of it as a layer that's deeply integrated with Bitcoin. You can deploy your BTC into it and then use that in all sorts of applications.
Awesome. Hey, everyone. Jacob Phillips, one of the co-founders of Lombard. You can think of Lombard as like a Bitcoin liquidity layer. We connect Bitcoin to other DeFi ecosystems. So yeah, I'm sure we'll get into it.
So I'm Rich from Core. Core is the leading Bitcoin scaling solution. On one side, it's a full Bitcoin EVM DeFi ecosystem. On the other side, it's a Bitcoin proof-of-stake layer that has passive yield on Bitcoin.
Awesome. So usually when we talk about Bitcoin, at least for a while, we were talking about Bitcoin. Bitcoin the asset, Bitcoin the blockchain. Not much beyond that, maybe Lightning Network. But a lot has changed. But I kind of want to start by asking the obvious question, not to any of you, specifically, whoever wants to talk first, but why build on Bitcoin and not, Ethereum, Solana, all these other places if you're going to do decentralized finance and all this crypto stuff?
Yeah, maybe I can hop in first. Spent a lot of time investing in DeFi at Polychain and then building a DeFi perps protocol on Arbitrum before this. Liquidity is the lifeblood of the entire DeFi ecosystem. And the way that DeFi beats traditional finance is through hypercomposability of yield-bearing tokens, taking liquidity, using it as collateral for one protocol, then recycling that into new protocol. All of TradFi runs on rehypothecation, and DeFi superpower is the ability to do this at scale with transparency. And all this time, we've had this $2 trillion pool of capital sitting totally isolated from the ecosystem. If you could put that to work into a DeFi environment like ETH, Solana, or a Bitcoin native ecosystem, that's how we become more liquid than the competitors.
So maybe if either of the other two you want to address this, one of the obvious questions then also becomes, what are the use cases on Bitcoin that one could succeed with that would be more difficult to implement on a place like Ethereum or Solana?
So I think to go back to the first point, why would you not use Bitcoin? Bitcoin is the perfect collateral asset, right?
There's plenty of people in the audience who could give you some reasons.
Well, I'm sure there's a lot of Bitcoin holders here as well. Sure. And I think one of the most important things is, as Jacob was mentioning, it's a $2 trillion latent asset today that has effectively been a pet rock, a very lucrative pet rock over the last decade and a half. But now is the time to add more utility to Bitcoin. And I think there's a little bit of a misalignment between maybe the Ethereum community and the Bitcoin community in terms of what Bitcoin DeFi might look like. And maybe it's not just about what's harder, it's about what's a better asset to go out there and to go fulfill this mission. It's one of the ones that we've been bringing out pretty forward to the front over the last year and a half now is Bitcoin as a collateral asset where you borrow against it for stables. And that's not rocket science, it's just better product market fit. I was talking to so many people here earlier today that are talking about, they just want to buy more Bitcoin and they just want to borrow against it to avoid taxes, et cetera. And I think that's one of the big killer use cases for Bitcoin if you're an institution or just a retail holder.
Now, are you actually using Bitcoin when we're using any of these platforms? Or are you kind of living on Bitcoin but not using Bitcoin the asset? That's one of the things I think a lot of people are confused by when it's there's all this liquidity locked up there. Is that the actual liquidity you're tapping into, or are you kind of creating these derivative networks on top of it? Rather than tapping into the base layer itself.
Yeah, so I think this was actually one of the bigger criticisms for Bitcoin, that if you look at the L2s on Ethereum, they're more trustless, and you can deploy ETH and do what they call unilateral withdrawal. You can just withdraw your asset without trusting anybody else. And I think there have been some technical breakthroughs like BitVM and a bunch of other solutions as well, that are bringing Bitcoin L2s to pretty much like on par in terms of being trustless to Ethereum. And that has happened over the last like year and a half. So I think from a technical perspective, like that was a huge breakthrough. And the other thing, whenever it comes to building on Bitcoin and people ask like, why now, why not before? I think the other issue was mostly like cultural and having a developer community. And this is something that we have done at the Stacks ecosystem a lot. It's trying to bootstrap like, a developer community that wants to build on Bitcoin, wants to come and build these applications. So I think with those two things, it's actually now much easier to imagine applications being built on Bitcoin versus other ecosystems. But before that, I think some of those criticisms were much valid.
I mean, maybe a departure from this a little bit. We were talking about Ethereum, and like backstage I mentioned, I cover Ethereum more than I cover Bitcoin, and one of the huge problems that that ecosystem has been facing recently, that ecosystem being Ethereum, has been born out of roll-up fragmentation. The idea that they have kind of offloaded their entire scaling roadmap to these layer 2 networks that are not necessarily aligned with the base network. So what happens is you have all these networks that are fragmented, that have their own liquidity wells, that aren't necessarily all secured or secured in the same way by the Ethereum base layer. So maybe just like starting with that fragmentation thing, Jacob, maybe you could kind of address this a little bit.
Yeah.
How do you avoid that exact same thing happening with Bitcoin?
Yeah, the question is, is it a bad thing, right? Is fragmentation bad? For ETH, maybe you could argue so. ETH is kind of this like monetary asset, but like long term, if we think Bitcoin is going to become the decentralized money, ETH kind of takes a back seat to that. So then most of its value comes from being some sort of productive asset, earning fees from the network. Used to be that all that happened on the base layer. Now it's going to other layers. What I would say is like the products, while there is fragmentation, the products are becoming 10x better than they ever were. Hyperliquid is a killer product in DeFi, no doubt about that. It needed to be built in an isolated environment. Same with all these, ETH L2s or ETH adjacent chains. Like Monad and Mega ETH, I think, are going to be big level ups for the ecosystem. Whether that value accrues back to ETH is still up in the air. People are debating that. But for Bitcoin, it doesn't matter because Bitcoin's just focused on being this monetary asset. You can use this within all of these different environments. So it's almost like I think fragmentation is probably actually good for Bitcoin, establishing itself as like the monetary asset, the foundation of decentralized finance. ETH maybe struggles a little bit with that as these, like tokens that used to be viewed as money within their own native ecosystems now have to sort of compete on par as money assets in other ecosystems.
Yeah, I mean, do you guys see yourselves as building Bitcoin or crypto projects? I mean, there's kind of that divide that people talked about maybe a few years ago. There's Bitcoin and there's crypto, or there's blockchain and there's crypto. What are you building? That's for any of you.
I feel like the divide in my mind is a little bit different. Like it's BTC, the financial asset, right? So versus the technology part of it, right? So for the longest time, there was only Bitcoin, the financial asset. There weren't any like technical innovations coming from the Bitcoin space.
Yeah.
And I think what you're seeing now is people like Lombard and others. They're coming in and they're taking the asset and they're doing very interesting things with it by building new technology around it. And I think that's where it starts to overlap with the rest of the crypto industry.
Yeah.
Because the rest of the crypto industry has been very good at like innovating like new DeFi primitives or new type of like infrastructure layers. And now BTC, the asset, is now moving into those areas.
Now, do you feel comfortable going to Bitcoin Miami conferences, or do they see you kind of in that other camp? Maybe the dichotomy that I set up is not the correct verbiage or language, but I don't know. Like, do you feel accepted by that?
So I think going to Bitcoin conferences now, like this is one of the more exciting things going on in Bitcoin, right? Because we're getting out of this like pet rock mindset, really coming out of the block size wars. And people realize now that Bitcoin has no execution layer, right? And that is such a very different approach to the Ethereum L2 space where they're essentially competitive with Ethereum directly.
But they say that's an advantage, right? To play devil's advocate, the whole fact that they don't really have that sort of divide or those sorts of capabilities, the programmability, that's the beauty of Bitcoin.
So that is I think that's why we're accepted, is actually my point, because that is the advantage. You get to keep Bitcoin to be this slow, programmable, expensive base layer, but still separate the asset from the rails.
Yeah.
And it's synergistic, at least in Core's case. We're adding net new utility to Bitcoin with productive asset, Bitcoin DeFi, et cetera.
Yeah.
And I think that's why it's a very different opinion than it might have been a few years ago.
Yeah, so it's not like you're competing with the base layer like you would have been, building an L2 on Ethereum, I guess is what you guys are kind of alluding to,
Totally,
It's
and
a
like
different use case.
Totally, and whether you're like having transactions that add more, miner-based revenue, or whether it's core providing second block rewards to 75% of the Bitcoin hash rate, that's net accretive back to Bitcoin.
Now, is it correct to say that any of these Bitcoin L2s are quote-unquote secured by the Bitcoin base layer using the same language that Ethereum tries to use when they talk about rollups, or are we not there yet?
I think it depends on their different designs. Like for example.
Welcome back to CoinDesk Live from Consensus Hong Kong. Next, we are diving deep into decentralized AI with Jensen co-founder Ben Fielding. Ben, welcome.
Thank you. Great to be here.
Great to have you here. I think it's working.
Okay.
I think you're good.
I'm hearing something.
There we go. We're here at Consensus in Hong Kong. You were just telling us this is your first time in Hong Kong. Talk to us about what it means to be here from a crypto perspective with all of these people from all over the world meeting here in Hong Kong, which for so long has been one of the big Web3 hubs.
Yeah, it's great. I mean, the energy is really good. I think it typically is at Consensus, which is nice. But this is the first time, obviously, I've been to Consensus somewhere other than the US. So it's been interesting to see the different mix of people here. And as a company, we haven't spent much time in Asia at all, really. And so just meeting new people who are thinking about Web3, obviously, but also AI in general. We sit at the intersection. Has been really nice. And seeing the kind of the AI vibe here increasing. It's been increasing for the past year or so in the crypto space, but we've been thinking about it for 5 years now, so it's nice to see it become a bit more kind of mainstream.
Give us, the simple TLDR on what Jensen does and your background that got you into it.
Sure, yeah, so maybe I can start with my background and then I can give you the TLDR. So originally, my background's in machine learning research. So did my PhD in deep learning when machine learning and deep learning specifically was essentially becoming actually applicable in the real world rather than just a theoretical technique. So it was when a few years after the first sort of real application of using GPUs to train a neural network had happened. And so I came in, I started my PhD, and I quite quickly focused on an automation process of designing neural networks automatically. It's called neural architecture search, and TLDR, it's incredibly computationally expensive. It takes the computational expense of training a neural network and times it by thousands, hundreds of thousands, because you're training many, many neural networks. And so doing that exposed me to just how important compute is for machine learning a decade ago when it was still in academia. And then since then, obviously it's been something that's grown and grown and grown as machine learning gets applied wider. Culminating in, at least for me, co-founding Jensen nearly 5 years ago now, where we saw that compute problem just keeping growing, especially as industry was starting to take on machine learning. And so Jensen specifically tackles that compute problem, but also just generally the resource problem under machine learning. So you need various resources in order to train a machine learning model. Compute hardware is one of the biggest ones, access to GPUs. As everyone's probably aware, like NVIDIA hardware is a huge premium. It's a very important asset. And so Jensen focuses on creating a decentralized infrastructure across machine learning capable compute hardware so that theoretically you can use any device in the world to train or run inference on a machine learning model, not just a data center. You don't need to necessarily buy 1,000 NVIDIA H100s and put them in your own facility. You could just be using somebody else's. And crucially, you could be using somebody else's commodity hardware as well. You could be using a MacBook, you could be using thousands of MacBooks. All of these devices are capable of doing the operations under machine learning, but the infrastructure doesn't exist to send the models to those devices, to communicate between the devices, or to handle trust. When if I was to send my machine learning model to a random MacBook in the world, I have no idea if they're actually doing the work. I can't really check it myself, because if I could, I'd just do the work myself. And so Jensen solves that execution problem. So connect up every device and allow execution to happen consistently. Communication problem, to allow them to talk to each other. You can build large clusters out of any device. And then finally, the verification and trust problem, so that at the execution of the job itself, we can check that that work was done correctly, programmatically, and then prove it on chain. So never needs to be a human involved. There's no legal contracts required. You don't need to KYC people or anything like that. It's a pure, just programmatic infrastructure for accessing resources.
Given your background, I'm just so curious to hear your perspective on this. You know, we're at a crypto conference here, Consensus. We obviously focus on Web3 companies, and a lot of Bitcoin miners have been pivoting to companies that have these large data centers to help solve some of the challenges that you were just talking about. Do you think that this is a sustainable model for Bitcoin mining companies to pivot to?
Absolutely, I really do. We've been going to mining conferences for the past 4 years to talk about this, and we saw early on some interest from the miners because it represents another yield, basically. It's an interesting yield. It's also, they know the logistics and the on-the-ground operations required to run this hardware. They're very kind of well-resourced in doing that. They also understand the electricity problem, which ultimately sits underneath all of this. If you look at mining, you can look at it very similar to machine learning, where it's essentially a refinement process on top of electricity. What really matters is the electricity underneath, and then you've got this hardware that's able to turn that into some other valuable asset which you can then trade. Obviously in Bitcoin mining, that's Bitcoin itself, but in AI work, it's not necessarily an asset which just has kind of pure financial use cases where the value just comes from the consensus system. It's a real value for every single operation that's performed, paid for by somebody else in the world who has that task to perform. So in our view, it's a more consistent and uncapped yield for mining organizations because there's always more customers for machine learning in the world. Everybody wants to do more AI. In our view, it's an enabling technology that will change the entire way all knowledge work is done. It's all technology is going to move to this base data type of model parameters because it's just a better data type for us to interact with. As humans, it's much more natural. It gives us loads more operations we can perform with it. So if we assume that's going to be applied everywhere it possibly can be, there's an uncapped demand for access to the computational resources to do it. And so what Jensen does is create that infrastructure that allows anyone in the world to essentially be a kind of AI miner. But you're not mining anymore, you're actually just doing real work for another person in the world. And that work is requested via our system, it's verified via our system, payments can be done via our system. So it takes all of the kind of logistics away from the person running the data center. You don't have to find customers anymore, it's just open source software and you get a programmatic yield. You worry about finding your data center, finding your electricity source, and buying GPUs, CPU, TPU, whatever you need to actually do that refinement process.
So you basically just put them to work. Other people request the resources. I'm interested in, I mean, it's two things. You know, when you're talking about sort of very math-intensive computation, I get that you want the NVIDIAs. You're also talking about, you know, my computer, my phone, whatever it may be. You know, it reminds me of the old SETI models that we all played with 20 years ago at this point. Is there still is it still weighted in the way you're designing towards those who can afford the truly large machines, the big amount of GPUs that they can throw at any project?
Yeah, so there's some recent work, and we've thought this for a long time, that you don't necessarily need that very powerful hardware for every use case. In the pre-training context, which is when you're building a very large model in order to ingest as much data in the world as you possibly can, then a large centralized data center is very useful. But you don't necessarily need that for everything. That's not going to go away. That's going to be the way that we create these knowledge models in our view. So when you just take data in the world and you compress it into a model, that is just best and most efficiently done like that. But post-training, which you saw with DeepSeek and DeepSeek R1 and a lot of the kind of reinforcement learning efforts, supervised fine-tuning, etc., the way somebody takes one of those knowledge models and turns it into something that actually people use, all of that can be done with much lower powered hardware. That was one of the big things that came out of the DeepSeek releases, was just that realization that a lot of the post-training can be done on more commodity hardware. There's also the fact that the centralized models right now are trained in that way because that's the most efficient way to use centralized infrastructure. Right. But you can build models in entirely different ways. If you think about a machine learning model, ultimately it is just this set of mathematical operations at the lowest level. Decades of work in distributed systems about how we've made very efficient communication systems. You look at the way the internet works, we have all these caching mechanisms and things to load images more efficiently onto local devices. You can apply a lot of the learnings that we have from that to machine learning, and you can build models in a much more modular way. So a large part of what we do outside of building the infrastructure is research into how you build models like that. And our view is the future models that power the kind of new internet, which is based on this new data type, won't actually be these hyper-centralized models as we see them right now. They'll be much more modular models. They'll be composed on the fly when you need them. Maybe when you make a request to one of these models, it might bounce from your phone to your laptop to a device out in the cloud to another server, and you'll construct the path through those pieces of model on demand. And so you get the knowledge that you need for your request, but you don't go through all the knowledge that you don't need. Whereas these centralized models are kind of the sort of using a sledgehammer approach. It's just push everything into this model and yeah, we can make it work and it'll be exciting, but that's just the tip of the spear. We just proved that it worked doing that. Now we do the long productization to make it efficient and decentralized in our view.
All right, Ben, we got to leave it there. Thanks so much for joining us at the desk, and we hope you enjoy the rest of the conference.
Thank you.
Thank you.
That was Jensen co-founder Ben Fielding. Up next, Crypto.com President and Chief Operating Officer Eric Anziani joins us at the desk. Hello.
Hello, thanks for having me.
Thanks for being here. Now, I've asked almost everyone who has sat down in this chair this, but what does it mean for you to be here in Hong Kong at Consensus? What kinds of conversations have you been having? How have you been pushing things forward?
Well, first of all, I have to congratulate you guys. It's an amazing event. I'm very surprised to see so much energy. And Hong Kong is also known for that, but the last 2-3 years, it was not the same. And over the last few months, and when I came back this week, I can just feel the energy. Everybody is here. It's good conversation, whether for the Hong Kong local market or even Asia or global expansion. US funds are here. Everybody wants to participate, so I think it's very exciting to be here right now.
And Eric, you just got off stage, we hear. Tell us what you were speaking about. How did that go?
Yeah, we talked about how different this cycle is. And I think there was one main point is, of course, that institutions are finally in. In our industry, we've been talking about that for many years. Institutions are coming. But since January of 2024, when the Bitcoin ETF was approved in the US, this has changed the game completely. Even just for the ETF itself, and if you look at the net flow into it, it's about 100 billion that has been accumulated there. It's 5% of total Bitcoin market cap, 700 billion in volume, so it's massive. We also looked a bit at the regulatory clarity, and I think Hong Kong just a year ago put in place a new framework. A lot of participants are joining, but across the world, we're seeing more of that, more fit-for-purpose frameworks where people can actually participate with rules that are dedicated to digital assets. The big elephant in the room is, of course, the US, and everybody is super excited with the agenda of the new administration, and at Crypto.com, we're actively participating in this engagement to bring some clarity to the market, and everybody's looking at it, so I think it's going to be a great year for the industry.
How's Crypto.com looking at the Asian market?
Well, our roots are in Asia. We are globally headquartered in Singapore. We started our early days in Hong Kong. It's a very fast-paced and innovative continent, especially in the fintech and payment space. It's leapfrog the Western world by years. So there's a lot of great talent. Our innovation center is actually in Asia, where we build new technology. AI is also a space we're at the forefront from Asia. We've built a lot of great services for our customers, improve internally how we operate, our efficiency, our quality. So it's a great region. We love it here, and we'll continue to invest.
I'm interested, Eric, on, I think we all are very excited about what's going to happen in the U.S. around regulation. But there's also still so many unknowns, and there's still the region-by-region realities. You guys have millions of folks on the platform. We see coins come and go in seconds, right? How do you think we need to protect the normal consumer in a world where the speed of innovation is outpacing the speed of regulation?
It's a great question. I think when we would go back 3-4 years ago, we'll have maybe a couple of projects per month coming to market. Now we have 50,000 tokens per day being issued. It's almost insane, right? And it's very hard for consumers to grasp. So I think there's where the regulated platforms, the centralized exchange, can come and bring some sanity to the market. Do the due diligence, provide the right insights, maybe leveraging AI to at least sense check what makes sense, what could be higher risk. I think there will be different platforms and different tools to access these markets. I think on the mass retail platform, we have to be very careful. And the good thing is consumers go to those platforms because they know there is consumer protection, there's market integrity, so we'll check whether there's bad behavior, insider trading, these kind of things. And of course, there you can't offer as much opportunities, but they're still going to be a little bit more checked. But then people still want to access and view what's out there. So you need to provide tools maybe for advanced traders, maybe for people who want full control over their asset, like our on-chain wallet, to at least pass and access, maybe with some insights and more information as much as we can to help them navigate this new environment.
Can you tell us a little bit more about the due diligence you do when you're looking to list a token?
It varies a bit by market because we have different obligations from a regulatory standpoint, but the themes are the same. First, of course, we need to look at the project, who's behind it, their reputation, look at what's the roadmap, what they're planning, does it make sense, is there a market? Then there's things like liquidity, is it tradable, and we have 100 million customers, so when we list something, we need to make sure that can be hedged and they can buy and sell without any issue. There's, of course, compliance and legal aspect that we look at, and reputation, adverse media from the team or the project, and of course whether it's a security or not, right? And those are very important matters. And then finally, there's things around technology, right? Is it smart contract audited, the project solid on that front? Is there a risk of rug pull or issues on the technology side of the project? Those are kind of the main themes, and then there's nuances by market depending on our regulatory obligations.
Eric, you mentioned AI a little bit before. We just had Ben before, who's an AI whiz. For the normal consumer who's on your platform, I imagine a world that's probably not that far into the future, where people may really just say, here's my goals, and some agentic AI comes in and just really manages it all for you. Is that part of what you're thinking about when you think about how to build for the 100 million people on the platform? Almost take some of the risk away from them. Obviously, people who want to get their hands dirty will, but is that the future of trading?
I think it is, and I don't think it's very far from where we are now. And I think it will impact a lot of industries. The question is, how far do you go in the advice, right? And what are the licenses you have to do so? But generally, we already started bringing insights. So gathering all the news that are coming out and insights on what does that mean, and then giving the opportunity for people to trade. But I think this whole process can be done by voice, by text, and just, I want to get a position in this sector, can you help me do that? And the bot will just execute, helps you confirm at different steps of the way, but I think this is definitely the future. When we talk about AI, I also think there's a big opportunity for blockchain technology. You talk about AI agents. I think we're going to live with billions of AI agents in the next few years. Specialized education, healthcare, and financial services. And those AI agents will need to be paid and exchange value across the internet. The best solution out there is blockchain. So these billions agents will have maybe trillions of transactions on the blockchain. And we're helping build that. We have toolkits now for anyone who's building AI agents to integrate wallets, to be able to transfer value. And I think it's going to be very, very powerful as they leverage the blockchain technology.
You mentioned your on-chain wallet just a few minutes ago. We had Hong Feng, president of OKX, at the desk yesterday, and she said that the volume, I may be getting the numbers incorrect, but she was surprised at the volume in the wallet versus the centralized exchange, kind of indicating that folks are becoming more advanced, experimenting more with some of the more decentralized assets. Are you experiencing the same?
No, we do see a massive increase in decentralized exchange volume. Some of it is retail driven, for sure, with the meme coins and other trends that we're seeing these days. But we're also seeing institutions going into it. So that volume, API traded, is also driven by small firms and institutions. So it's a mix. And at the end of the day, we want to offer the right opportunities for customers. So we have tools that are fit for purpose for different customers, right? If you look at our exchange volume, in last quarter, we did about $1 trillion in volume globally. So it's still relatively sizable versus decentralized exchanges. But yeah, it's a new avenue. There's a lot of opportunities. Started driven by retail, but I can see some institutions are coming in.
So we've had a crazy couple of months in crypto, even on the front lines. As you look for the rest of the year, what are the trends that you're sort of focusing on? What are the areas that you think are going to be very big, or the things you're actually worried about when it comes to the crypto industry?
I think one of the big trends I highlighted at the beginning is that institutions are in, and we talked about the ETF, but there's also tokenization. So our view is that a lot of assets, especially financial instruments, will be tokenized. Could take years, could take a decade, or even 2 decades, but that's the trajectory where it's going. It's inevitable. And for that, we need to be prepared to distribute those tokenized assets. They may be on the blockchain, but if you tokenize a security, it will remain a security. So you need a broker-dealer to be able to distribute those. So over the last 2 years, we've kind of acquired many businesses and licenses to offer equities, FX, and commodities. And this year for us is about rolling that out. We just started in the US, so now people can buy Apple, Nvidia stock. Down the road, they'll be tokenized. And then we're bringing that to the rest of the world, to Asia as well. So we're very excited about that part, being a platform where you have all your financial assets and you have opportunities to grow cross-asset. You can now even buy stock using Bitcoin, right? It's new opportunities that are offered to our customers. Yeah, those are, I think, some of the main things I'm seeing. I think the other one, which is very exciting, is how states, central banks, or even sovereign funds will invest in the category. A lot of expectation for the US. We'll see how that goes. But even at the state level, there's more than 20 states that have put bill forward to be able to buy and keep Bitcoin or digital assets as reserve. I've been traveling across the world the last year, and each time I meet regulators or central banks, they're preparing for it. And that topic is really heating up. No one wants to be left behind. We don't know which vehicle yet will be used. Sometimes central banks, sometimes sovereign funds, sometimes Treasury Department. But this is a big trend, and I think it will have a massive impact on the industry.
Eric, we got to go, but I have to ask you one last question. Crypto.com really at the forefront of marketing in the crypto space. We just had the Super Bowl. I want your opinion. Why don't we see any crypto commercials in the Super Bowl anymore?
I'd love to see more. We've done that.
I know. That's why
you guys helped pioneer that.
Yeah. No, as a company, there's a journey, right? And not every day you need to be on the Super Bowl. I think when I do survey, I look at our brand awareness. In most markets, it's 70, 80% of unaided brand awareness. So do we need to do even more on that front? Maybe not at the stage we're in. But I think it's anything that can help the space grow. Our mission is bring crypto to every wallet. We'll continue to do that. It may not be a Super Bowl ad, but we'll innovate and we'll push the industry forward.
Eric, thank you so much for joining us.
Thank you.
That was Crypto.com President and Chief Operating Officer Eric Anziani. We are going to take a quick break. We will be right back. Welcome back to our live programming from Consensus Hong Kong. I'm Jen Sanasi, here with a new co-host now, G20 Group and venture partner at Fabric Ventures, Camilla McFarland. Hello.
Hi, Jen. How are you?
I'm doing great. How are you doing?
Good. The beginning of a long week in Hong Kong.
It really is. You know, I've asked almost everyone at this desk to explain the vibe for our audience at home. What have you been doing throughout Consensus Hong Kong? What have been the standout events for you?
It's been a great event. It's my first time in Hong Kong. It's my first event in Asia outside of DevCon earlier this year. And it's been really great to see in person some people I've been working with over the years from Singapore, from Hong Kong, from mainland China, that don't usually make it to the US events or to some of the European events. And so in that sense, it's like a completely different sort of conference that I've attended in the past, and it's great.
A lot of people have said that the chance to meet people IRL that you just see on Zoom or chat with on Telegram has been really big, especially because we've now taken the conference all the way across the globe to the Asian continent. I believe there are 100 different countries, or more than 100 different countries that are being represented here. So it's just been fantastic.
That's great. I mean, the G100 coming from G20.
I know,
it's great
right?
to see all the nations assemble. And really, especially also some of the, a lot of the leading exchanges in our space are Asian-based exchanges. And so to see some of that side of it, to meet some of the teams, and I think Asia is going to be a huge part of our market in general in terms of both institutional adoption and retail adoption. And so it's great to be here. There's nothing that beats like being here in person and meeting people in person.
Well, for our audience at home who is not familiar with you as a CoinDesk contributor, CoinDesk host, just give us a brief background so we can understand where you're coming from throughout our interviews this afternoon.
Sure, and it's my first time on CoinDesk Live, so happy to be with you all.
New contributor.
I joined the crypto industry in 2017 after starting my career at Bridgewater Associates, a hedge fund in New York. And when I started at Consensus, sort of helping to build out the early Ethereum ecosystem and work with folks to Joe Lubin and that team to really help bring Ethereum to market. And so it was the beginning of the conversation around things like real-world asset tokenization and just in general what programmable blockchains could do. And then I left to join Amanda Cassett, the CEO and founder of Serotonin, as sort of the first employee to help her build that out as sort of the leading Web3 marketing firm. And the last year have been working closer on the venture side with Fabric Ventures and leading out strategy at G20, which is one of the leading market makers and asset managers.
Amazing. Well, I look forward to the conversations we're going to have here on the stage, and let's turn to our first one.
Great.
All right. Our next guest is one of the most influential figures in Bitcoin. Adam Back joins us now. He's the CEO of Blockstream, where he's at the forefront of Bitcoin infrastructure development, working on everything from sidechains to the Liquid network and satellite-based Bitcoin nodes. Welcome, Adam.
Thanks for having me on.
Thanks for being here. Now, you know, because you've been sitting here for a few minutes, that I've been asking everyone about their experience at Consensus Hong Kong. What has your experience been like so far? Why did you decide to attend this conference amongst the plethora of conferences that there are out there?
Yeah, we have investors in the area. So Horizons Ventures is a Blockstream investor since earlier round, and it's a good opportunity to meet with investors. In the sort of family office sector, a lot of family offices in Hong Kong, and because we launched Blockstream Asset Management, a hedge fund for managing Bitcoin correlated investments for institutional investors.
Well, you are really one of the Bitcoin OGs out there, and so I really want to hear from you, from your perspective. Did you think that Bitcoin would take this trajectory when you got into the space?
Well, I mean, I think you've got to bear in mind that in the beginning, so before Bitcoin launched and as it launched, there was a period for a few years where there was no market, there was no exchange, there was no price. So really, the first few years for me were a kind of wait and see if it would bootstrap, because it's a kind of open question whether a network reaches a critical mass so there's a price. But, once that was evident, I, got actively involved and started trying to innovate in modularity and confidentiality, which is where some of the features in the Liquid sidechain came from. So I formed Blockstream to develop that technology in 2014.
Did you think we'd see institutional adoption come so quickly?
Well, I'm sort of always bullish, like perma-bull, and so it's always shocking to me how mispriced Bitcoin is, like how cheap it is compared to where, people in the industry see it as having potential. And so now, of course, different types of investors have slow decision-making processes, right? They have investment committees, they have due diligence, and so that is actually one of the reasons that we started the asset management division and recruited Sean Bill, because he has a hedge fund background with Prime Meridian Hedge Fund, won awards in 2022, 2023, but before that he was a pension fund manager in the Silicon Valley area and was actually the first public pension fund in the US to bring Bitcoin into the pension fund. And so he saw from the buying side how difficult it was to find Bitcoin-related fund managers who would meet the due diligence requirements, as well as the difficulty of explaining Bitcoin to the pension fund committees. And so now from the other side, we're looking to provide a solution to that kind of audience, as well as family offices who are a bit more agile and faster to move.
And Adam, I have a question for you. I mean, coming from being one of the two people that Satoshi first emailed in the very early days.
I can't hear it all.
Coming from being one of the two people that Satoshi first emailed in the early days of Bitcoin to how it is now, and launching these new funds and these products in order to get institutional investors sort of safe access to Bitcoin in a new way, other than just buying the underlying asset. Has it evolved how you saw it as sort of a store of value investment asset, or how does that shake out to what you first thought of for Bitcoin?
Right. I mean, I think people who have look at Bitcoin from a different perspective. So some people look at it as electronic cash for the internet, and of course that's the fundamental value driver. But with any technology, there are people who invest in the technology. And so with with the internet, you would buy technology stocks, and you would use the internet and adopt the internet. With Bitcoin, this is kind of, you can buy the internet of money, and that's a kind of index into the adoption, right? And so I think those are fully compatible things. And of course, then the next problem is, for different people with different backgrounds, they need different ways to interact with Bitcoin. So some types of investors have to buy, through public listings. They have to buy through ETFs. And so I think, the spot ETF approval last year was a big deal for some types of investors. And for the institutions, they require different things. And so really it's about improving access to Bitcoin, and in the case of pension funds, also providing hedge fund products which are de-risked.
Yeah.
We have a US dollar income fund, which actually is just on the back end doing Bitcoin secured lending, but it provides a kind of mid-interest rate as an asset-backed loan, which is something they would be familiar with from other kinds of lending, where they distribute pension fund money. And so one approach there is they can, over time, take the interest payments as Bitcoin. And so the principal is still there, being lent out, protected, over-collateralized by assets, but they build up a Bitcoin position from the interest. So that's the lowest risk end. And then the middle risk type of application is a low-risk Bitcoin yield. So that's targeting startups and public companies that have Bitcoin treasuries. So rather than just cold storing or typically placing with a custodian, they're able to achieve a kind of money market, low risk, low return. And then on the family office side, they tend to be a bit more aggressive risk takers. And so we have an alpha fund, which is, it's still hedged, but it has a more risk component to it for potentially higher upside.
That's great. From your background in applied cryptography to hedge fund manager, it's great to see these products coming to market.
I love to ask this question of people who've been in Bitcoin for a long time, maybe sometimes to my own detriment. But it sounded like you were saying Bitcoin is undervalued right now. Where do you see the price of Bitcoin going, let's say, by the end of the year?
Well, I mean, it's very hard to predict the short term, but...
Okay, we could do the long term.
I think that just based, without any sovereign Bitcoin reserves and that kind of thing in major countries, I think $1 million Bitcoin is in target for this cycle, like for this halving cycle, right? And of course, if a major country does start building a strategic Bitcoin reserve, I think that is a whole different ballgame, because the other countries will look at that, and so then you get kind of country-level adoption dynamic, which would just change everything. So it could bring forward, the price range and sort of jumpstart a higher level. Now, I think, for the individual investor, it's actually better if the governments don't get in because it gives you longer to buy, longer to build a position. For more, even the institutional money is, in many cases, pension funds of individuals, the private sector pensions, or mutual funds, people's savings. So I think it's interesting for those kind of asset classes to be investing in Bitcoin before governments get in, because, as the saying goes, everybody gets into Bitcoin at the price they deserve. I think governments deserve to come in later. So, but we'll see if they get in, earlier and change the picture.
Well, how long do you think it is until we see major governments getting into Bitcoin?
Well, it's quite unpredictable because it's part of the political process, and of course there are checks and balances and procedures within in the U.S. particularly. I'm not a U.S. resident. I don't really track U.S. politics, but even for U.S. residents, that's quite an unpredictable process. But it does seem that the Trump administration has enough representation in the different tiers of government to be able to be quite effective at bringing, taking things to fruition. So it really comes down to, follow through on their pre-election expression of support for Bitcoin. But in any case, I think it's certainly good enough that the regulations are turning to a more open for business approach. So, that alone is enough for, Bitcoin to progress.
Yeah. Adam, I think we could talk to you all day. So this is an official invite to join us on a CoinDesk show another time. Thank you so much for joining us at the desk here, and I hope you enjoy the rest of Consensus.
Thanks for having me on.
Thank you, Adam.
That was Blockstream CEO Adam Back. Up next, Mantra announced recently that it secured the first virtual assets regulatory authority DeFi license in Dubai. Joining us to discuss is Mantra CEO and co-founder John Mullen. Hello.
Hello, thanks for having me.
Thanks for being here. Now you got to tell us, we love to hear about the process of getting licenses. So talk to us about what this license means for your operations in Dubai.
Sure. So, first, it's incredibly exciting to be able to be one of the first participants to have a virtual asset license that allows us to do on-chain, DeFi, crypto-native activity in a licensed fashion. And we're super thankful to Vara for being a very progressive regulator that took the leap to do something that is legitimately world's first. For us, it's really important as a real-world asset tokenization-focused protocol to have regulatory compliance built in. So we build it into our protocol, but at the same time, you need to have that ability to bring, off-chain, real-world value on-chain, and you need to interact with regulatory authorities and governments to do it the proper way. So doing this with Vara has been a journey. Almost 3 years in the making.
I was going to say, how long was the journey?
Almost 3 years in the making. I use the words that they even said, like, we just never seen an applicant like you. But that just goes to show that they're taking a very progressive approach, and we think this, for the entire UAE. And we're very excited to be the first to get this license approval and excited to actually do some real pioneering stuff.
Are you working with other regulators?
Yeah, of course. We're based here in Hong Kong. So I live here. But we're active in Dubai as well. We're exploring other Emirates, ADGM, and Abu Dhabi. We're not doing anything actively in the US, to be honest. I'm an American, but we've honestly actively avoided the US for some time now, but we are expanding into that market, more on the protocol side, builder side, not necessarily on the application layer. So we're always engaging with different regulators, always engaging with different governments, but really the UAE is our focus at the moment.
I was going to ask, what do you think a more regulated DeFi means for the future of DeFi and crypto?
Sure. I think it's really important when you have real-world assets and tokenized assets that you have an on-chain user base that people can actually interact with these things. So we're seeing that, kind of interestingly, you're having this like permissioned layer or regulated activities where a lot of these assets are being issued on-chain, and then you're seeing the people who are doing things on-chain that are doing it in a permissionless fashion. Right now, they're kind of at odds with each other. We've built a permissionless protocol that connects those two sides. So it's a permissionless layer one, but you need both, right? And I think eventually you're going to start seeing that convergence. The technology, the regulatory frameworks will start allowing people to interact very easily on-chain through some sort of decentralized ID or identity layer. And frankly, like as you've seen, centralized exchanges, as they implemented KYC, as they got licensed, the industry has grown hand over fist.
Yeah.
And we see the same thing that's going to happen with on-chain finance and DeFi as you actually start having licensed venues, secondary markets. One of the reasons real-world assets haven't taken off historically is because of where do you actually trade them, where's the regulatory framework that you can operate under,
Sure.
and we're pioneering that in the UAE with VARA in Dubai.
I mean, now that you have this license, how are you thinking about this? Are you hoping to see more institutions start to come into the DeFi space, and what might that look like?
We're definitely not only hoping, we're seeing it, I would say. I think it's good that we're taking a very global approach, and we're interacting with a number of different asset classes, from real estate to financial instruments, private credit funds, money markets, et cetera, that are they're understandable assets for institutions and accredited investors and whales.
Right.
So these are things that they're buying in non-tokenized form, but now they're starting to do it in a tokenized form. And this, again, is a journey. Many of them have never actually done something on-chain before.
Sure.
So teaching them how to do it step by step. Still a bit of a clunky experience, to be honest. On-chain activity is still not a great user experience. Yeah, definitely. So we're working on that. It's an important thing, but we're seeing a lot of traction. I think when you have, particularly in the UAE, a sovereign government that's really putting this as like one of the key, future points of the whole country, the institutions, the regulators, the people on the street, they all pay attention.
You said you're American.
I am.
You've actively avoided it. Under the new administration, is this, might it be something that you explore?
Absolutely. I think one of our advantages is I've been in Asia for almost a decade now, maybe a little over. We've been active in the UAE and Dubai for 3 years plus, and I'm American, right? So I know how to act in my own country, and I think it's interesting because when I'm spending a lot of time in New York, I'm kind of in between Hong Kong, Dubai, and New York, so I'm on this like track back and forth. But we're going in and talking to these large asset managers, and many times they're like, "How did we miss you guys?" Because we're top 25 coin and asset right now, and there's still we literally only got a USD market yesterday when Kraken listed us.
Yeah, wow.
So we haven't even gotten really exposure to the US market yet, and even though I'm an American guy, people don't really know about us there. So I think there's a big opportunity, and we're excited about that. My dream is to be listed on Coinbase and to actually have people in my country that be able to buy it. Like if I try to tell my parents to go buy my token, they don't even know how, because the only place they could get it is on a DEX.
Right.
Right. So we're excited to actually go into the market and get people to actually know about us.
A question for you for people that are interested now that you are regulated.
Sure.
Do you think that regulated DeFi means an impact on the returns in DeFi? I know a lot of institutions are sort of waiting in the wings to get into DeFi because they see, once they own crypto assets, they can put it to work, they can put it into a decentralized finance system. But what does that look like for sort of the return profile of DeFi, or DeFi as an investable asset class?
Sure. I mean, obviously because we're heavily focused on real-world assets, many of the return profiles are not like a DeFi native yield. And actually one of the things that we were seeing a little bit is like the on-chain active users, there's a little bit of a product investor mismatch. What I mean by that is like, particularly retail, they don't want a 5% yielding treasury note. They want, a meme coin or something that has a 100x opportunity.
At least retail today.
today, on-chain activity today, but I think that's going to change as the user experience becomes better. There's more trusted platforms that people can interact with, and also even in bear markets, these are products that become a lot more attractive in a bear than they are in this perceived bull. And Mantra's going on 5 years now, so we've been building through multiple cycles.
Yeah.
RWAs will be multiple cycles, and we still think that there's a really interesting opportunity to, take some of these real yields rather than these like just inflated token crazy yields.
That last for hours and days.
Yeah, that last for hours and days, but actually put
Minutes.
these kind of DeFi primitives and like money Lego concepts on
Yeah.
top of something that actually has real sustainable value underneath it. So that's why we've been bullish on this for a long time.
We've talked about Dubai, Hong Kong, the US. Dubai and Hong Kong really have created these Web3 hubs for companies like yours to experiment, launch products in, like start exploring real world use cases.
Yep.
Now with the new administration in the United States catching up, there's more competition for companies like yours. What region do you see really doing it well?
So for some background, like we started here. It's interesting when you're trying to raise money, like people in Hong Kong wouldn't back me because I'm not from here, and then people in the US wouldn't back me because I was out here. And finally the Middle East supported us and believed in us, and we had a crazy run last year, and it built a really strong foundation. Building these networks, working on this licensing framework. It takes time to build these things over the years and over the cycles. And that just shows that there's this progressive long-term vision in that region. And for certain asset classes, we think they're going to be more successful in certain regions than others. So in real estate, in the UAE particularly, we think that's going to be the epicenter of real estate tokenization. And we've done big announcements with MAG, which is a conglomerate out there for a $500 million deal. We announced one recently with Damak. If you've ever been to Dubai, you see Damak signs everywhere.
Yeah.
That was a $1 billion deal. We worked very closely with that family and that team. They're amazing. And from top to bottom, that is going to be a place where real estate tokenization is going to take off because of the people who are around the table. You have the developers, you have the government, you have the regulator, and they're all trying to do something that's moving the needle forward with real tokenization, not just tokenizing some SPV and creating another layer, right? So real estate in the UAE is going to be big, in my opinion, real estate tokenization. Obviously, capital markets still run out of Wall Street, still run out of New York. So I think that's kind of the next place. And it's good to see the thawing of the rhetoric for crypto in the United States. And we're obviously excited to hopefully play a role there too.
It would be great to see real estate finally get properly tokenized. I remember there was a first pilot, and I think it was 2018 by Meridio at Consensus to do the first tokenization. It'd be great to, inside of 10 years, see that actually take hold as a real asset class.
Absolutely. I mean, I think with real estate as a tokenized asset as well, it's not just about having like liquid secondary markets, but other use cases like collateral.
Yeah.
So we're exploring how you can actually use tokenized assets to make them more composable in on-chain finance.
Fractionalize them, put them together into other products that are just net new to what we have today.
Absolutely. So super excited about that. We're definitely focused on the UAE for that at the moment. And that's because, again, you have that needle-moving opportunity where you're actually working to do something game-changing, not just taking an existing structure and putting a token around it. Because that's kind of what I call faux tokenization.
Sure. John, thank you so much for joining us at the desk. We hope you enjoy the rest of the event.
I appreciate it. Thanks for having me.
That was Mantra CEO and co-founder John Mullen. Next, we take a look at what's going on one of our stages.
You go out, then there's a broader market there, and they can like Hashid do. Hashid is now not only just Korea, but San Francisco, Singapore, Abu Dhabi, India. We have an office, and we brought the good points of each market, and we mixed, and eventually we can make a very competitive product. Like that, I think a Korean founder have to go out and find their position in each market, and always they're welcoming. So I think that is a kind of solution I can provide.
Okay, Sam, you get the last word here. Let's keep it positive and optimistic, please.
So,
what do you view as the solution to this?
So I'll be very political.
Go ahead, of course.
So, well, my macro view of Korea, Korean politics, Korean economics, I'm very negative. I think that's a very objective view. We have population decline, number one. We have the president in trouble. We don't have a proper functioning government. and we're being threatened from left and right. And in terms of competitive advantage, we don't have that edge that we had back in the 70s, 80s, up to 15 years ago. So we're faced with all these challenges. So I am very negative on the macro outlook of Korean economics in general, but I am very positive on the innovation side because Koreans, although we do lack inventions, if you look at the number of patents, IPs, we do lack in comparison to the US or even India. But when it comes to being innovative, we're very efficient, and and this is how we.
Hello and welcome back to CoinDesk Live from Consensus Hong Kong. We are coming to you from the Asia Pacific region, where our very first Hong Kong event is sold out. If you want to join in on the insights, deals, and fun, we will be in Toronto from May 14th to 16th. You can get your tickets at consensus2025.coindesk.com. Next up, we are bringing you a very special episode of Markets Daily. If you're new to this show, we navigate the currents shaping the crypto markets right here, providing insights against the broader financial landscape. So whether you're actively investing or just fascinated by crypto, this show is your compass to understanding what's happened, where we are, and where we are going. On today's show, I'm joined by Maelstrom Head of Investments and co-founder Akshat Vaidya. Hey, Akshat.
How's it going?
Oh, not bad. Just soaking in the vibes that are Consensus. I've asked almost everyone who sat at the desk with me today about what your experience has been like so far. What have you gotten up to?
It's been good. I'm based in Hong Kong, so for me, it's really nice to see a conference here in town. Hong Kong hasn't had this kind of vibrancy in the crypto space for a while. So yeah, it's been a really good experience.
You know, a lot of people have said that. Why do you think that is? You know, Hong Kong is really touted as this Web3 hub, especially for me. You know, I sit in North America. That's what I hear about all the time. And so it's a little bit surprising for me to hear that.
Yeah, so Hong Kong is home to trading firms mostly. And there aren't that many builders, not that many founders here. So you don't really see like a vibrant ecosystem of founders the way you see in New York or even SF. But you do see a lot of exchange activity. So I think like if you look at liquidity, you track on-chain metrics and off-chain metrics and see how wallets are interacting, a lot of that activity is happening out of Hong Kong.
Oh, that's interesting. So I guess when you look at the region, if you look at Asia Pacific, what's the role you see it playing in the evolution of Web3?
Ideas are usually formulated in the West. Teams are often Americans or Westerners abroad. And then the applications are actually used in Asia. I think if you break up Asia, you've got like Korea is one of the most vibrant and active markets in crypto, probably responsible for maybe 30% of revenue for all sexes. And then Hong Kong is more of a trading hub. Singapore is more where a lot of key decision makers reside. They make a lot of money and then they settle down in Singapore. So that's a good place for like boardroom style meetings. But I think that's kind of the landscape. And the Southeast Asia is also like kind of a rising market, but not as much as Korea.
Yeah, on this show, this is our special edition of our Markets Daily show, which we do every day on CoinDesk. We talk about investment strategies, we talk about the markets, and I know that you co-founded Maelstrom with Arthur Hayes, and we've talked to him a bunch on the show. Curious to hear from you what investments you're looking at. What's exciting to you?
Yeah, so Maelstrom was founded originally, it's a family office of Arthur Hayes, right? It was founded as a venture shop predominantly, and timing was good for that because we got up and running in 2022, which was sort of the kind of the end of the last cycle. And in 2023, we did most of our deals. Nowadays, it's a little different. It's not as enticing and exciting from a venture standpoint. We're doing a lot more liquid investments. So we stood up a liquid arm about 4 months ago. We brought on board Arthur's former boss when Arthur was an intern in TradFi. We brought him on to help us build out a liquid desk, and so we've been doing a lot more stuff on chain.
Tell me more about the interest in on-chain. What are you watching right now that is exciting for you?
DeFi for us. It's always been DeFi. It's DeFi infrastructure, staking infrastructure. That was kind of like what we. Those are probably the marquee deals that we did. EtherFi, Athena. If you think of a lot of these companies that we did quite well in, they were basically in that category, and that hasn't changed for us. So meme coins were a thing. AI quote-unquote agents, which are basically meme coins, were also a thing, but we didn't participate in any of that because we're looking at actual use cases, and the only use case that has actually stuck with crypto is DeFi, and maybe you could argue Bitcoin is kind of its own use case, store of value.
Talk to me a little bit more about the future you envision DeFi, the role you envision DeFi having in crypto's future. We've talked a lot at the desk with folks who are operating in different aspects of DeFi. We've talked about the institutional adoption of DeFi. What's the future that you are thinking about when you're looking at your investment strategy?
So my thesis now is that we're going to see, as the regulatory landscape starts to change in the US and more public and private companies try to get crypto on their balance sheets and start interacting with crypto a bit more, we're going to start to see regulatory wrappers for DeFi. So, I'll just give an example. Like Athena, they've co-launched this product with BlackRock. The concept being that BlackRock gives them regulatory cover, gives them basically a funnel to access family funds, whatever it is, any sort of like private market, slightly risk-on investors in the US. And Athena on the back end is the product. So I think you see more and more of that happening in DeFi, and I think that's the only way we see institutional adoption eventually.
Are there any challenges that are presented in these legal wrappers?
Yeah,
Yeah,
the
that's
regulations
what it
don't exist
sounds
yet.
like.
But there's only one way to find out. We have to just get started and then start facing the uphill battle and just go up.
Mm-hmm. When you look at the markets today or this week, what's your reaction? Are you even watching it anymore, or are you just focused on building?
Yeah, so with the fund, we stay apprised and abreast of what's happening.
Should.
Yeah, and on the venture side, there's not that much exciting stuff. There's not these cycles always follow an innovation cycle, right? There's like a big innovation that kicks off the next cycle usually. So back at the first cycle I was a part of, like 2013, 14, it was like, does Bitcoin even work? That's all we were testing, and that was the innovation. And then in 16, 17, 18, that cycle was all about smart contracts. That was when Ethereum and some of its competitors came about. Then 2020-ish was like DeFi. Let's find a use case for these smart contracts. And then this latest cycle has been more like fleshing out staking infrastructure and related business models and the intersection of that with DeFi. So that's how you have like Pendle, Athena, EtherFi. I mentioned some of these names that we've also invested in. So for me, I track that. So I'm trying to figure out what's the next innovation meta going to be. Right now, there's a couple hypotheses I have, but nothing really stuck yet.
Tell me more about your hypotheses. I just really want to get inside of your brain and hear about, the conclusions you're drawing from your research, since you are spending your time doing this and not all of us are.
Yeah. What I'm most excited about right now is the intents space. So intents, right, it's kind of this like concept where any complex on-chain activity that you want to do can be executed by a third party, and you basically pay them a fee, and that happens at scale, at lightning speed. So there's a couple companies who've invested in that category. It's still very early, but when that's unlocked, you imagine tying that with AI agents, everything being on-chain and DeFi, right? And then you've got this like crazy trifecta, AI agents executing on behalf of retail on DeFi, and then eventually you have that accessible to Main Street and Wall Street through legal wrappers. That's when things really take off.
Well, as you were just speaking there, I immediately thought about AI agents fitting into what you were talking about. And just a moment ago, you said AI agents are basically memes right now, right? So talk to me about the evolution of AI agents that you expect to see. A bunch of people who've been here at the desk today have talked about, AI agents in gaming, AI agents in trading. It is very experimental now. But do you envision a world where AI agents are just doing most of our tasks for us? And what does that look like from a DeFi perspective?
Yeah, I envision a world where right now all the complex deal making, the wheeling and dealing that happens in private markets. I'll give you an example, like a private equity firm, a regional private equity firm in America buying up all the veterinary labs in North Carolina, right? That's like a thing people do. That kind of stuff right now is highly frictional. It takes an entire career to build the network, get the capital, the expertise to do that. All of that can be replicated pretty easily because it's very formulaic by an AI agent, let's say in 50 to 100 years, right? That's like end state in my mind, is that you have an AI agent that can spin up a company, raise a fund, scour LinkedIn, hire the right people, build a team, and actually basically execute this level of complexity. run transactions like that. So I think for me, if I look at that being the end state, and then what we have now, which is basically these meme coins, right? They basically just like tweet.
Yeah.
And that's pretty much all they do right now. And they pretend to trade, kind of. We've got a long way to go. There's many, many steps before we can get from where we are now to that vision in 50 years where very complex transactions are being run by these things. So I think for us, it's not investable yet. It's not a real category, but it will be, and we're watching.
For our retail investors who are watching, I mean, meme coins have been a huge topic as we heard what's happening in Argentina with Milei's meme coin. Trump in the United States recently launched his meme coin. We have David Portnoy, who's like kind of like openly being honest about like pump and dump schemes. Talk to me about how you're looking at meme coins. And the reason I'm asking you is I've had a bunch of conversations here at the conference, at the desk and on the floor about people who are saying like, we're not actually even really paying attention to this anymore. It's kind of just noise and we're focused on building. What's your perspective?
Yeah, I see the meme coin thing as kind of, within VC circles, it was more like water cooler talk, right? Just you kind of, everyone in a Slack channel is like, oh, did you see this? So funny. And it's also, they're pointing out how brazenly scammy they are and how they're just outright Ponzi's, which in some ways is kind of honest. So
I guess it is kind of honest.
yeah, it's like, it's good and bad. So to be honest, we weren't really looking at it that closely. It was more like our analysts were joking around and making some investments, and Arthur every now and then apes into some of the big ones that rise. But for Maelstrom, the fund, we haven't done any meme coins. Meme coin infrastructure, however, there is some interesting stuff that's come about as a result. If you look at like Deck Screener, right? It's a great product, way better than CoinMarketCap, and the other one, CoinGecko. That basically came about because of the meme coin meta, and there's also some new DEX. So we've had a lot of like perps DEXs that have done really well. But we haven't seen many spot dexes do very well. Now there's like a whole ecosystem of spot dexes as a result of this meme coin shit. So you see like Moon.pump or whatever it is, Moon.shot, you got Pump.fun, you got all these different applications where you can actually trade meme coins, but eventually when the meme coin meta fades, they'll be used to trade normal crypto.
Well, that's interesting. The one good thing to come out of meme coins.
Yeah, I think it's a good thing, for sure.
Akshat, thank you so much for joining me at the desk and joining this special edition of Markets Daily.
Thanks for having me.
All right, that was Maelstrom, Head of Investments and co-founder Akshat Veda.
Investors. One of the things that obviously sparked kind of like the decision to do this because we believe that Bitcoin as an asset hasn't really been, just in general, doesn't have any DeFi elements to it, right? And so if we're able to unlock that market, it's going to be huge. But unfortunately, the way I look at it is that would still take some time, and so that's why a lot of startups have decided to do L2s. I actually just came out from a panel at TON. They're discussing about doing Bitcoin DeFi on TON, where they use Bitcoin and then do a bridge on the TON ecosystem and then launch something like a wrap Bitcoin on TON. I personally think that will come a lot sooner than L2s. I'm not saying that L2s are bearish, but I'm just saying that the use case, the utility is usually a lot more important. And right now, we're seeing a lot more money being invested into this ecosystem versus an L2 project that needs to build entirely new infrastructure, new user base, new development platform, etc.
But is this also something you're doing with your structured projects to create that yield? And maybe
yeah, so Bitcoin yield is very broad. You could do like on-chain and off-chain, right? So the way I imagine like MicroStrategy is that MicroStrategy started off with buying Bitcoin, but realistically, when we look into Asia, we're looking at three assets, which is Bitcoin, USD fiat, and shares. That's why in certain times when Bitcoin is dropping, MetaPlanet or MicroStrategy price would go up because the math is basically very simple. As long as you have utilizing the shares and utilizing the USD, even if Bitcoin price drop, then you're able to kind of make that hedge bet, right? So buying Bitcoin is one-to-one, but buying MetaPlanet stocks or MicroStrategy, you also have this leverage on top of it.
Wow. Is there a concern though that this could be, if you replicate this strategy, and there are just so many more companies, states, sovereign wealth funds that start having these Bitcoin treasuries, I don't know, does that strategy get saturated?
So I think it's all about timing. If we did this strategy maybe 3 years ago, I think we would struggle a lot. I think a big part of the timing here is, one, the Bitcoin ETF in the US and a Bitcoin ETF in Hong Kong, right? I think in general, if you look at our stock in Hong Kong, it's been running for, after our announcement, it's been running for 2 weeks now. We've noticed like firms like Goldman, UBS, JP Morgan are buying it. There's volume coming from those firms. This is something that we haven't seen in the past, which means that institutional monies are coming in, or slowly coming in.
Yeah.
Obviously, we're still in GO right now, in general offering right now, but the idea is that yes, we will be welcoming institutions. We'll have structural products that similar to MetaPlanet. That will enable the company to grow at rates that will catch up a lot faster compared to what we've seen in the US.
Yeah, but also I think to add to your point, you can't just do another Bitcoin ETFs anymore, right? Unless you're from a country where access to US security is restricted and you don't have access to the US ETF, just launching a pure vanilla ETF in any other countries would not make you successful automatically. I think what people are looking at now is like, what are some additional ways that I can improve, get yield? And in Asia specifically, clients here, institutional clients particularly, are very highly dependent on yield, right? Their yield hurdle is extremely higher than the US investors. So we're definitely seeing that happening. And in Japan specifically, they're one of the biggest buyers of volatility. Yeah. So if you look at all the structured product that exists in Japan today, in traditional markets, and the same buyer can definitely go and buy the Bitcoin structured products as well. The only nuance is distribution. And I think when you wrap the whole entire product into a exchange tradable solution that allows that distribution to happen in a much more seamless way, means a lot more people can get access to it.
Amy, you mentioned $6 trillion in crypto assets being processed on Fireblocks. Where is that?
Like, it's awesome.
Hello and welcome back to CoinDesk Live from Consensus Hong Kong. I'm Jen Sanasi, here with my co-host Camilla McFarland. We are joined now by one of the most vocal advocates for Bitcoin, Samson Mao. Welcome. Nice to see you IRL. You need to hold the microphone so people can hear you. Nice to see you IRL. This is an instance where Samson and I have met on the computer, but never in real life, and that is a big theme of this conference.
It is.
Okay, let's get into it. You were talking on a panel about Bitcoin's evolution with Adam Beck. He joined us at the desk earlier. What was your biggest takeaway? What happened on that stage?
We talked about a lot of things, the bullish thesis for Bitcoin adoption around the world. We covered things like MicroStrategy, just the immense buy pressure, pension funds coming in, sovereign wealth funds, nation states. And oddly enough, the takeaway was I mentioned something about Bitcoin prices probably suppressed now, and that's what made the media cycles for some reason. I don't know why.
Media loves a good Bitcoin price prediction. I can tell you that.
Yeah?
I think the last time, Samson, you and I talked, you said $1 million Bitcoin in how long? Maybe by 2030?
I think it should have been last year, but I had to push it back. So let's say 2025, 1 million.
1 million by 2025. That's a very bold prediction. What gets us there?
Well, the thing you have to understand is as the Bitcoin price goes up, the entire market dynamic changes. So Bitcoin at 100K is kind of like this. People are excited, but now they're bored again. People think it's a top. People are making predictions of a reasonable price target, maybe 150, maybe 200. They don't want to go too crazy out there. But when Bitcoin goes to 250, it's a very different landscape. When we get to 500,000, it's also a very different landscape too. We're halfway to overtaking gold. And at that point, people are starting to wonder, what do I sell Bitcoin for? Why am I selling Bitcoin for dollars? And then that catapults us again. So it's probably like a 2 or 3x from here, and then another 2 or 3x to get us to 1 million.
I'm sorry I said 2030. I think it was so unfathomable for me that I had to give it that extra year, but it is by 2025.
Everything's happening faster now,
Yeah.
especially with the Trump admin talking about a strategic Bitcoin reserve. And it's things like this that can really change the market dynamics in an instant, because it's just such a powerful shift, much like with the ETFs. When the ETFs launched in the US, it was sort of like a blessing worldwide that Bitcoin is a legitimate asset class now, and everyone can build products around it and financialize it. So everyone followed the US. And I think it's going to be the exact same thing with SBRs. Once the US does it, everyone's going to realize, okay, we need it too.
Yeah.
And there'll be a fast follow and a scramble to get theirs put together.
So in terms of SBRs, you've been having conversations with governments for a while now about Bitcoin helping El Salvador. In terms of the biggest pools of institutional capital in the world, you have pensions now allocating to crypto for a while. You have endowments now allocating to crypto. Sovereign wealth was kind of like that untouchable last thing to come. Now you have El Salvador, rumors of US. Like, what does that look like in the future? Is it inevitable that we get a US Bitcoin reserve and it's just a matter of when? And then if we do, what does the world look like after that?
I think it is inevitable. The US absolutely needs a Bitcoin reserve, and I think every other country does as well. The way I see it is Bitcoin is going to be the next major economic driver. Like, people are very bullish on AI, and they think AI is going to change the entire financial landscape because of massive investment amounts into it. But all those companies that are doing things like AI, they need to store their money somewhere. Like NVIDIA needs a vehicle to store their money from selling chips and whatnot, similar to what MicroStrategy is doing, right? They're trying to protect their savings. And it's just the same thing, but on a nation-state level, where countries realize that this is the next big thing. This is a superior asset class, and they're going to need to do something. And you couple that with the astronomical debt levels and the attempts to mitigate that, like creating the Department of Government Efficiency, right? And it goes to show that people are realizing that the existing system is not sustainable. The interest payments are approaching 1 trillion or are at 1 trillion a year. And it's only going to snowball because interest compounds unless they magically fix the interest rate somehow. But everything points to Bitcoin becoming the new asset that everyone's just piling into. And I think the US doing it will trigger it everywhere else.
Have you spoken to the US government about this?
No, I haven't, but there's tons of people already working on the US. Our main focus is LATAM and other regions that are not as much in the spotlight.
What governments have you been in conversation with?
In this region?
Yeah.
We've talked to politicians in Korea, Taiwan, and Japan. And they're all very conservative. The message is really, we're waiting to see, like we're aware of Bitcoin, but we're going to wait for the US to make a move. And I think that's a strategic blunder, because what they're looking at it from, the point of view they're looking at it from is they want to be risk averse. And they say that, we're very risk averse. But risk is sort of a circle. If you go too far in risk aversion, you go to the risky side of the circle.
Yeah.
And I think that's what's going to happen, because they're going to miss the boat on front-running the US.
Yeah.
Most countries don't have the fortitude to front-run the US. They're waiting for a sign. And I believe it's going to be an exact replay of the ETFs. So the US launched ETFs first. Now they're at 1.3 million or so coins.
Sure.
And Hong Kong, I think, has 3,000 or 4,000 coins. Australia was third, and they have a few hundred coins. So you can see, like, if the US goes first, the other countries are not going to be able to keep up if it plays out the same way as ETFs.
I have one question for you that I'm sure you get a lot. The original vision of Bitcoin was to be non-government backed and non-government based, and now we're in a world where we have governments regulating it, adding it to strategic government reserves. How do you square that circle with the original vision? Is this good for crypto other than number go up? Like, what does this mean for the future of the asset?
Well, governments always want what is valuable. And if Bitcoin succeeded, it was inevitable that governments will want Bitcoin because it's valuable, right? Governments didn't just wake up one day and say we wanted gold. They just wanted gold because it was valuable. It's what the people are using, and then that's what they want. So it's the same with Bitcoin. And I think the risk to Bitcoin is less than that of gold. Gold can be captured, and it's very hard to verify. There's talks of trying to audit Fort Knox now, and that's a massive undertaking, if even possible, at a massive cost. And you just don't have that problem with Bitcoin. So with gold, you don't have delivery most of the time. It's always paper. And that's what leads to this unverified pile of gold, theoretically, in Fort Knox. But with Bitcoin, you can always verify easily if you run a node. And I think that it's so easy to transport, too, that you don't come across the same problem as gold where it's captured. So even if governments buy up a large amount of Bitcoin, which I also don't think is possible, it's not going to end up like gold where it's captured. Bitcoin will still be money for the world.
Samson, thank you so much for joining us at the desk. You must come and join one of our shows again soon. It's always such a pleasure chatting with you.
Happy to. Thank you.
Meet you, Samson.
That was Jan3 CEO Samson Mao. All right, we are going to the builder stage now, where there is a ton of excitement building for our Pitch Fest winner announcement. Let's take a look.
Now is the time. We all know what time it is. The announcement of the runner-up and the final winner for CoinDesk Pitch Fest. Just as a reminder, if you weren't here in the morning or early afternoon, what was the journey? We had 12 startups pitching in front of VCs around the world for the win. One winner, one runner-up. They only have 3 minutes to pitch. That's an amazing accomplishment. The winner is going to get $5,000 worth of DMTRs and 5 coaching sessions. And to announce the runner-up, I want to introduce here on stage none other than John Trask, CEO of Dimitra.
Hey guys.
Together with our finalists, who are Transcript, OneVerse Technology, Liquidium, and Cred Shields. Please come all on stage. Here we have them. Here they're all waiting for the results. And John, I want you to tell us first, who is the runner-up winner?
Oh, okay. So I'll jump right to that. I have my digital envelope here. If I remember my password, I'll be able to tell you who it is. And the runner-up is Cred Shields. Congratulations.
Please come here for a photo. We want to remember that moment. John.
All right.
John. Yes, just stand there for a photo. Wait. We want a photo with Cred Shields.
Sir?
Just here a photo in the middle with you two.
Okay.
And here we have the photographer. Thumbs up. Big smile, and let's say all consensus. There we go. One more photo. You're all taking photos. Remember to share if you have photos of the event. I'm sure you'll have. Thank you so much.
Yeah, thank you.
And thank you, Shashank. Congratulations. And
was there a prize for the runner-up?
Later on.
I'll give you $2,500.
No problems now. John, who is the winner of this amazing Pitch Fest?
All right. Is there a pool? All right, the winner of Pitch Fest 2025 is Transcripts.
Oh, congratulations. John, please show the trophy to Transcript.
Wow, look at
Dang.
that. Very nice. This is yours.
And again, a photo, please, together. Big smile. Oh, we love photos. Thank you to John from Dimitra. We
Thank
want
you,
to
guys.
wait. We want to see if anybody else, any other startup that pitched today is still here. Any of you still in the floor? Please come on stage. We want to have a group photo. No? You're all maybe having meetings. Oh, I see someone walking. Is there one of the other startups coming on the stage? It is a big accomplishment to be on the stage.
The Pitch Fest winners will be joining us at the desk later on today, so stick around to hear more about their innovative ideas. Our next guests are both building infrastructure and applications designed to drive Web3 adoption in regions where mobile-first economies, digital payments, and DeFi are reshaping how people interact with money. Joining the show now is Jambo co-founder James Zhang and GoChapa co-founder Sam Kim. Hello.
Hi, how you doing?
How are you both doing? We are getting to the end of the third day of consensus, and it feels like your energy levels are still there.
Hey, it's a long event, 3 days, but honestly, everything has been spectacular with the hosting, so appreciate you guys for having us.
Well, thank you. I like to give people the opportunity to give me compliments. So, Sam, how's your experience been at consensus?
It's been great. 3 days. It's been tiring, but every day I feel like I'm meeting new people, getting very energized, so it doesn't feel like it's the last day.
Yeah, it really doesn't. There's so much going on, still so much to talk about. James, I'm going to start with you. Just give us a quick foundation as to what you're building.
Awesome. James, co-founder and CEO of Jambo. We're building the world's largest mobile on-chain network, starting with the Jambo phone, so I don't know where the camera is. $99 smartphone, most powerful Web3 smartphone out there. Comes pre-installed with an array of Web3 applications, but basically we're building a parallel mobile ecosystem, disrupting the duopoly of Apple and Google.
We're going to come right back to that. I want to hear a little bit about GoChapa now.
Sure. So my name is Sam Kim. I'm the co-founder of GoChapa. We are first licensed fiat on and off-ramp centralized exchange in Kenya. We're linking with the mobile money system that has a reach of 190 million people. We just launched. We had a soft launch about 2 weeks ago, and we're looking to have a full launch in 2 months' time when the government hands out the VASP license.
Mm-hmm. Now, both companies really focused on the African continent. James, I'm going to come back to you. Talk to me about the opportunity there when it comes to the challenges that this technology presents a solution for.
For sure. So first of all, to everyone, I'm ethnically Chinese, but my family's third generation African from the Congo in Central Africa, so I grew up my entire life there. And when you look at regions like Africa, our largest market right now is Latin America, like Brazil, you go through issues like cross-border payments, remittances, banking the unbanked, right? And this is due to hyperinflation, high transaction fees, and a lack of access to banking, where this is where neobanks are more prevalent. So for Jambo, we realized all of these issues begins and ends with mobile, and that is where we started with Jambo. But at the end of the day, make one thing clear, it's not like we come into these regions and say, hey guys, look at this thing called cryptocurrency and Web3 rails that helps you circumvent legacy gatekeepers. It's more like Nigeria is already the top 10 country yearly, P2P Bitcoin transaction volumes. Botswana just issued one of the first SEC licenses for crypto out of the 54 countries in Africa. Right? Kenya, one of the largest business corridors. So for us, it's providing them access to a global financial ecosystem within the Jambo phone with our Web3 partners and bridging them to the Web3 apps that we know. But it is already very prevalent, the opportunity in the region.
Sam, talk to us about why Africa for GoChapa.
So I think James laid down a good foundation of where Africa is and why it's an attractive market. Just like James, I grew up in Kenya for 10 years, and I've always wanted to come back. But there has been some periods where we felt that the regulations were opening up for financial closure, meaning there's been a big concern by all central banks that have foreign debts in Africa because they have to pay back the debt in US dollars. So they were very reluctant to open up the financial capital markets. At the same time, they were very reluctant and hostile towards crypto companies, just like James and just like I. However, I've seen a shift in that mindset from last year. And I think now the government realizes there's more opportunities than being threatened. So once we started engaging with the government, I I was actually very surprised that the government was very ready actually for changes, and they knew that the changes is coming, and that they have to also be ready for the changes. And at the same time, if you look at the demographics, it is the fastest growing population in the world, and it's also connected by 5G. Everybody has a smartphone. They might not have a bank account, but they do have a smartphone, and they're already transacting on the smartphone. So it was actually easier for us to link with the mobile money system. Instead of having to go through all 50 banks, we just have to link with one mobile system. So I think that's going to be a good entry point for other companies to also come into Africa and start opening up the capital markets.
Mm-hmm. You said something changed in government in the last year. What do you think signaled that change?
So there were three things that happened. First of all, they realized that there was a huge OTC transaction happening anyway, with or without the regulation. We're seeing huge growth in terms of crypto wallets opening. We've seen this in Nigeria, we've seen this in Kenya, we've seen this in South Africa. And even though the Nigerian government, for example, was against it and they tried to be very hostile, the number of wallets being opened in Nigeria is, I think, number 1 or 2 in the world. So I think that now the government is realizing that, okay, if we can't fight it, we might as well try to regulate it. Mm-hmm. And I think that's a big change that I felt from last year. And also from last year, IMF has been advising a lot of the sub-Saharan African countries to start coming up with regulations regarding crypto, because they were afraid that a lot of capital inflows and outflows were not being monitored. Mm-hmm. And the number 3 is just a number from demand. A lot of if you go around Kenya, Tanzania. You walk around, everybody uses mobile money system, and they have a crypto wallet anyway. They don't have a bank account, they don't have a credit card, but they have a crypto wallet. So I think it's now time where the supply and demands meet, and the government is now looking to regulate the market.
So it sounds like the necessity is there, right? There is a problem to solve, and the technology solves the problem. You know, we often hear about the challenges in emerging markets when it comes to infrastructure and access. Maybe, James, you can tell me a little bit about that. Is that a challenge for you in bringing Jambo to market, and how are you addressing that?
Great question. So I think if you look at the 3 emerging markets, right, Latin America, Africa, Southeast Asia, very broadly, I think Latin America is like 10, 20 years ahead of Africa. Right, both very young demographics. I say this because in Latin America and Brazil, they use Pix, right? Just like in Kenya, they use M-Pesa, but it's very fractionalized. It's not cross-country, just in that specific region. So when you are dealing with trying to expand to this entire continent, right? People think of Africa as just a country, or even LATAM sometimes. But you're dealing with thousands, of languages, billions of people, 1.4 billion. So the challenge is getting things international, cross-border, and not fractionalizing the liquidity in one region. For Jambo, though, our target demographic is a very young age, which is why we're very fortunate in these emerging markets. Younger people, they're very smart there. They understand hyperinflation. Like our devs in Argentina in the deep bear market still wanted cryptocurrencies as their payment rather than local currencies, right? You look at Mexico today, like over 3% of their GDP is just from remittances, sending money back. And right now, that can be an order of magnitude a lot cheaper if you're using Web3 technologies. So I think for Jambo, one of the biggest things is having the language barrier, having the cultural barrier, make sure we can get into each of these regions, because emerging markets and onboard the next billion users is our goal.
$99 for the phone, really working to displace some of the other smartphone providers out there. How did you get the price so low?
Great question. So everyone knows supply chain is in Asia, in China. Ethnically being Chinese, it took us still 1.5 years to source 3 factories where we were able to invest in them and they invested in us to be incentively aligned. If you look at most deep-in hardware products in the Web3 space today, there usually is a backlog of pre-orders and a lot of time that takes in coming. We have shipped a bit over 850,000 phones last year to 128 countries. So we're solving our distribution funnel, and the supply chain and manufacturing was the largest bottleneck usually for a deep-in project. So very, very glad, I guess, being ethnically Chinese and having that access to supply chain.
You know, the use case makes a lot of sense here. I want to go now over to Gochapa. Any challenges in, I guess when you're looking at your customers, your partners, any challenges in getting them to kind of understand the Web3 side of things?
Sure, there's a lot of challenges. For the end user, there's three main challenges that every crypto exchange or wallet or service is going to have when entering Kenya. Number one is obviously regulation, dealing with the government, which is a difficult part, and we've decided to just do the difficult thing first. And then I think the second part is the hardware, which I think James is really smart coming with that product, because not everybody can afford a smartphone. And so to have the software in your phone, embedded in your phone, I think that's is something that we benchmark James and what he's doing with Jumbo. Number three is obviously the software part. And then the software part is where you need to have a UX that is user-friendly. At the same time, you have to understand that a lot of the young Africans are born with using mobile money first. Even before touching a note, paper, or coin, some of them, they don't even carry any coins. They've never done that for all their lives. So to have an UX that is actually thinking outside the box, so it doesn't. So, for example, we try to not use the word money, which is pesa in Swahili, and we use the phrase chapa, which is a slang for money. So go chapa in slang Swahili means let's go hustle and make money. So we try to come up with innovative ways to reach the end user, but not to make it look like it's actually a bank wallet. However, for them to have no barrier when using our product.
I really like that. It really sounds like you put a lot of effort into understanding your audience and how to reach them and how to help them understand this new technology. You know, people in this industry and on many of the stages talk about onboarding the next billion users. And I want to end our discussion here. It sounds like the next billion users that are going to be onboarded into the space are in emerging markets. And so what does that mean for both of you when it comes to, you know, events like this? Where should we be focusing what we're talking about?
So I think, first of all, great question. I know we're coming up on time, but if you look at just how on-chain activity is formulated today, incentive structures are for people that are already in the space to airdrop farm, to do various transactions on-chain, to get rewards and incentives from L1s, L2s that are newly launching. But we all know the global south and use cases like stablecoin, hedging against hyperinflation, using it for remittances, going through the transaction legacy gatekeeper system is where the sexy crypto moniker comes from, where investors and VCs are also investing. But it also is a very good question, like where has the last 3 or 5, IPO companies in Africa or in LATAM come out of? It's not as prevalent. There's definitely a lot of fractionalized difficulties. I'll make that point very clear. But I'm very excited. I wake up and go to sleep thinking about distribution, and that is something very important to our team, and I think that is what's going to help onboard next billion users.
Sam, we'll give you a quick last word.
Sure, I'm very excited about the opportunities in Africa. I'm sure everybody sees it, everybody knows it. However, there is an entry barrier. But I believe in 1 or 2 years, I'm very confident that even Consensus will have a big conference in Africa for sure. And
I look forward to that.
Thank you. And I look forward to the time where we're seeing a big shift. We had a big shift from the U.S. to Asia, and now the Asia investors are looking to invest in African projects such as Jumbo and Gochapa. And obviously, James is a pioneer. He started a year before me, actually. And I think we're going to have a lot of people like James and I coming out of, we're like the second, third generation, but we're going to have first, we're going to have local projects coming up as well. And my goal is to have at least 5 local projects listed on Gochapa. So 5 Kenyan projects, crypto projects, that will be listed in Gochapa, and then move on to the other bigger global exchanges.
James, Sam, thank you so much for joining me today.
Appreciate your time.
Thank you for having us.
That was Jumbo co-founder James Zhang and Gochapa co-founder Sam Kim. Hello and welcome back to CoinDesk Live from Consensus Hong Kong. I am Jen Sanasi, and I'm here with probably my favorite co-host of the day, managing editor Ben Schiller.
You're my favorite too.
Thank you, Ben.
Yeah.
You are managing editor of Consensus Magazine, Opinions and Features. Well, the perfect place for a guy like you. Talk to me about what you've been experiencing so far. We are coming to the end of the day. Oh my gosh, look, they're like... I wish I could describe this to our audience. There are two big mascots that are walking through the showroom floor
Human
right
mascots.
now. All right. Well, okay. What have you been experiencing? What kind of conversations have you been having?
Well, I've been doing firesides. We were just at the Pitch Fest stage, so we're just going to have the winner of the Pitch Fest on in a minute. So that was really exciting. What else have I been doing? We're discussing decentralized AI with a bunch of very smart VC people and DeepIn, which is a very emerging, burgeoning source of crypto. So it's been a fun-packed day and really a great conference, I think.
We've talked a lot about decentralized AI at the desk. We've talked a lot about DeepIn. We've talked about regulation in all parts of the world. We've talked about bringing the conversation from North America to Asia. There's been like this big focus now on Africa. Our last guest said, you know, in 2 years' time, he hopes that Consensus will be in Africa.
That would be fun.
That would be a lot of fun. I'm putting it out there. I'm going to try and manifest that. Hopefully, hopefully we could get to Africa. What are you looking forward to for the rest of the day? I know we have Crypto Fight Night tonight. The Pitch Fest winners have been announced. Hackathon winners have not yet been announced.
That's right.
What are you thinking?
I'm looking forward to getting off stage and not interviewing people anymore.
Okay. Ben is looking forward to leaving me.
No, that's I was only joking. What am I looking forward to? Yeah, the fight night's going to be fun. So we've got a bunch of influencers like going at it, so that's really fun. I think maybe we should have the founders going at it, maybe
That would be interesting. I just think it's like an interesting convergence, crypto and combat, you know?
Yeah.
I said yesterday, from Twitter fingers to like real life, I think there's a level of training that you need to go through to get there, so it should be interesting.
Yeah, I think it's going to be really fun.
Yeah. All right, let's get to our next guest, shall we, Ben?
Yep.
Okay. Our next guest is the CEO of an AI-powered education platform with a Bitcoin treasury. Welcome, Genius Group CEO and founder, Roger Hamilton. Hey, Roger.
Hey, Jen. How's it going?
Not bad. I mean, we've been having a lot of conversations here about Bitcoin treasury, you know, on a government level. So let's start there, and then we'll get into the AI education piece. Talk to us about Genius Group's Bitcoin treasury. What was the kind of thinking behind having this?
So I first met Michael Saylor about this time last year, when he said we should be a Bitcoin treasury company. We're slow learners, so it took us another 9 months. So it was actually in November. We decided we were going to go out and buy.
I think 9 months is fast.
Not in Bitcoin time. So like 1,000 Bitcoin was what we said we wanted to be reaching. We're now at 440 after 10 weeks. We're meeting up with Simon Garovich, who is the head of MetaPlanet. They started about 6 months before us. We're ahead of them on the curve at the moment. They went from 15 million market cap to 1.5 billion to where they are today. And this week, we saw the first Bitcoin treasury company here in Hong Kong, and they just announced one Bitcoin that they were buying for under 100,000, and their market cap went up over $100 million, right? So there's a huge appetite for investors wanting to invest in Bitcoin treasury companies right now.
How are you acquiring the Bitcoin? You're just buying it?
We are going into the market. We're buying the Bitcoin. We work together with the institutional team at Coinbase in Singapore. So we're a Singapore-based company, which means we've got 0% capital gains tax, but we're publicly listed on the New York Stock Exchange American. So we get the volume and the investors from America, but we actually have got a really great custody team in Singapore, and our education company is global. So, for example, we're a sponsor here. We have got our Bitcoin Academy that's starting, where our first mentor is Seyfried Mus, who wrote the Bitcoin standard. We're about to go to see Anthony Popliano, who's a well-known podcaster with Investor Week he's running for Bitcoin, where we're going to be running a micro course with all of the speakers there. So we're really bringing, as much as we can, the whole idea of what is it to have a Bitcoin treasury to everyone who wants to learn about it.
So you know Michael Saylor personally. How did you meet him? How did you get involved with the Bitcoin?
So I got to know Michael through Peter Diamandis. So Peter Diamandis, who runs the XPRIZE, as well as Singularity University, and more recently Abundance 360. He was with Donald Trump just yesterday at the FII Institute, where Donald Trump, again, was saying that he sees this massive revolution happening within crypto. So just having spent the last 10 years with Peter, where Peter's whole view is if we look at the future, there's really the ABCs of the future, right? A being AI, B being Bitcoin, and C being community. Like, what do we humans do when we have a digital economy and we have a digital monetary system, which is where we're heading right now. And that's a big part of what we're educating people on within Genius Group as well.
Right. So MicroStrategy is a software company that's really become known for buying up Bitcoin, right? MicroStrategy stock, many will say, is a
strategy now, isn't it?
Is it strategy now?
I think they rebranded.
Oh, okay. Okay,
Anyway.
we could drop the MicroStrategy. Many people will say their stock is a proxy for Bitcoin. How are you looking at your company? Are you an AI education company? Are you a Bitcoin treasury company? How do you differentiate your business?
Well, one thing that all Bitcoin treasury companies have in common is that they are custodying some, or in some cases, a large proportion of their treasury in Bitcoin. But at the end of the day, they all have an operating business of some sort as well. So in Strategy's case, they have got an AI SaaS business. In the case of MetaPlanet, they have got a hotel business. In our case, we have an education business. And the education business already has got Entrepreneur Academy, it's got the Investor Academy, of which our crypto club was one of the, and has been one of the most successful paths all the way through pandemic and since then. But when it comes to now us launching the Bitcoin Academy, so much of this is about how do we add value to what's happening within Bitcoin, right? One thing Michael Saylor says, which I agree with, is that the only thing that can really beat Bitcoin as an asset, given that it's been going up by 60% a year for the last 10 years, is a Bitcoin treasury company, because it has the value of Bitcoin plus on top of it the value of an operation that can be adding additional profitability. And that's why that's really important, is if I'm an ETF or if I'm an individual that owns Bitcoin, if Bitcoin drops 50%, right, then there's no way you're generating any income out of that. If you are a Bitcoin treasury company, you can weather that because you've still got operations that can be actually maintaining the P&L as you're actually going through that pathway, as MicroStrategy already proved through the last downturn.
Is your plan just to hold the Bitcoin, or will you be investing? I mean, there are ways to stake it now and that kind of thing.
I think what's really interesting is a year ago, you wouldn't, if you came to Consensus, you wouldn't have heard of that many different opportunities to make money off the Bitcoin. This year, you ran for the first time the Institutional Investor Day. The number of different groups that already have found ways to monetize the Bitcoin itself, because there's so much high demand for that Bitcoin. Right. So now we're looking at 3%, 6%, 10% that's possible. I think by next year that number could double again, because there's more and more use cases for the Bitcoin and how you can be using it as effectively digital gold to then build upon. I think that that's going to continue to grow. So no, we're not just looking at it passively. We're looking at how you actually turn your treasury into an income generator.
So what sort of percentage of your holdings will you put into these other?
We've already committed to over 90%. And we actually, our Bitcoin today has grown so fast that we currently have got 50% more Bitcoin than the value of our company. So when someone buys $1 of share in Genius right now, they're getting $1.50 of Bitcoin, right? So we're growing dramatically in terms of actual Bitcoin itself. And then now as we go forward, how we actually turn that Bitcoin into additional, I'll give you one example. We have a project, which is a project we're working with on a partnership, where they have property developments which are building into an educational campus, where they have Bitcoin loans, where you can custody your Bitcoin, and then you can then provide, through the custody of Bitcoin, a loan that then goes to pay for the property. So imagine you can never have to sell your Bitcoin, but you're still getting 10, 15% return in fiat for your Bitcoin while your Bitcoin continues to grow. I think we're going to see more and more of those use cases for those who are actually holding on to Bitcoin.
It's like a double investment. Yeah.
Absolutely. Yeah. Like imagine that. When at the moment, if you actually want to go and buy a property, first of all, you have to make sure the bank's okay giving you the loan. Secondly, you need to put money in, which then gets sunk into the property. And thirdly, it's not you that owns the property, it's the bank, right? So think of a situation where the bank's not even involved in your ownership of what you're owning, and the Bitcoin's more than enough because of the growth of Bitcoin, that you actually are part of that digital economy, and then you're tapping into the fiat current economy. You know, the first billionaires in America, when America started growing as an economy, were the likes of Carnegie, where he was going back to Europe and actually seeing the arbitrage opportunity of actually going there to get the factories, to get the individuals that were then building up his steel mills in America. We're seeing the same thing happening where we've got those living in the digital economy, which is Bitcoin based, coming back to the fiat world and finding use cases of how they can actually make things more effective for those that are actually in the fiat world without having to actually give up any of their Bitcoin.
It's fascinating, that kind of interplay between the real world and...
Absolutely. And I think another thing really interesting is that if you see the speed of adoption, there's only 21 million Bitcoin. Bitcoin treasuries already account for over 3 million of that. That's 15%. I think by a year's time, we're going to be talking about more like 30%, which means we're going to go from 3 million Bitcoin to over 6 million Bitcoin that's going to be held within Bitcoin treasuries. When we started 3 months ago, there was less than, I think, 50 or 60 Bitcoin companies there with treasuries. There's now more than double that. There's now a total of 160 around the world. And of that 3 million, about less than 1 million is the governments, right? So we're going to see the states, the national governments start to add into this as well. And obviously ETFs are a really big part of this too. So I believe that Bitcoin treasuries, just like ETFs, they're a gateway for institutional investment to be able to come in a very compliant way to be able to have access to this new digital economy. And I think that's very exciting for companies like us. And if you take last year, if someone was just holding Bitcoin, your Bitcoin's only going up by 50, 60%, which is still a lot. But if you had hold MicroStrategy, you're going up by 550%. If you hold MetaPlanet, you're going up by 1,700%. So I think this year, most Bitcoin treasury companies that do the right thing, they should be seeing multiple 100% growth during the year. And when you buy into Bitcoin treasury company, you're not just betting on Bitcoin, you're betting on an entrepreneurial team that you believe is going to find smart ways of being able to leverage on that Bitcoin as well.
Right.
Roger, thanks so much for joining us at the desk. It was a pleasure.
Thank you very much.
That was Genius Group CEO and founder Roger Hamilton. We are going to take a quick break. We'll be right back. Hello and welcome back to CoinDesk Live from Consensus Hong Kong. I'm Jen Sanasi here with my co-host, CoinDesk Managing Editor Ben Schiller. We are now joined at the desk by Consensus partner, Tron founder Justin Sun. Justin, welcome. Thanks for joining us here. You were on stage at Consensus yesterday. Tell us a little bit about what you were talking about, and then just pick up that microphone.
Sure. I think the conference went great, and the vibe is really good. Basically, everyone comes to Hong Kong to attend Consensus, I think, this time. And I really believe Consensus has become like one of the most influential brand in the region. Yeah, I think it's went really well.
Now, I want to talk about one of the big news stories around Tron, one of the big announcements. It is the partnership with World Liberty Financial. Talk to us a little bit about that. How did it come to be?
Yeah, I went to a stage together with Zach yesterday. I think World Liberty Financial is a great project to bridge the CFI with DeFi. This is also the first project, I think, in the whole crypto space. Start to build MicroStrategy, this kind of the on-chain MicroStrategy direction project. So I'm getting into the project like really early. I'm so glad to see they have been built and grow since then.
Now, we know that you're an advisor to the project. You've invested $30 million. Talk to us about how you got involved with the team. Are you close with the Trump family? What's that relationship like?
Yeah, sure, totally. So we know about the team, I think, last year. So they share us their vision about how to bring DeFi to CeFi. At that time, I think the biggest headache for the whole industry is how to bring the user from traditional finance, to the from the traditional world into the blockchains, right? We always talk about on-chain PvP, right? Like using decentralized wallet, but we don't really have people to bring the people from the real world into crypto. So that's why when we first know about the project, we're interested to collaborate with them. This is way before the election, right? And after the election, I think it's also very bullish for the whole industry because the U.S. new administration has a very friendly crypto policies. Like everything changed, dramatically compared to last year. So for me, I'm bullish for the project itself and also for the whole industry.
So you put in $30 million into the project and you became an advisor, and at the same time they took TRX, the Tron token, as well. I mean, how did that come about?
Yes, I think my knowledge about crypto is also a good asset to the project, right? Since the project itself is designed to bridge DeFi and CeFi, I think the team is expert on CeFi and how to build that. And myself, right? I'm a DeFi farmer like all the time. I know how to guarantee a protocol secure without get hacked, and also arrange a good engineering resources with the DeFi world. So I think it's a good combination, and it's resonate quite well.
So, I mean, Zach Volman said yesterday on stage that no investor in the project is getting preferential treatment, and yet you were made an advisor in the project. So isn't that like preferential treatment?
Yeah, the project name is called World Liberty Financials, right? So I think from the design, it is aimed to unite like everybody in the world, right, into the DeFi world. So that's why I think the Asia support is very important. That's also I always, tell them, this project is aiming to bring everybody into the crypto industry. It's made in United States, of course, but we want every users in the world. So as long as complying with the local regulation, so we want to bring everybody. So that's why. For myself, I think I also have this kind of the angle, give them like basically a global point of view of how DeFi, CeFi, can bring together.
What was interesting to you about World Liberty Financial versus other DeFi projects? You're talking about this bridge between DeFi and CeFi. There are other DeFi projects who have been here at Consensus talking about similarities, right? So what was interesting to you about this specifically?
Sure, totally. So first of all, I think World Liberty Financial has a bigger goal, right? So they want to bring like everybody into the crypto world and has a very good example. Because rest of the project they start from like a very small goal, right? And you can learn from the project name, right? So they are called like World Liberty Financial. They have a very good vision and want to bring everyone into crypto world. So that's why when I first invest into the project, advise the project, I have a very high hope for them, right? I believe like one day World Liberty Financial will be a very important protocol, can bring everyone in the world. Just like when I first invented Tron, our target always bring 7 billion people into blockchain, right? Even though it's a very ambitious goal, costs lots of time, energy to achieve this goal, but I think it's worth it.
You talked about that vision that you really believe in. For our audience watching at home who might not know the vision of World Liberty Financial, what is that?
Yeah, so totally. I want to share a little bit about Tron, like what we do. So when we first started Tron, it's aiming to be one of the most like worldwide adopted smart contract platform. And later on, we moved to our stablecoin strategy on partnership with Tether. And later, we have around 290 million people around the world start using the protocol with $30 billion transaction volume every day. And we start to thinking about like bring everybody onto the blockchain because eventually, I think everyone in the world, in some degree, they will start using blockchains. So some of my friends started using Tron. They have no idea about Tron, have no idea about cryptocurrency, have no idea about stablecoin. But they just use Tron addresses to make payment, which I believe is fantastic. Because we actually, at the end of the day, we want people to use blockchain without even knowing it, right? So that's something we are aiming to build, right? So eventually, we want to bring everybody on board. Even some of them might not even knowing it.
And that vision is shared, I guess, with the,
exactly.
with the team at World.
Yeah, we are aiming to collaborate further with World Liberty Financial in terms of product integration and development.
Justin, thank you so much for joining us at the desk.
Thank you.
That was Tron founder Justin Sun. We are going to go to the builder stage now, where the EZA Consensus Hackathon winner is being announced. All right, I know I said we were going to watch the hackathon winner, but that's just not ready yet, so I'm sorry for lying to you. But that will be coming up later. Watch CoinDesk socials to find out who the hackathon winner is. Right now, we are thrilled to welcome AMO CEO David Huang to the desk. He won last year's Consensus Pitch Fest and has since continued to push boundaries with his community-driven AI ecosystem. Welcome.
Hello, thanks for inviting me.
Thank you for being here. So 1 year after you won Consensus's Pitch Fest, talk to us about how the company has grown and what it means for you to be back here and having this interview with us.
Wow, this really brought back my memory to the Austin summer. It's been wild, lots of things are happening actually. So last year, we actually had quite good attention after Consensus, so remaining close touch with some investors, including Patrick from Dispersion, who was the judge and invested in us actually. So really, really amazing guy and truly incredible. So probably kind of maybe the best kind of investor you can imagine of. But of course, not all the things are going smooth. There are actually the industrial changes as well. So we're working on distributed training for foundation models, but we started to sense the shift on the industry and the technical side that towards post-training and actually some early signs of test time scaling back then already. And then we realized actually maybe one single monolith model is not the way towards AGI, but instead it should be interacting models. We call it collaborative intelligence. And then we started to kind of think about the way to go through this path and how to build applications and business model out of it is extremely challenging. But eventually we do find a good way into it and we're super excited and closed the round and then started building. We remain in stealth mode in building until actually last week. So I'm very, very happy to be in this stage and to kind of announce our official debut as well. So it's kind of really special.
So your project AMO is very ambitious. I was describing it on stage as kind of like a Facebook for AI agents. Just explain how that works, because you create your own agent to kind of work as this kind of social actor on the internet on your behalf, right?
Right, yeah, so we truly believe kind of the existing internet is kind of an internet with the static information flows, but the future of internet, and we think will be an internet of intelligence where there are autonomous AI agents, or we can call it AI beings if you want. They're kind of acting on behalf of for themselves or on behalf of humans as well, and exchanging values and creating values, and there will be lots of autonomy within the internet. And then kind of the interaction between the interface between humans and that kind of the internet of intelligence is through what we call personal AI agents. We call it user bodies. They kind of understand about and who they represent for and get to know about their preferences and maybe kind of learn from them and explore the world for them, making investment decisions for them and exchange values for them and even social build relationships for them. And that's kind of the two parts, and the third part is the human's role within this. So I think it's extremely essential to make sure the evolvement of this Internet of Intelligence towards the direction that humanity wants it to be. So it's become critical so that the human alignment is very important, and that actually is kind of the center value for what we are working on as an AMO.
And it's also a corrective against false information on the internet, right? Just explain about that, about the fakers.
Oh yeah. That actually was that is our first product. So it's called it's a crypto information hub, but basically it's called Fakers. And the reason it's calling Fakers is kind of a sarcasm towards that we are tired of fake information from real humans. And then we flip it. We have kind of the real information, real content that trustworthy, that generated by fake humans or autonomous AI agents. And we can, the thing with humans is that they've got so much incentive to fake the information, but with humans, with AI agents, we can craft it in a way that they are really honest with kind of the ground truth, which kind of, for example, the on-chain data that really couldn't lie. And I think this is one example of leveraging multi-agent system for social good. And there are just so much more potentials, and we are going to tackle one vertical to one vertical to one vertical.
And when are you going to be launching this fully?
Sorry?
When are you going to be launching the product?
When will you be launching?
That product has been launched already.
Okay.
We've actually gained 60,000 users in 7
Oh,
days.
wow.
Yeah,
Wow.
it's a bit unexpected.
60,000 in 7 days.
Yeah.
How did you achieve that?
I don't know, to be honest. It took us with a happy surprise, and we are still assessing it. We have some guesses, but kind of formulating it. I think there are a couple of guesses. First of all, it's really new. It's really kind of a shiny idea. And the second thing, it's really a pain point to people. So for the new users coming to crypto space, it's very hard for them to get the credible information. The last one, I would say it's probably the multimodal also helps as well. So all the current information are all in text format, and it's very hard to digest. And we put it as a multimodal. And this is actually a similar direction as the thinking machines, which got announced yesterday by OpenAI's former CTO. And actually, they bear a lot of similarity with us. But we actually started working on this a couple of months ago already. So.
David, thank you so much for joining us at the desk. It was a pleasure to see you here at Consensus again and to reflect on your project, and congratulations for all of the progress you've made.
Thank you very much. I think this is the best stage. Thanks.
That was Ammo CEO David Huang. Zain Zaidi is the co-founder and CEO of Transcript. Transcript is about self-sovereign verification, enabling consumers to verify who they are without having to enable others to verify them. We are about consumers owning who they are and verifying what they've done. That is a quote from you. Talk to us about winning the Pitch Fest and tell us about what you pitched today.
Yeah, super excited to have won the Pitch Fest. There were a lot of great startups, and obviously Consensus is kind of like the Super Bowl in a way of crypto, and yeah, it was really honored to win. And kind of what our mission is that we really believe that consumers should own who they are. It really started, actually, the mission for this project really started from my own academic experience. I had gotten into grad school, and they wanted to verify that my official transcript grades were correct and that I was telling the truth on my application. So I went and sent over my official transcript. Went to my registrar's office and paid like a $30 fee. And my grad school never got it. And it almost cost me my admission spot. So it got me thinking, we as consumers actually don't own and control who we are. We can't verify who we are. And so instead of going to grad school, I started Transcripts, and 4.5 years later, here we are.
That's incredible. Yeah. What did you win?
Yeah, we won $5,000 in tokens. We won an amazing trophy, and we won about 10 coaching sessions. So very, very honored and excited.
So what is your plan to scale the business now?
Yeah, so we're already at about close to about $5 million in annual revenue. And we're hopefully on a path to do about $13 million in revenue this year. Really just kind of doubling down on our go-to-market strategies and also expand to other types of verification credentials. So right now we do employment and income verification. We want to expand into medical records, academic records, and really change the whole paradigm around verifications. No longer are you reliant on third parties to verify who you are. You can verify your data self-sovereignly.
And you sorry.
Oh no, go for it.
And you verify on chain, presumably.
Yes, we do. So what we do is we integrate with an Oracle. So that could be a HR database, that could be a medical record database. Using that as a source of truth, we basically create IPFS documents. We pin those IPFS documents. We record the hash of the IPFS document on chain, and that's how we ensure the immutability of the document.
Talk us through the user experience. If I want to go and verify my employment, how do I do that?
Yeah, super easy. So either you're already an employee at one of the over 300 enterprises that we already support, or if you're just an employee at any other company that we don't support, you'd basically go click integrate. You would input your payroll credentials, so your ADP login, your whatever HRS system that your enterprise is using, and we're able to integrate with that and issue you out an employment or income verification document. Yeah.
What made you want to come and participate in Consensus's Pitch Fest?
Yeah, two things. One, I've been a big fan of Consensus for a while, and I've attended a few of the conferences. Just never had the courage to go out on stage and present in front of so many people. And we thought, what the heck, might as well go up and share what we're doing. We're pretty passionate about what we're doing. And then the second thing is, we've been primarily a North American company. All our enterprise customers are in North America. We figured, Hong Kong is, almost the entry gateway to Asia. What better place than to, share what we're doing here in Hong Kong.
Are there particular categories of certification you want to go into?
Yeah, so employment and income verification, academic records, professional certifications, the whole 9 yards. We see that all as things that can come onto transcripts.
And presumably this is more of a problem maybe in less kind of legally advanced markets, is that true?
Yeah, I mean, absolutely. But it's also a big problem like the United States as well. And what you end up having in the United States, you have these credit bureaus, Equifax, Experian, TransUnion, they basically own and control all of this consumer data. That's kind of monopolistic. That doesn't seem fair. And a lot of people's lives are impacted by the decisions that they make. There's no transparency.
And the mistakes they make.
Exactly. Yeah. And about $150 billion in market cap. So they're making a lot of money off of this. We want to completely disrupt that and ultimately bring an end to an era of credit bureaus.
Is there a privacy element here?
Yeah, of course. So everything's end-to-end encrypted. We aren't able to see your employment or income verifications. We're actually moving to go towards ZK proofs. User privacy is paramount, and we pride ourselves in the only person who should know your verification is yourself and whoever you want to share it with.
What's the major challenge that you're up against?
Yeah, it's changing the status quo, right? For the last hundreds of years, we rely on someone else to verify who we are. Like if I wanted to verify you worked at CoinDesk, I would call your reference on CoinDesk. It's a whole different paradigm to say, no, I can provide this verification proof that I work at CoinDesk. And that's kind of like changing that status quo is something that we've been doing a good job of it, but we got to continue to accelerate it and really change the way we think about verifications as a whole.
I think that's really interesting. Sorry, we have a problem with spoofing at CoinDesk. A lot of us have people out there on Twitter or on LinkedIn who are basically impersonating us. I'm sure, Jen, you've got a number of impersonators.
Yeah.
So, I mean, could there maybe be an integration with something like LinkedIn where I would kind of begin to own my identity on a platform like that?
Precisely, and imitation is the best form of flattery. So, but it's also unfortunately can lead to a lot of fraud. And we think in an age of AI, where AI is kind of making fraud easier and easier, verifications need to be faster and more efficient, and the only way for that to happen is to bring it on chain. So we think we can go into places like X, LinkedIn, and verify social media profiles and say, yes, this person is who they state they are, and they have these credentials that back that up.
Right.
All right, Zane, we got to wrap it there. Thanks so much for joining us at the desk. Congratulations on winning the Pitch Fest. Yes. We look forward to watching you build over the next year, and we hope to have you back to see what kind of progress you've made.
Yes, thank you so much. Take care. Bye-bye.
That was Zane Zaidi. He's the co-founder and CEO of Transcripts, which just won Consensus Hong Kong's Pitch Fest. All right, we are at an end to our 2-day live stream right here from Consensus Hong Kong. Ben, a big thank you to you for hosting at the desk, for co-hosting at the desk. A thank you to our audience for watching our 2-day live stream. A thank you to our crew who's worked tirelessly behind the scenes to bring this to you. If you had FOMO because you weren't here with us in Hong Kong, it's okay because we are coming to Toronto, Canada from May 14th to May 16th. You can get your tickets at consensus2025.coindesk.com. We hope to see you there. We hope you have a great rest of your day. Thank you for watching. Goodbye.